Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Let's take a look at the top headlines this morning. US futures trade lower after equities come off record highs. All benchmarks close in the red. Asian markets open mixed. Japan continues to be the outlier as the Nikkei 225 gains another 40 basis points. The Bitcoin tops $55,000 to reach the highest level in over 2 years. The cryptocurrency is up almost 25% in 2024 alone. PayTm's Vijay Shekhar Sharma steps down from PayTm Payments Bank board. The move comes ahead of the March 15th deadline of the RBI for PPBL to wind down its operations. Adani Group stocks rise in an otherwise weak market. Several Adani stocks hit fresh 52-week highs. Adani Energy Solutions gains over 9%. Now, US stocks were muted at the start of the week, with, of course, is going to be dominated by economic data releases in the US. All benchmarks there closed in the red, and futures are indicating another weak start. Markets are watching for the latest reading on the Fed's favored inflation gauge later in the week, and also the one on the core personal consumption expenditures price index. All of that, of course, is leading to the expectations of when the pivot will come through from the Fed. As things stand, of course, there has been considerable resilience in the economy in the US. Bitcoin, meanwhile, has risen to the highest in more than 2 years, climbing above the $55,000 mark, and that is amid growing optimism that persistent investor demand through exchange-traded funds will drive the price of the largest cryptocurrency back to a record. And it's also a mixed start to trade in the Asia-Pacific region, with 2 of the 3 early rises starting lower. Of course, you have a few more markets that have opened up, and you have China that is open more or less unchanged, and Hang Seng, which is trading completely flat at this juncture. As I said at the start, the Nikkei 225 in Japan is an outlier and has been, in fact, all through this year so far, and in fact last year as well. Right now, a flat start being indicated for the Nifty 50 as well. But let's take a look at the cues heading into trade today. On the F&O side of things, Agam is joining in to give you some perspective on that. Morning, Agam. So we've seen a very narrow range for the benchmark in trade yesterday. Does that continue today?
Well, I reckon so, Alex. Well, we are somewhere in the mid-range of where we have seen the Nifty trade in and out of as far as trades concerned, and it's still around the 22,000 mark. So it does seem like the Nifty is consolidating at the moment, but we're seeing a tremendous amount of unwinding. Of course, let's not forget that we are in the final week of the February expiry, so naturally we will see a lot more unwinding as far as the open interest is concerned. Moving on to the Bank Nifty, I reckon the picture in terms of unwinding won't be any different, though the index has come off by 0.5%, and today once again a lot of the banking constituents will be in focus, considering it is the Fin Nifty expiry today. But speaking of the options market, well, as far as the Nifty is concerned, it did come off to a certain extent, which means that we've seen a little bit more pressure around 22,100, 22,200 in terms of call writing coming through. And as far as your overall open interest picture is concerned in terms of distribution, a lot of writing around 22,300 to through 22,500. That's where you're expecting a little bit more resistance on the higher end as far as the Nifty is concerned. And on the lower end, we continue to see max OI. We're at the 22,000 put, so keep an eye on that one as well. Moving on, as far as the Fin Nifty is concerned, once again, since the lever has moved up, 21,000 is where we're going to focus in today's day of trade in terms of the Fin Nifty expiry. Remember that because the options are so contracted, sellers usually don't always make a ton amount, but considering there has been so much volatility and a lot of the stops get hit. But let's talk about, besides that, of course, we're keeping an eye on several other counters from the banking space. But on the whole, Alex, we're expecting consolidation going in today as well. All right.
Thanks so much for getting us those details. One stock that is going to be in focus today and has been, in fact, in the recent times is PayTm. And that's the latest update, of course, is that PayTm founder and Chief Executive Officer Vijay Shekhar Sharma has resigned from the board of PayTm Payments Bank. But my colleague Vishwanath is picking up some additional information from sources. Vishy, what are you picking up?
Good morning, Alex. So, as you said, Vijay Sharma has stepped down from the PayTm Payments Bank board as its non-executive chairman. Alongside that, Bhavesh Gupta, who's a nominee director on the bank's board, has also stepped down. Bhavesh Gupta is, of course, COO of PayTm. Now, after these two exits, essentially what the board is moving toward is an independent/executive directors-led board at PayTm, and their intention is to, of course, come out of where the RBI has placed certain restrictions on the business of PayTm Payments Bank, essentially no banking services after the 15th of March. Now, what my sources are telling me is that this new board is specifically designed to take care of the compliance problems. Now, a lot of them are retired IAS officers. There's a former banker on that board as well. Now, what this board will sort of implement is a zero tolerance policy towards non-compliance and try and address any of the problems that may be coming up in the minds of the RBI officers. What this board will also intend to do is to ensure that PayTm Payments Bank sort of returns to its former glory. That's what the sources are telling me. Of course, this is going to be easier said than done because the challenge in front of them is significant. Over the last 6 odd years, the RBI has been bringing up issues at PayTm Payments Bank, specifically targeting compliance issues at the bank. This is primarily because the KYC processes that have been implemented at PayTm Payments Bank are not strong enough. There are anti-money laundering issues as well at the bank. Of course, there's co-mingling of systems between PayTm and PayTm Payments Bank. All of these are issues that the RBI has been raising for the last 6 odd years, specifically since March 2022, and the board has not been able to fix that. So now, with new members coming in, let's see how that works out. As of now, there is a complete decoupling. That's what they're claiming between PayTm Payments Bank and PayTm. Having said that, the capital component is still there in PayTm Payments Bank. Vijay Sharma owns about 51% and PayTm owns 49%. So that is not going away anywhere, even if members from the board have stepped down. Let's see how that helps PayTm Payments Bank come out of these problems. But the compliance issues are still persistent and the time is very, very short, Alex.
Absolutely. Thanks so much, Vishy, for getting us those details. And of course, the entire regulatory action against PayTm was spoken about by the industry at large. And in fact, there has been discourse between the finance ministry as well as the fintech industry. In fact, there was a meeting that took place just yesterday. And at that meeting, a few things were discussed. Among them, of course, is that a regular meeting between the central bank, the Reserve Bank of India, as well as the fintech industry has been mooted. And that is something that the finance minister has encouraged. He said that the RBI as well as the other regulators should in fact meet with startups and fintech entities once a month to get them to air their grievances and to ensure that everybody is on board with what both the government as well as the regulator and the industry is trying to achieve. The other aspects, of course, that were discussed at that meeting yesterday were that fintechs have raised cybersecurity concerns and sought proactive government intervention in those situations. And the DFS, the Department of Financial Services, has also been instructed to hold meetings with enforcement agencies and fintechs together within a month. A few other key takeaways as well. The RBI and the DPIT, as well as the MOF, have decided to look into a change in ownership pattern in listed fintech companies. And besides that, there's also suggestions made to streamline the KYC process for a lot of these fintech companies. Now, moving on, let's talk about Vodafone Idea. We spoke about this a short while back, in fact, on the 22nd of February, I believe. But the company plans to consider fundraising proposal later today, and that's through multiple instruments. To give you a perspective as to what to expect heading into the day, of course, we've got Smriti joining in to give you some perspective. Smriti, what are the numbers we're looking at here?
Good morning, Alex. You rightly mentioned that the board will consider a fundraise today. Now, just to give you a perspective of how things stand. Now, the chairperson, Kumar Mangalam Birla, has said that they will continue to stay with the company and there's no plan to exit the company, even though it's in a very struggling position. Now, the promoter group had also promised to infuse 2,000 crore if needed. Just to clarify, the promoter group includes Aditya Birla particular group along with Vodafone PLC. But it is highly unlikely that Vodafone PLC will put any money into this because their investments for Vodafone Idea India has been zero in their books of accounts. So it's unlikely that they would put money into the company as of today. Now, just to clarify what the debt position of the company is as things stand and how much money do they immediately need to survive. Now, the total gross debt is over 2.14 lakh crores as of 31st December. 90% of this debt is owed to the government. So around 1.8 lakh crore is owed to the government, but this is in the longer term. Now, if you look at the shorter term, immediate payment is around 5,400 crore. That will be due within a year. So they have to pay 5,400 within a year. Out of this, 1,600 are optionally convertible debentures to American Tower Corporation. Now, this will not, even if they fail to pay this amount, it can be converted into equity. So that's out of the question. Now, rest of it, the bank debt is about 3,200 crore, while the rest of it is the spectrum payment at around 633 crores. Now, 3,000 out of this 3,200 crore, 2,000 crore was taken by the bank for short-term funding gap, which the company plans to pay within this year, FY24. So in the next 1 month or so. Now, to pay for this this balance amount, the cash balance only stands at about 500 crore. So there is an immediate need for about 1,500 crore. And the fundraising today will probably ensure that they get this money so that this bank loan is immediately paid. Now, the promoter, if promoter decides to infuse capital through a rights issue, that will be maximum of 2,000 crore, as I mentioned, which is enough to pay these bank dues. Now, just to give you a little bit more perspective, if the fundraise happens, it's a positive for Indus Towers as well. Citi has said before, and that they have raised the target price for Indus Towers as well from 265 to 320 crore. And it also says that Indus may be able to recover half of the outstanding dues, that is 5,700 crore, within 2 years. So positive for Indus as well, and which is why we may see Indus Towers reacting in today's trade as well.
Absolutely. Smriti, you've also picked up fundraising plans from another company, that's Wockhardt, and the company is set to raise as much as 400 crore rupees through a QIP, and that's what sources have told you. What can you tell us about what more there is with regard to this fundraising?
Well, yes, Wockhardt has been looking to raise 400 crore, and this is on a priority basis. However, the things are still in works, and it may take a couple of days, a week or so, for this to actually happen. For the price, the sources have told us that the price will be based on a 10-day average. Now, as things currently stand, the 10-day average comes out to be around 561 rupees per share. So that's pretty much where the the price will be for the QIP within the range of 550 to 560, 65 rupees. Now, the shareholders last year had approved a proposal to raise 1,600 crore, up to 1,600 crore via QIP. So 400 crore will probably be raised in the next couple of days. Now, last year the shareholders had rejected a proposal to raise 1,600 crore from Korakiwala Holdings and Investment. This is a promoter group NBFC, and the shareholders rejected the proposal. Now, just to give you a little perspective how important this QIP is for the company, the cash balance at the end of December was only 84 crore, while the debt was over 930 crore. So they are in immediate need for this fundraise as well.
Absolutely. Thanks so much for putting both of those stories in perspective for us, Smriti. Those are stocks that you should ideally watch out for in trade today as well. Let's slip into a very quick break. On the other side, we've got a lot of stock-specific information to talk to you about, so do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your
Welcome back. You're watching All You Need to Know. It's time to look at the stocks that you need to watch out for in trade today. And it's quite the disparate list, not really anything that ties all of them together. We've got Anushi joining in at the start to give you a few stocks that are in focus. Anushi, what's on your list today?
Right, Alex. So right at the top, we have CMS Info Systems. Over here, the company's key promoter, Side Investment Holdings, is offering to sell up to 26.67% of the stake. So this would be taking place via a large deal, which would be in focus in the early part of session, which would be about worth 1,500 crores. And again, the floor price for the same is set at rupees 360 per share, again representing about 9.3% discount to the current last market price over here. If you have to look at the company's overall Side Investment Holdings, that stands at about 26.67%, so almost an entire stake sale over here. Next on the list is Power Mech Projects, wherein the company has received an order worth 396 crores from Southeast Central Railways. Now this is for the civil and construction related works, which is to be expected to be completed within 30 months of timeline. Over here, just let's look at the company's order inflows and order backlog. So about 23,000 crore in FY23, which is almost doubled down to 57,000 crore in February 24 itself, while the order inflows also is supported by 8,400 crores, double down, more than like triple to 37,000 crore. Next on the list is Grow and Wheel. This is ahead of its bonus issue that is taking place in the ratio of about 1:1. With this, the company's pre-issue share capital of rupees 22.67 will now be at a post-issue share capital of about 44.34 crore. And lastly on the list is some of the key stocks that are going to be in focus ahead of their fundraising plans, which includes Indostar Capital, Pesalo Digital, and Texmeco Railways. So these are the key stocks that should be in focus for today.
All right, Anushi, thanks so much for getting us those details. Few more stocks that are in the news, and Mahima is joining in to tell you about them. Mahima, a couple of names from the banking space, one hospitality name. What do you have for us today?
Right, Alex. So as you rightly mentioned, a couple of names from banking space and one from hospitality. I'll start with the hospitality sector. The stock name is Lemon Tree Hotels, where the company has announced signing 2 new projects. The first one is Sankwasgarh near Jaipur, and the second one is Ski Lights by Lemon Tree in Vijayawada. The first one has around 51 well-appointed rooms, and the second one has 44 well-appointed rooms. Well, both the properties are expected to be completed and operative by FY26. And Carnation Hotels, which is the hotel management arm of Lemon Trees, will be operating the hotel. Now next we have Union Bank, where last week we had come to know that it is raising around 3,000 crores. Now it has raised 3,000 crores and the fund is raised at an issue price of 135.65 per piece, and the investors include Morgan Stanley, Societe Generale, HDFC Life, BNP Paribas, SBI Life and Sundaram Mutual Fund. Then we have Canara Bank. Now this stock will be in focus because it is approved a stock split ratio of 1:5. The stock split will be, the face value of the stock will go down to 2 rupees from 10 rupees, and for every 5 equity shares of 2 rupees. So basically for every 5, since the stock split is 1:5, 5 equity shares for 2 rupees will be issued. Now the rationale for this is that it will improve the liquidity of the bank's shares. It will make the share affordable for the retail investors per se, and it will broaden the retail investor base. Now the time for completion for this is within the next 2 to 3 months from the date of board meeting. And lastly, we have Hind Rectifiers, where the company has received an order worth rupees 200 crores from the Indian Railways. Now this is for the supply order for IRCTC. Now this is important because a company like Hind Rectifiers had an overall revenue of approximately 360 crores in FY23. So getting an order of 200 crores is a big win for a small company like Hind Rectifiers. So all of these will be in focus in trade today.
All right, thanks so much, Mahima, for getting us those details. And that brings us to the end of this particular edition of All You Need to Know. But before we end, take a look at this conversation that my colleague had with Dilip Shangvi of Sun Pharmaceuticals. He's talking about the future of the pharmaceutical industry in India.
I think it's not possible to become top 3 in the world in next 10 years. So we need to be realistic and practical. And I think during one of the session, they said that we send product out of India in trucks and bring money in covers.
Envelopes. Yeah.
And the other people send products in envelopes. So unless and until we are able to get into innovative products, make products where, because of the value and the benefit your product creates for patient, it justifies a much higher value. It's going to take time and challenge for Indian companies to become successful in becoming large, because we have large volumes, but relatively small value. But where I see the positiveness is that many Indian companies are working on innovative products. I think there are at least 8 or 10 different products developed in India in different stages of human studies globally. So as these products come to market, and if they are successful, we will create a positive cascade of excitement. Our own experience is that when Pfizer develops a product, we think that only Pfizer can develop. But if Sun Pharma or Torrent will develop a product which then becomes globally successful, we will think if they can do it, we can also do it. So I think we need to create this positive cycle of success. That will encourage. And of course, environment, regulatory processes, all of these are equally important. But we have great scientists, we have understanding of drug discovery. What I think is required is to take risk and to aspire to be successful in that direction.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Good morning. Hello and welcome to India Market Open. It was a little bit of a rough day of trade yesterday, but this morning there could be some relief and low-level buying that the markets may see. Good morning, guys. We've got 3 days to expiry, and it didn't end well yesterday.
Did you talk about a rough morning? Ask Mr. Bitcoin, and Mr. Bitcoin will tell you, hey!
Rough, I said rough yesterday.
Remember, Bitcoin was supposed to be the hedge to everything else. And at least today, maybe it's
proving to be one?
I mean, every, I guess, asset class has its day. The proverb is a little different,
I
but today
think
it's Bitcoin
it was a great sales pitch when they launched it, and then everything went topsy-turvy,
Chalo,
right?
kabhi na kabhi sales pitch true ho jata hai.
every bet eventually pays out.
But this one certainly has at 55,000, highest level since December 21.
years,
it's quite stunning, really.
But Bitcoin is one part of it. The rest is, I would say, exactly what we saw at close yesterday as well, Neeraj, is just consolidation, caution, all around. And that's what global cues are looking like as well. I mean, I'll go through the fund flows. They're dismal. It's come down to a trickle, both from DIIs and FIIs as well. But let's start with what's happened on Wall Street. And a day of consolidation after hitting record highs, etc. All eyes on Thursday, where that PCE data comes in, and that will become important. The 10-year has also slid a bit because there is a set of data overnight which is indicating maybe a softness in the economy. That is new home sales in January. So for the US, that came up 1.5% to about 661,000, but much lower than the estimate. And that then veers towards the idea of, all right, maybe a weaker economy, maybe faster rate cuts. But there is so much that needs to be looked forward to, including Fed speak, some Fed commentary will come in, and plus the big PCE data. So nothing much happening there. Can't say that for either Bitcoin or for Asia. I want to pull up Asia and I want to pull up the Nikkei. Once again, trading up at fresh all-time highs. The rest of Asia is kind of mixed. China has come off its 9-day gains. But the story is all about Japan, and what a story it is. Great corporate results, new corporate governance rules, the fact that a weaker yen has improved profitability for Japanese companies with overseas businesses. All of that has helped, great valuations. So no stopping Nikkei, and like Neeraj said, no stopping Bitcoin. $53,000, highest point in 2 years, and has seen a gain of 138% in the last 12 months. So whoever said that Bitcoin is done, but I mean, in India, of course, regulation and restrictions make it not the kind of hot asset class it used to be, but Bitcoin definitely one. Quick word on the fund flows, because I mentioned them. FPI sold about 281 crores yesterday. DIIs bought 5.3 crores. So like I said, fund flows have come down to a trickle. Everyone's very cautious and just waiting it out for the next big trigger, isn't it?
Yeah, and frankly, if you look at what the trade pattern is as well, and that's the opening thing on trade setup, I don't usually look at charts, and I'm still not, but just that of the notes that I was reading, one of the notes mentioned this, that if you look at the daily charts, the consecutive daily body candles are very small body candles. So the movement is happening in a very restricted fashion on the index as well, and which probably points towards subdued trading almost on every given day. So that's part one, really. I mean, and you don't need anybody else to tell you. We just look at the charts on a daily basis that will show you how we've been very, very narrow range on a daily basis. So the daily activity is not really very high, save for some specific stocks that happen. Now, I was trying to look at options activity, not too conclusive on the Nifty at least, but on the bank Nifty, there's a clear demarcation. Puts and calls at 46,500 and 47,000. So very likely that that's the band in which traders are at least expecting the bank Nifty to move, and considering the expiry is just 3 days away, very likely that you would probably obey this. Unlikely that there will be a major swing either direction. Any which as we know, private banks are not quite living it up. In yesterday's session as well, at every attempt to pull back, private banks gave up, and therefore the bank Nifty continued to remain under pressure. Though the Nifty IT was the bigger one which corrected. But in some sense, Nifty IT crack was on expected lines. Viewers remember on trade setup yesterday also we spoke about how IT had seen some significant short build-up ahead of the expiry. So it was a bit of a no-brainer that IT would have a bit of a correction, and it did, was amongst the top indices to lose out on yesterday's session. But what is disconcerting is the way metals pull back. China as an index had a very strong week, the last one. There's a lot of talk of various measures being done to open up. But yesterday, base metal prices, particularly iron ore, came off quite rapidly, as a result of which Nifty metal came off about 1%, heavyweights corrected about 1%, 1.5%, so or 2% in some cases. So that metal pullback, not a crack, but a pullback was a bit disconcerting for bulls, to be honest. Let's see which way it shapes up, because it was believed that metals would have a good run, but yesterday's pullback certainly a bit disconcerting from a bull's perspective. Let's see how the rest of the week shapes up.
Yeah, I think that has been a concern. And also with China, while the liquidity push has come through, data indicates that it may not be enough. So the stimulus may fall short of what the expectations are. The property market there is not seeing a recovery. Manufacturing has continued to decline for the last 7 months. So all those factors together do not garner well for metals. You've also got growth slowing down in Europe and the US. So it's not just China, but other developed markets as well seem to be putting some, or rather keeping metals under pressure. And that's expected. For 2024, I think the expectation is that metals prices will remain flat while there is that push to clean energy and building infrastructure around clean energy in countries like India and China. Generally speaking, metals are not expected to see a sharp recovery in this year too. So it's been a rough 2023 and it may continue to remain subdued for metals this year as well. Well, let's now take a quick check of, I don't think we've had a look at implied Nifty this morning. So if you can quickly have a look at that and take you through what we're expecting. It's going to be another somber morning. No gains expected in early minutes of trade. This is despite what's happening across the world. Remember, we've talked about how it's been consolidation. Markets are looking a little under. But for Feb so far, it's actually been pretty good. So you've had 3 good weeks, 2 out of 3 good weeks in Feb. This week, too, will be important to see where markets see an end to the Feb series. Lots of stocks. The top on the list is PayTm. CEO Vijay Shankar Sharma has stepped down from the PayTm board of PPBL. Remember, PPBL has appointed 2 retired IAS officers and an ex-chairman of a PSB as independent directors. They will also, we believe, commence the process of appointment of a chairman. PayTm owns 49% of PPBL, and the rest of the 51% still continues to be held by Vijay Shankar Sharma. Now, whether this has any implications on the company, on the stock, is what we will discuss on Editor's Cut. But let's not forget, the majority stakeholder still remains to be Vijay Shankar Sharma, and that is what you want to keep in mind. The stock is up 30% from its Feb 15th lows. It's gained, in fact, hit upper circuit 5 out of the last 6 trading days. So it's been looking good, at least on the charts in terms of a recovery. But whether or not this development is going to have any material impact is something we will be discussing through the show. Well, moving on from there, it's Vodafone Idea as well. That's in focus. We talked about this on the 22nd of Feb when Vodafone Idea, notified the exchanges of a board meeting for the 27th of Feb, and that is today. They are looking to consider a proposal to raise funds through various instruments. The promoters have time and again, in fact, KM Birla has indicated they have no plans to exit the struggling telecom business. The promoter group has promised to infuse 2,000 crores if needed. They will also be, this infusion really will be part of the fundraising plan that is going to be discussed later on today at the board meet. The gross debt on the books of Vodafone Idea is 2.14 lakh crores as of 31st December 2023, and 90%, the bigger chunk of that debt is owed to the government. The stock was under pressure yesterday. We'd like to see what those fundraising plans are and what the roadmap ahead is in terms of instruments that will be used to raise those funds. Well, the other important one is CMS Infosystems. Baring's one-down arm, which is a promoter now, Sign Investment, holds 26.67% in CMS Infosystem. They are looking at a stake sale to actually offload that complete stake in trade. This will be done through a block deal, which will be worth 1,503 crores, and the floor price is set at a pretty big discount, 9.3% to yesterday's close. So the stock closed at 397. The bulk deal will take place at a almost 9.3% price discount, which is about 360 rupees a piece. Be interesting to see how this goes. We will try and connect with Rajiv Kaul as well, and it'd be nice to see who the buyers of this stake sale of Bearings or Sign Investments will be. So those are the 3 on my list this morning, guys.
Yeah, and of course, PayTm, the interesting one, and we'll talk more about what does this move actually mean for a stock which has gone up nearly 20% in the last 5 trading sessions. Phenomenal. But Tanla is a stock that I have on my radar today, Tanla Platforms, and for a couple of reasons. First of all, their key product, TrueBlock, which they have now said is going to be TrueBlock.ai. I find that an interesting product. It's used to block spam calls. So just 3 cheers for that. everyone suffers from it. But they are now, introducing a generative AI version, which will help elevate the True Block experience. Now, I'm always on the lookout for what Indian companies are doing in terms of AI adaptation. Everyone talks about it, but what are the real use case scenarios? And True Block might be an interesting one. I don't know if it'll have a massive impact on the stock anyway, but a good strategic move for the company, no doubt. So the company says it aims to make digital commerce easier for Indian small and medium businesses with WhatsApp-based solutions. And if there's any clear use case for AI right now, this is exactly where it is. So one to watch out for. Lemon Tree Hotels, another one. The stock has done fairly well, but in that whole hospitality boom, maybe relatively, it didn't run up as much. So there is an announcement now. They've signed 2 new properties, one called Sankhwa's Gad and Key Lights in Vijayawada. Both will open in FY26. About 90 odd rooms between the 2 properties. And Carnation Hotels Management is going to be operating the hotel. So their management arm will be operating the hotel, which again is another sort of strategy that Lemon Tree has been really quite bullish on the hotel management business. Indus Towers, just the other one. There's a Citi note on it this morning. They've retained a buy and a positive catalyst watch on Indus Towers. Hikes the target price to 320, raises target on the EV and the EBITDA as well, on improving visibility of cash flow. The key monitorable, of course, since Samina, you also spoke about Vodafone, is the Vodafone fundraise that can drive a further upside. Now, Vodafone, I just wanted to add, was under pressure yesterday after a report that promoters may have to end up putting in money after all, after hunting for other white knights and rescuers to come in. So that's an interesting story to watch out for today and see what happens there.
Yeah, so much for Vodafone's sake and so much for Indus and Bharti's sake as well. More so for Indus on the upside, but even for Bharti on the downside, or maybe not downside, but maybe perceived downside, if you will, or just sentimental negative, that it's no longer a 2.5 player race, but maybe a 3-player race.
I don't know if... I don't know what can come out of that fundraise
which is, I said, sentimentally.
Save Vodafone today.
No, I mean, if it lasts, and the government has shown its intent that it wants the market to be a 3-player market in some sense, right? Which is why the government putting in the money to. Sentimentally, could it impact Bharti? Is the
and also, I think in terms of earnings, they've not actually done too badly for a change. Vodafone Idea didn't manage to post a decent set of numbers. It was an exceptional gain. No doubt, but nevertheless, worth a mention. The net loss now stands at what, 7,990 crores as compared to what we'd seen last year. So
but on the 5G scale, can they compete? I mean, anybody's guess. But sentimentally negative for Bharti and definitely positive for Indus. I think that Citi note that Tamanna is talking about also talks about the kind of recoveries that they can make over the next 2 years, much higher than the previous past. So that could be interesting for Indus in particular. Now, just 2-3 stocks on my radar. One, Sabira spoke about a sale from CMS Info. Andhra Cements could be the other one in focus. Sagar Cement is going to sell 5% stake via an OFS. Sale today and tomorrow at a floor price of about 90 rupees per share. So that's a steep discount as well to the current market price. So watch out for Andhra. That could have a bit of a corrective move. So let's wait and watch. Clutch of brokerage notes. From amongst them, I mean, there is a Goldman on Havells, which is a buy, raised to a buy, a target price of 1660. Or Jefferies has come out with a note on utilities with Dixon Tech and Whirlpool being cut to underperform. So watch out for those as well. And I'm sure between Samina and Tamanna, somebody will talk about this UBS note on TCS. But I'm highlighting the Motilal Oswal note on Cello World. They have initiated coverage with a buy rating, a target price of 1,100 rupees per share. So that's about a 36% uptick to the current market price. Motilal says that the stock is currently trading at about 35 times FY26 PE with a ROE, ROC of 32 and 39%, which is very impressive if they indeed do that by FY26. I mean, 39% ROC stuff that very few companies in the country do. Except for FMCG names, which consistently do that, and way above. I mean, the ROCs for FMCGs are way above. They estimate Cello to grow at a faster than an industry clip, and they expect the company to post a revenue, EBITDA, and a PAT CAGR of 18, 23, and 25%. 25% CAGR over 3 years is decent, so which is why Motilal is happy to give it 35 times PE multiple and a target price of 1,100. So watch out for Cello World in the session today. It's an initiating coverage note. may have a bit of a reaction. So that's to be watched out for. I was a bit surprised with the UBS note on TCS though.
Leader is back.
Yeah, it's very interesting what they're saying.
Why are you surprised though? I mean, if there is a recovery and Q3 showed signs of it, TCS, I mean, in the sense, not as bad as expected.
No, I think it was a case of lower expectations.
Yeah. But don't you think if there is a turn in mood, TCS would be at the forefront of it?
Could be. I mean, I'm just saying most companies have said that we're not able to pencil in when the discretionary demand comes back. So the timing.
Non-committal, right? Yeah. They've been non-committal. But just to take you through that UBS note on TCS, they've said that TCS is likely to lead its peers in revenue growth along with improvement in margins in FY25. They said that the market is not pricing this and there's a divided consensus on the stock as well, which continues to trade at its lower end. They've upgraded TCS to a buy with the price target of 4,700 rupees. Now, of course, the timelines of this is anybody's guess, but if a recovery is to come, remember it is election year in the US as well, so there could be spending may continue to remain tight. Rate cuts haven't happened or not going to happen in March. So a couple of negative news flows for the IT sector, but if there is a recovery, UBS believes TCS will be the one leading the way, guys.
Well, so those are a few interesting ones. Remember, there are some others as well. There is a Motilal and JK Lakshmi, etc. So many stocks on the brokerage radar to watch out for. But arguably, the big story of the day is something that we will talk about on Editor's Cut. And Alex, no prizes for guessing what we are going to be talking on Editor's Cut today.
No doubt, Neeraj, but I still have to spell it out for the viewers. It's PayTm. It's PayTm. It has to be PayTm. That is the big headline. And you have Vijay Shekhar Sharma stepping down from the board of PayTm Payments Bank. And there is a lot more beyond that headline, though. And we're discussing some of that today because Vishy here has picked up some additional information from sources about what's going to happen with the newly reconstituted board of PayTm Payments Bank, where it's heading, and also what happens to VSS as well as PayTm. Tamanna is going to give you some perspective on that as well. But let's start with the news first and what your sources are telling you, just to lay the context. VSS steps down. There's also another big change. COO has also stepped down from the board.
So 3 weeks since the RBI proposed restrictions on PayTm Payments Bank, we've had
okay.
Sharma, the
I believe that, sorry Vishy, that we're going to have to fix a bit of an issue with your mic. But I think what Vishy was saying is, or trying to lay the context, is that there has been a stepping down of Vijay Shekhar Sharma just about 3 weeks after the RBI regulations came in. But Tamanna, let's talk about some of the context here, right? We've had a stepping down by Vijay Shekhar Sharma. The final bell seems to be tolling for PayTm Payments Bank.
Yeah.
At least that's the sense we're getting right now.
So I had an interesting conversation this morning to people close to the management and 197 to understand what exactly is this. Is this an olive branch that Vijay Shekhar Sharma is extending to the RBI to say that, hey, I'm willing to let go, please clean it up, or what's the messaging? So here's the sense that I'm picking up, and what I'm getting out of this is that this is sort of the final steps to winding down PayTm Payments Bank, because there is no future left. This bank is finished, and when the company essentially wants to wind it down, the guy who owns, a majority share on it, might as well step away and let the professionals do it. So they're former IS officers, they're former PSB chiefs, and they will now end up winding down all of the operations of PayTm Payments Bank. That's number one. If there is kind of a messaging that is going to the Reserve Bank of India saying that, I am moving away if I seem to be the problem, I don't think it's going to soften the regulator's stance at all. Having said that, also keep in mind that even while the RBI has, in the view of some, been quote-unquote harsh in its action on PayTm Payments Bank, they have not said a word about Vijay Shekhar Sharma or the guys that run 197 Communications, which is why you've probably seen a 20% up move in the last 5 sessions, a sharp recovery. That leaves enough room for Vijay Shekhar Sharma and co. to sort of contain the PayTm Payments Bank mess, distance themselves. And my sense is that he's going to go back to the drawing board because he still has the PayTm brand. He has a decent market share, and he has shown the propensity to strategize and change track. So with that app, which people don't seem to be fleeing in large droves right now, what do you do? There is so much that you can add on. He already wanted to be a one app for everything kind of a play. It didn't work out, but there is enough scope for him to go back to the drawing board. What I also learned is that what we saw in the press release yesterday and the exchange filing is a decision which was taken about 10 to 12 days ago, at least the day when the RBI FAQs came out and made it clear that there's no hope. That's the day the decision was made that Vijay Shekhar Sharma will step down. What we saw last evening was just the logical conclusion of it.
So it kind of, it rings the same sort of tone that Vishy is picking up from his sources. So let's lay that out as well. Vishy, you were laying the context and you were saying 3 weeks after.
Yeah, so 3 weeks since the Reserve Bank of India has introduced those business restrictions on PayTm Payments Bank, you've had the chairman of the bank step down. For all intents and purposes, Vijay Shekhar Sharma was the man at PayTm Payments Bank, owns 51% stake, more or less decision making was his domain. And of course, Bhavesh Gupta, the COO of PayTm, who was also on the PayTm Payments Bank board, has now stepped down. He was a nominee director. See, what the sources are telling us about what this board intends to do is sort of bring back this bank to glory, and that kind of a little bit of sloganeering. But at the end of the day, as Tamanna was pointing out, there's really no future to this bank.
There's nothing left.
There's nothing left in the bank to fix.
And you're talking about 17 days to
17
the deadline.
days. 15th of March, all banking operations will stop existing at PayTm Payments Bank. So really there's nothing to save. This is more of an effort to distance the promoter away from a dying entity. It's also sort of a way to put the problems on away, because if you notice when you lose the PayTm app, right, the wallet earlier called PayTm wallet is now being referred to as a PayTm Payments Bank wallet. They've removed they're building that distance with the entity and trying to say that, okay, we are now figuring out other options. We're trying to tie up with other banks. They'll give us a wallet, they'll give us lending, they'll give us payment services, and we'll try and build a business out of that.
But then what also happens, and we've looked at the stock price, it's now market capitalization of what, 27,000 crore. It has recovered somewhat, as Tamanna has pointed out, 20% in about a week's time. But the question still remains about a significant holding. PayTm holds 49% in PayTm Payments Bank, and effectively if that business winds down completely, they're going to have to write that off the books.
They will have to write that off. And let's not forget the reputational hit for getting a banking license and then 6-7 years later losing it. Is not exactly the kind of look that an entity like PayTm wants. Having said that, they're trying to build a business with other banks. I do not know what exactly that business is going to look like, because with an in-house bank, you could do a lot of things. You could play around with the data, you could try and cross-sell products. Not entirely sure if some other banks come in, what exactly that business is going to look like.
Which is why I'm saying you go back to the drawing board. I mean, I don't know. I don't want to make a wild guess right now, but everyone is trying to find some AI angle to their business. Knowing Vijay Shekhar Sharma's style, don't be surprised he comes up with something new.
I'm very curious. If we're talking about PayTm, we're going back to what it was at the onset, right? Pretty much. And a platform that people use with a wallet, right? If I'm not mistaken.
That's right.
So, but you'll have limits in terms of how much you can transact. And the question is, how much can you really cross-sell there?
I mean, technically speaking, they have a bunch of services like, for example, stockbroking or insurance or mutual funds, which they can still cross-sell if they have the data. But if they're relying on someone else's license to provide these services, that data flow is not so smooth.
So, okay, so there you go. We'll have to see if the business gets impacted beyond what we're seeing in terms of the impact of PayTm Payments Bank. But that's more or less a perspective on PayTm and the latest development there. We have to slip into a very quick break. On the other side, we've got the latest cues on the F&O space. But we will talk about the implications for the bank as well, or rather for PayTm as well. We've got Bernstein joining in just a bit. Do stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplify.
Welcome back. You're watching India Market Open. There are going to be a whole bunch of stocks that will be keeping us busy in today's trade. One such one is going to be Vodafone Idea. Remember, they had reported this to the exchanges on the 22nd of Feb about a meeting that is lined up today, which is the 27th of Feb, to consider a fundraising proposal. Well, we have Smriti standing by with more on that. Smriti, you want to share some more details about what we can expect from today's fundraising meet?
Yes, good morning, Samina. So essentially, there's a fundraise and it can happen through any of the modes. Now, the chairperson, KM Birla, has reiterated that he's not going to exit the company. The Aditya Birla Group or the promoter group will not exit the company. So it's very likely that the promoter group, now there are two promoter group, Vodafone PLC and Aditya Birla. Vodafone PLC has already reduced the value of its investment in its books in the UK to zero. So it's unlikely they're going to put money. So the second promoter left is Aditya Birla Group that had promised before that they might infuse 2,000 crores into the company if needed. Now, time and again, the Vodafone Idea has said that this 2,000 crore rupees, if the promoter decides to put it in the company, it will be as part of the equity fundraise. So that can happen through a rights issue today. Now, just to give you context of why this fundraise is important, the debt position of the company is it owes a 2.1 lakh crore of debt. That's the overall gross debt. 90% of this debt, so 1.8 lakh crore, is owed to the government. But let's look at it from the dues in FY25 and FY26. So if you look at FY25, the company has 5,400 crore rupees due in the next financial year. This includes 1,600 crores of OCDs, that's optionally convertible debentures, to American Tower Corp. So that may be converted into equity if need be. Other than that, there's bank dues of 3,200 crore and spectrum dues, which is only the principal payment at 500 crore. Just to give you a little bit of the context, the dues in FY25 are 5,400 crore, while the cash on the books of the company as of December is only 500 crore. So there's a massive need for the company to go for a fundraise. If you go for FY26, the dues in FY26, now there's a moratorium that will be lifted from for the companies to pay its AGR dues. So the company will be liable to pay 30,000 crore in FY26, out of which 28,000 crore will be due to the government and the balance will be the bank debt. So minimal bank debt there in FY26, but this fundraise will ensure the survival of Vodafone Idea. And if the fundraise actually happens positively, it's going to have an impact on Indus as well. So we're going to see Indus stars move positively if the fundraise happens as well.
Okay. Smriti, thanks for putting that into perspective. And clearly a big day for Vodafone Idea, but also for Indus Tower, as well as for Bharti Airtel, as we discussed. And would be interesting to see the modalities of the fundraise as well, and not just the actual amount as it shapes up. Reckon will come in post-market hours today, so promises to be a long day for telecom watchers. Keep that in mind. But could it be a long day for people who are trading in derivatives, considering that the index seems to be fairly flat? Agam, you can almost shut your eyes and say that, hey, the market will move in a 50-point range. Good morning.
Yeah, good morning, Neeraj. But you know what, the expiries are turning out to be very, very hard for a lot of traders. And I reckon that it won't be any different today either, especially because of the Fin Nifty expiry. And remember that besides that, the markets, even on an intraday basis, have been fairly volatile. If you just look at the overall graph, well, you won't see too much beyond consolidation, but within that, granularly, you are seeing a lot of sharp moves when it comes to the key indices. That said, when it comes to the benchmarks yesterday, well, we did see about a 0.5% cut here. We're going to start seeing a lot of unwinding, at least in the February futures, as we move into this expiry week, the monthly expiry week, of course. And well, it's not going to be any different as far as the Bank Nifty is concerned either. Another 0.5% cut there as well, as far as this underlying goes, with unwinding of nearly 12% in open interest. In terms of the options market, well, yesterday we did see a lot more writing coming through in terms of calls. That was specifically around 22,200 and 22,300 marks, around those levels. And speaking of, the open interest distribution, it does seem like from this particular graph, it does seem like there's a lot more going on in terms of call writing as compared to put writing, which means that the Nifty could see a little bit more resistance on higher levels from these current market spots. Of course, 22,500 may pose as the near-term resistance. That's of course based on the significant open interest coming through, and of course finally coming down to Fin Nifty. Now the Fin Nifty expiry has been the toughest to trade over the last few trading, last few expiries, and today is likely not going to be very different, because we do tend to see some very sharp moves in the beginning of the session as well as the end of the session, and that actually takes a lot of writers, option writers by surprise and perhaps also forced out of their positions. Those kind of moves cannot be ruled out in today's day of trade either. But we are keeping an eye on 21,000 as far as the Fin Nifty expiry is concerned because of the kind of traction that we're seeing around that mark. That said, let's take a look at what our experts have to say with respect to what they do with markets today, as well as positionally speaking. We have Akshay Bhagwat of GM Financial who's joining us on the show. Akshay, good morning. Thanks for joining in. We start off with your assessment on the benchmarks. How are you going about them?
Good morning, Agam. Well, for the Nifty index, if you look at the broader data points in the futures and options segment, there has been some bit of writing pressure which has been building up in the last couple of days, especially at the strikes of 22,200 and 22,300. So slight bit of unwinding of long bets ahead of the monthly expiry for the February series in the Nifty. Broadly, I do not see any major move till the expiry day. The range which is coming out going by the options data is 22,000, where there is a lot of put writing support, and 22,300 where the call writers are slowly piling up their writing bet. So it looks like more of a muted action for me, with the Nifty likely to be confined in this trend. The long short ratio continues to be around 45 longs to around 55 shorts, and in fact we did see some bit of buying in yesterday's trade. So from an intraday perspective, one should still be positioned on the buy side in the Nifty. It's a flat opening, but I believe that the support of 22,100 is a good support. We did see some buying indications from those levels, and there is a good chance if those levels are revisited, we will see the demand area once again around the 22,100. So buy around 22,100 is what my advice is, and for the option traders, play for the range. The range which I see is 22,000 to 22,300.
Right. Akshay, perhaps one of the bigger movers in terms of sectors through the course of January and, of course, the last 3 weeks of February has been oil marketing companies. I believe you have a take on Indian Oil Corporation. Can you take us through that one?
Yeah. So if you look at the entire January series, the sector was dominated by the oil marketing companies. They had a fabulous rally. Most of the names did show significant gains on a monthly basis. Now, kind of subdued trading action is noted in most of these counters lately, but yesterday's action did see strong recovery from the lows in most of the oil marketing companies. So I have a buy bull call spread in IOC. I hold a positive view from where IOC is trading. I am expecting a recovery from the current levels for the March series. So the trade is a bull call spread for the March, where you buy a 180 call around 9 rupees premium. You sell a 190 call at around 5.6. And considering the lot size of IOC, which is around 9,700 odd quantity, the profit potential you should be booking around is around 16,500. That's an absolute appropriate target. And the stop loss should be around 8,200 on this trade.
Okay, so a debit spread with a risk to reward ratio of 1:2, which is of course favorable, and considering it as a debit spread, your losses are limited. But Akshay, you also have a trading idea on SBI. Can you take us through that?
PSU banks again have been the flavor in the market lately, and State Bank has been the top leader among the PSU banks. Strong long additions, rollovers picking up for the March series all make me believe that the momentum will regain in State Bank of India from the current levels. So I have a buy recommendations in the option segment, where you go for buying the 28th March expiry 780 call, which quotes around 20 odd rupees. You buy for a target of 32, that's your first target, and the extended target can be around 41. Keep a stop loss of 12 rupees on the option premium on this trade.
All right, Akshay. Well, we'll leave it at that. Thank you so much for joining us and taking us through your trading ideas. And with that, it's back to you, Tamanna.
Yeah, thank you for that, Agam. Yeah, you're going to have a volatile kind of day. Nirav Asher now with us to take the conversation forward. He's head of equity research analyst at Latin Manharlal. Nirav, a very good morning to you. Great to have you, as always, on NDTV Profit and the India Market Open. Let's just talk about what kind of, bet you would take today on a TCS. I'm starting with TCS because of the UBS note. There is a Bernstein note also looking at the IT space all over. And this is sort of one sector which nobody is clear about what the future is. They've had a couple of great days, a couple of really bad days. But what would be your take on TCS right now?
Yeah, good morning, and thank you so much for having me on the show. And with respect to Tata Consultancy Services, I think it is, of course, the industry leader as far as the IT space is concerned. And they have a very strong track record in terms of performance. The cash flows have been quite strong. We've seen the dividend distribution strategy, buyback strategy, etc., has been quite strong. Of course, there is that the element of doubt whether the IT sector is going to make a comeback and how fast it can make a comeback. But if any recovery is likely to take place, then of course TCS and Infosys are likely to lead the markets. With respect to valuations, I think already the stock was trading at a trailing 12 months PE of 28. From that, we've come to 34 times already. To my mind, I think a target of around 4,300 would be more reasonable. We had a target of 4,000 post the Q3 results. We believe that it will be a slow road towards recovery. I think 4,300 seems to be a reasonable target at this point of time as far as TCS is concerned.
Okay. Nirav, stay on. So much more to talk about. But clearly, guys, one of the things in focus is the big story in PayTm. And Pranav Gundapalle, he's senior research analyst at Bernstein Johnson's right now on the show with his thoughts on all that's happened here. Pranav, good morning. Thanks for taking the time out. Lots of developments, in fact, developments happening every single day, but two big ones overnight. What have you made of the saga thus far? And more importantly, Vijay Shekhar Sharma stepping down from the position that he has and the possibility of maybe 3 or 4 odd banks being a part of that ecosystem now.
Right. Hey, morning. See, I think for the listed entity, the 197, I think there are 3 things that is required at this stage, right? So first is evidence that all the troubles, regulatory actions are limited to PPBL and not so much to the rest of the entities. The second is resumption of lending, and the third is data on what's been the attrition or damage from all of this saga over the last month or so. I think Vijay Shekhar Sharma stepping down from PPBL board, plus the few other banks joining in on the partnership helps on the first point, which is they both support the view that the problems or the regulatory actions are restricted to PPBL and therefore will not spill over into the rest of it. Vijay Shekhar Sharma stepping down is essentially another action to show that there is a big gap or a distance between PPBL and 197 and their independent entities. Might be too little too late, but nevertheless, I think any action which shows that separation, I think is a positive sign.
Pranav, good morning. Tamanna here. I'm just trying to understand what has been driving up the PayTm stock and the enthusiasm on the PayTm stock, because PPB was, I suppose, in that sense, done and dusted the day the RBI FAQs came out, and it was clear that there's no real revival. Would it be fair to say that the developments of last evening is just the next step in winding down those operations? In that case, is there any sense of a clear start or any positives now that you would see coming into the core 197 communications company and stock?
See, I think I would agree with your point that this is essentially the next step in terms of PPBL, right? So I don't think it's going to continue with its operation. There's no change to RBI's directive. So I think this is more like looking beyond that, trying to revive it, or which could be a much longer duration activity, right? I think what is happening now, and the reason for the stock to have bounced back a bit, is that it's becoming clear that the UPI payments are not at risk. I think both RBI's announcement last weekend, plus this news flow about more banks joining in as PSPs, give us enough conviction to believe that UPI payments will continue unimpacted, both on the consumer side as well as the merchant side, which is probably the biggest concern that investors had going into the sell down, right? So That was 70% of their payment volumes and extremely critical to continue their lending business. Therefore, signs that that will continue uninterrupted, I think, is the biggest driver of this rally. The second is, once that happens, I think it's also reasonable to expect that the lending partners would come back on board. Right? The reason they stepped out was because of the uncertainty on UPI payments. Now that that's coming back, I think they should also come back, and that should be the next positive catalyst for the stock.
Yeah. Okay. In terms of the lending business, though, Pranav, I just want to get your take on that, because that was the prime contributor, or is the prime contributor to 197, and a note out this morning, and also persistent concerns that lending partners are re-looking at that relationship, because the reputational hit is definitely there. Now, if that gets depleted, and even if UPI continues, because you have got other banks on board, what does that mean for revenues or for profitability of 197?
See, lending is critical for any sort of value in this entity, right? So without lending, I don't think there's a lot of value in a pure payments business in India, be it for PayTm or for anybody else. So lending is critical. Now, then the question becomes, what would it take for the lending partners to come back? So our view is there was no dependency on PPBL as such. I mean, the lending partners work with a lot of fintechs which don't have a payments bank license, and most of their competitors don't have a payment bank license as well. So the key is the UPI volumes, right? So you need that payment volumes, which then brings you the customer engagement, and therefore becomes a reason to partner with PayTm for the lending business. So, which is why the UPI payment volumes become the key, even from a lending perspective. So if the UPI volumes come back, the active users, which was about 100 million, let's say, prior to this saga, comes back to around 95 million, then I think lending partners will have no issues. Similarly, on the merchant side, if we see that a majority of the merchants are retained and their daily volumes remain largely unimpacted, then again, the lending partners would be comfortable to come on board. I don't think there's any other reason for them to stay out of this other than just the uncertainty on whether or the level of attrition that would have happened, and what is the new steady state that PayTm will come up with.
Pranav, a couple of weeks ago, you had put out, and we did chat that time as well, a brokerage report on an outperform on the counter with a target price of 600. Does that still stay, or are you going back and revising that? And let's not forget, the stock is up 30% since its Feb 13th lows and has hit upper circuit 5 out of the last 6 days.
I would stick with that, right? So I think the reason why we had that view was that we believe that UPI payments, a large part of the payment volume, should remain unimpacted. And we also continue to believe that the attrition on the merchant front should be minimal, right? So we don't expect a large-scale attrition there. And therefore, that target price stays. Now, what will make us a bit more positive is two things. One, lending partners coming back on board. I think that announcement would be a big positive. And second is some sort of an update from the company, confirming what that real attrition is. That might come in maybe post March 15th, but that's the second data point that would leave us a bit more comfortable. Beyond that, I think you expect them, you would need to see them growing once again. So it's no longer a case of limiting attrition. Once they're back on the path of growth again, then that's probably where there's further upside from where our target price is today.
Okay, Pranav, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time.
I would.
Right, that's the view from Bernstein on PayTm. It remains a stock in focus today. What about the markets at large? Aditya Agarwala, Head of Research and Investments at Invest4EDU, Johnson right now on the show as well. Aditya, good morning. The indices are very, very flat. Are you trading the Nifty or the Bank Nifty or any other index thereof at all?
Good morning, Neeraj. Thanks for the show. To be honest, no, I would avoid getting into the index. Unless you are a compulsive index trader, I would avoid getting into the index. It's trading in a very narrow band. 22,100 to about 22,000 on the downside is an immediate support, and 22,200 to about 300 on the Nifty is the immediate resistance on the upside. And it's getting very difficult, Neeraj, to trade the market. Market opens with a gap down, pulls back, and then again gives up its gain. So it's very difficult. I would avoid getting into the index per se. If at all one wants to trade the bank Nifty, maybe if we see a good pullback above 46,650, 46,700 odd levels, then we can go long on the bank Nifty for a target again back to levels of 46,900, about 47,000. And on the downside, immediate support on the bank Nifty 2 is at 46,500, about 46,470. So these are the levels to watch out for on the Nifty and the bank Nifty. Maybe a short covering rally in the bank Nifty can be in the offering, maybe today or tomorrow.
Okay, so in light of that, Aditya, what are the stocks then that one should focus on? What are your ideas for the morning? Let's start with that first.
So there are pockets which are outperforming Neeraj, and I picked up clearly from those pockets. The first is the Tata Consumer. All of a sudden, stocks saw a bit of an upsurge in trade yesterday. Volumes were healthy. It's broken out from a consolidation pattern as well. So at current levels, I would recommend a buy for a target of 1250 on the upside with the stop loss at level 35 on the downside. The second is from a railway stock, IRCTC. Out of nowhere, the stock has now started to pop higher. And apart from the fact that most of the railway stocks have run up, this is one which is not run up. So there is a bit of a catch-up rally also that is due in IRCTC. It's broken out from a resistance trend line. So I would go long on IRCTC for target of 1050. The stop loss at 925 on the downside.
Nirav, yesterday was a little bit of a weak day of trade, but Adani Group stocks actually rose in a weak market. You had Adani Enterprise, Adani Green Energy, Adani Ports, and Ambuja that hit fresh 52-week highs in trade. Do you feel like, of course, technically I'll get a view from Aditya on the charts, but fundamentally, any of these Adani Group stocks that you're constructive on?
Yeah, so if we were to do a study of the entire Adani Group, as we did a small study about the quantum of debt and the amount of profitability, the cash profits which have been generated during the first 9 months of operations, that is during the first 3 quarters. If we look at the debt, it is close to around 2,29,000 crores, the group debt. And if one were to look at the profitability, the cash profits, which include the net profit after tax plus depreciation, then it is close to around 41,000 crores. Now, this definitely gives us a lot of comfort in terms of cash flows, because during the first 9 months, we've had a very healthy cash flow. And I think a bulk of this has been contributed by Adani Power. So I think Adani Power picking up quite well. At the same time, we have Adani Ports and SEZ, which is also generating a good amount of cash flows. And I think Adani Enterprises with the new age businesses, with the exposure to the airports businesses, the data center business, etc. Very, very exciting potential over there. So overall, I think this all gives us a lot of confidence. To add to this, Adani Total Gas, Adani Green Solutions Limited, these were the stocks which have rallied in trade yesterday. So I think there's a very good expectation that going forward into FY25, we will have a very strong cash flow profile, which will improve valuations further. That's our take on the entire Adani.
Remember, GQG Partners' stake in Adani Group has gone from 1.9 billion to about 10 billion in the last few years or so. Well, Aditya, you want to comment on some of these counters? Adani Energy was up 9%. Adani Green, Adani Wilmar, Adani Power, Adani Total also ended anywhere in the range of 2 to 5% higher. Some of these counters have also made fresh 52-week highs. Which ones would you be long on at this stage?
Morning, Sabina. So if I have to go long on any Adani stock, the first has to be Adani Enterprises, the parent company. That is looking good. In fact, it's broken out from a trendline resistance as well. This was also one of the candidates for a buy recommendation. On the upside, stock can test levels of 3,500 or 3,600 with a good support at 3,250 on the downside. So from the larger cap stocks, Adani Enterprise is something that I like. Adani Wilmar is something which is showing good potential. I'm not too sure about the valuation front. Maybe it's still trading expensive, but purely going by the chart structures, I mean, it is showing some signs of up move building up here. Look at the volume pattern in the last few trading sessions. Somebody is buying the stock on heavy volumes at these levels. So maybe a sustained trade above 410 will trigger a fresh breakout in the stock. Stock can test levels of 430 to about 450 on the upside, which is a big up move on the stock that I'm looking at, with a good support at 380 on the downside. So this is one trade that I would like to take within the Adani Group smaller companies, apart from Adani Enterprises that I spoke of earlier.
And all the standard disclaimers as well when we're talking about Adani stocks on NDTV Profit. So just keeping that in mind. Aditya, very good morning. Your take on Vodafone, CMS, and 197.
We'll first talk of Vodafone Idea, Tamanna, morning. Okay, so the stock has shown a bit of a up move for sure, but it is yet to break out of that major hurdle of 18.5. Multiple tops around those areas. Technically, till the time the stock takes out 18.5, I'm not looking at a fresh entry in the stock. If you already had the stock, you had an opportunity to exit closer to about 18.5. If you haven't yet exited, I would recommend keep a stop loss closer to about 16.5. If that is taken out on the downside, exit. And if once it takes out 18.5, maybe you can go fresh long on the stocks. Talking of CMS, yes, that is an interesting looking chart setup. After a good run up, stock went into a consolidation. It's forming an ascending triangle pattern. The neckline is yet to be broken out. Somewhere around 406, 407 is where the neckline stands. Once it takes out that hurdle, I believe stock should be in your portfolio, at least for a short to medium term. And you can look at a target price of at least 440 on the upside. Once that is taken out, 460 can also be looked at. So 440, 460, these are two targets I'm playing with. And I preempt a breakout, Tamanna. This is a good looking chart structure, should be on your radar. Once it sustains above 410, 405, 410, you should definitely look at it.
Just keep in mind, CMS might have a rough morning today though. So that's to be kept in mind as well. Time for a short break. We'll be back with the pre-open session in just a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Just about 2 minutes to pre-open. The implied open indicates maybe a softer start for the markets this morning at a time when we have seen, I would say curtailed and very, very sketchy kind of trade. People are being cautious, people are being careful. Now, I want to come to Aditya just for a quick take on, you've given your top picks, Aditya, but right now, especially in the mid-cap space, what would be the counters that would be on your radar this morning?
To be honest, Tamanna, I'm avoiding getting into the mid-cap and the smaller cap space because there's too much of volatility in this space. And though there are pockets which are outperforming, but having said that, you have to be very selective and the move is so fast. Maybe on an intraday basis, if you pick something, then you can go for a long trade. Otherwise, not really. There are opportunities there which I'm looking at.
Yeah. Interesting note on UBS out today, and we'll get Harsh in just a second to tell you about that. There's also a take on, where our Indian IT majors stand in terms of AI. I asked Nirav earlier about TCS, but Aditya, on the charts? Aditya? Yeah.
So as far as TCS, yeah. So it's going through a sideways consolidation and a rising channel as well. So on the downside, 39.50 to about 39.70 is the immediate support. If that is broken on the downside, I believe there could be further downside in the stock. Can test levels of 38.50 or 3800 on the downside. On the upside, 4100 is clearly a hurdle. Unless that is taken out, I'm not too bullish on the stock. Maybe it needs some kind of a consolidation and a sustained trade above 4100 for a fresh breakout to levels of 4400.
Okay, gentlemen, stay on. So much more to talk about, but we're just getting ready for the pre-open session. Remember, PayTm and Vodafone have been the big draws. A clutch of other names which will be in focus. There are a couple of OFSs or stake sales that will happen, large trade, CMS Info as well as Andhra Cements. Small one, Andhra Cements, but could be in focus, so that's to be kept in mind as well. And there are a clutch of brokerage notes that have come out. So we'll watch out for Cello, we'll watch out for TCS, we'll watch out for a downgrade, Jeffries downgrade on Dixon as well as Whirlpool. So both of those also are in focus, and Indus Towers certainly remains in focus. These are the initial rates. Let's give them a chance to settle, but very likely that we'll have a flattish start in the session today. My colleague Harsh will be with us in just a moment to talk about this. But remember that today, just the clutch of brokerage notes that are out there make all of those stocks become the ones that are to be most watched out for. Harsh Seta Johnson, as he does every morning, with the one or two key brokerage notes for the day. Harsh, good morning.
Well, yes, Neeraj, let me first talk about that UBS note. It's a strong note coming out from UBS, signaling that at least from, I'll just pulling that out, at least from an IT standpoint, there is possible positivity coming through. First off, with regard to what they're suggesting on TCS on the target price, they've hiked the target price to 4,700 from 4,050 earlier. They believe that there are enough drivers for TCS to deliver industry-leading growth and margins in FY25, so you could be at a cusp of a change there. They believe drivers being large deals, revival in BFSI, cloud migration and managed services demand also possibly holding up. They're expecting a sharp fall in attrition that will aid gross margins. They're expecting margins to improve by 100 bips in the next 4 to 6 quarters. That's a sharp improvement. And they believe that improvement in utilization and scope for subcontracting cost reductions could further aid the numbers. They're valuing TCS at 28 times price to earnings. And that's obviously basis FY26 estimates. 4,700 is the target price, revised target price, and they've given it a buy from a neutral. So they've upped that as well. Quickly on to Indus Towers. Interesting note here, Citi again retains its buy and positive catalyst watch on Indus Towers, hikes target price to 320 from 265, and they've raised their EV to EBITDA multiple as well from 6 times to 7 times. That's positive. And what they're suggesting is it's on the back of improved visibility with regard to both cash flow as well as dividend going forward. Cash flow will be aided by a decline in capex intensity, and the key monitorable going to be Vodafone fundraise, because that can drive further upside according to Citi. They are assuming that if the Vodafone is able to raise the money, it can recover in fact half of the outstanding dues over the next 2 years, which is 5,700 odd crore, which Indus Towers will be able to recover in the next 2 years. That's another big one. In terms of the IT pack, now Bernstein again positive on IT. In fact, they've suggested that cloud and software are showing signs of improvement. Enterprise software revenue streams remain resilient. Cloud and AI partnerships are very strong, especially within the larger cap IT, and therefore they remain very bullish on larger cap IT, especially the likes of a TCS outperform. Infosys also outperform. Target prices very close to their current market price, but nonetheless very bullish on some of these names. Outperform on Tech Mahindra as well, 1390 being the target price. Market perform on HCL Tech, target price 1640, and underperform on Wipro. That's one to note out of the pack, target price 400. Last off, Dixon Tech in focus, Whirlpool in focus, some of these EMS plays also in focus. What I'll talk specifically on Dixon. They've downgraded, Jefferies has downgraded Dixon to an underperform, target price 5920. They believe the stock has rallied sharply. Risk reward now looks stretched for a low margin company. Higher capex outlay and emerging competition is a risk. Growth trajectory of mobile segment to be key driver, especially after expiry of PLI. Watch out for that as to how that plays out in the future, and they've cut EPS estimates by 2 to 3%. 7% below consensus is what their EPS estimates are at. So a whole host of stocks in focus. I've tried to sum all of those up.
Okay, thanks a lot for that, Harsh. Well, let's pick the key ones of those. Nirav Ashar, I'll come to you first on Indus Tower. The stock has had a strong move in the recent past as well. There is topicality today because of the Vodafone Idea proposed fundraise. Are you constructive on Indus Towers from where it is right now?
Yes, definitely. We like Indus Towers, but I think everything hinges on the developments today, because Voda Idea itself has been under a lot of pressure, and the gross debt levels, of course, we've seen are way too high. We've seen successive losses with every passing quarter. So the quantum of fund infusion today will have a very big bearing as far as Indus Towers is concerned. But overall, we remain positive over there. Now it all depends on what kind of fund infusion takes place in Voda Idea.
One stock that caught my attention yesterday was BDL, Bharat Dynamics. How is that one looking on the charts this morning after a 6% up move yesterday? There's more steam left for a short-term trade?
There can be if it trades above 1930, Samina. So it was a strong up move yesterday on good volumes. So definitely there is something to look out for here. And above 1930, I guess stock is good to test levels of 2150 to about 2170 on the upside. So definitely should be on your radar and watch out for a trade above 1930 that will give a clear breakout from its previous peaks, and should test levels of 2170 as I mentioned.
All right. Let's come to you, Nirav, on quick thoughts before we go into the opening session, and especially on the banks, bout of weakness that we've been seeing consistently in private banks. Anything that you would want to keep on your list today from the top ones, and HDFC Bank, for example?
No, I'd like to stay away from HDFC Bank, but as far as the private sector banks are concerned, I'd like to have a look at ICICI Bank. That is looking more interesting. And overall, I think public sector banks are looking far more attractive from a valuation perspective.
Right. Aditya, Jio Financial Services, JFS, it's been quite hot in the current series. Does it look good on the charts here? It took a bit of a break yesterday, but I guess a rally could be resumed here.
Yes, it can. I don't see too much of a selling pressure here. And interesting is, there was no volume yesterday when stock actually took a bit of a breather, which is a healthy sign. Maybe above 330, 335, I would look to go fresh long on the stock for a target of 350 to about 360 on the upside. Definitely strong looking chart setup. I won't say it's still on weaker hands. So maybe above 330, 335, one can go long with the stop loss at 325 on the downside for a target of 350, 360.
Okay, so a lot of stocks in focus, and in fact, while we spoke about the key brokerage notes and we've discussed some of the large stocks in news, there are some others which should be focused on as well. Anushi joins us with the list of some of the other stocks that you should be watching out for. Good morning, Anushi.
Morning, Neeraj. So right off the start, we have CMS Info Systems in focus. This is after the promoter, that is Sign Investment Holdings, is offering up to a stake sale of about 26.67% of his stake. So with this is expected to take through a large trade worth rupees 1,500 crore. The floor price for the same has been set at rupees 360, which is at a 9% discount to its yesterday's close. If you have to look at the holding of this, as of December 23, Sign Investments Holding holds about 26.7% stake. So almost an entire stake sale over here. Also do note that promoter Sign Investment Holdings is an affiliate of Baring Private Equity Asia. Moving on to the next, this is on the basis of order win, wherein Power Mech Projects has received an order of about 393 crore from Southeast Central Railways. This is to be executed within 30 months of planning, and it is related to the civil construction and electrical works. Now, if you have to look at the company's order book over this course of 1 year period, about 23,000 crore in FY23, which has now jumped to about 57,000 crore. So almost doubled over here. And even if you have to look at the order inflows that it has received over the course of this period, 8,500 crores in FY23, which has now moved upwards to about 37,000 crores as of Feb 24. So that should remain in focus. And last, there are a bunch of stocks that would remain in focus ahead of the fundraising plans that they have announced. So this includes Indostar Capital Finance, Pesalo Digital, and Texmaco. So these are some of the key stocks that should be in focus ahead of today's trade.
Okay. Watch out for this. Indostar certainly up 3%, Power Mech up about 2% at the end of the pre-open session, and CMS Info is down 4.5%. Indostar is in fact up 5% now as we speak. Nirav Ashar, CMS Info, certainly a stock in focus today. The large trade, I don't have details about whether it's already consummated in the block deal window or no, but let's assume it starts off about 4 or 5% lower because of this overhang of this large trade. Is it a stock? Have you looked at it fundamentally? Is it a stock worth investing? Why or why not?
Yes, definitely. It's an exciting stock to look at, but I think I'll wait for the stock to cool off a bit more. And I think would like to have a look at it at around 355 to 360 levels.
Nirav, I mean, why do you like it?
I think it's got a good business model, good financials, and good cash flows. So I think with strong cash flows, I think the valuation comfort is there as far as it's concerned, and it's got a decent business model as well.
Okay. You know, the other stock in focus is Wockhardt. I want to see where it is starting off. Remember, it came out with an investor presentation yesterday, post-market hours, I think. The stock is flat as we speak, but NDTV Profit broke this exclusive story yesterday about how they might do a QIP very, very shortly, a 10-day average price, which is par for the course as well, to the tune of about 400 crores. Remember, we've had a conversation with them some time back as well, and as we mentioned yesterday, when Smriti broke that story, that you can go onto YouTube and look up that conversation that Habeel Khorakiwala had with us as well. Big move on the charts yesterday, or big move yesterday. Aditya, on the charts, does Wockhardt give you the confidence to initiate a fresh trade?
Yes, Neeraj, sorry. It definitely gives me the confidence to go long on the stock because of the sharp up move, not only yesterday, but it has been doing so for some time now. It's a sustained up move. So I would like to stick with a long trade here, maybe for a target of 670. That with the first target that is taken out, 700 would be the next target with a good support closer to about 590 odd levels. So the risk to reward is also in favor of going long at current levels. Definitely interesting looking chart setup, and pharma space is looking interesting as well. So why not?
Right. That's the word coming in. Work hard. The stock expected to see a flat start this morning. Just very quickly, a couple of other names that will be exciting to see in trade is going to be 197. Expected to see. Let's see if there is a reaction on the counter. And upper circuit once again this morning is not on the cards. The stock is expected to see a cut of 2.5%. Well, along with that, you've got stocks like ABB that are looking slightly weaker. Dixon is seeing a 3% cut. On the charts, Aditya, want to come in, Whirlpool and Dixon is a brokerage downgrade, and it's taken it to the chin. Dixon seeing a 3% cut is not often, and so is Whirlpool down 4%. Do you think these could be great short candidates for the day?
Samina. So on the downside, immediate support is at 6,600, 6,620 to be precise. Having said that, stock is already opening 3% down. You just have about 100, 120 rupees downside left in the stock. I wouldn't be too much interested in going short on the stock because this clearly has a tendency of pulling back and getting into new highs. So the trend structure hasn't diminished yet for the stock and has not halted. So the uptrend remains intact. I would avoid getting into any kind of short just yet unless it closes below 6,600. Talking of Whirlpool, that is actually looking weak on the chart structure. This is something, though it's not there on the futures and option space, otherwise one could have actually looked at going fresh shorts on the stock. Immediate supports on the downside are about 1,200, but I believe they will be broken on the downside in trade today or tomorrow. And looking at a further downside of 1150 to about 1140 on the downside, it's not a healthy looking chart setup, and looks like it will head much lower than what it is trading at current levels.
Yeah, so the Jefferies note has hurt Dixon and Whirlpool this morning. Aditya, absolutely last call before pre-open. And of course, we'll come back to you once the markets open. But what would be your top call at this point?
I will stick to Tata Consumer because I believe that is one stock which is looking very interesting on the chart setup and should see much higher levels of 1250. Also opening slightly positive, so I believe one should look at Tata Consumer for target of 1240 on the upside.
Interesting. Tata Consumer was a call given by somebody else yesterday as well. So do watch out for that from a trading perspective. Do watch out for what could happen to some of the telcos in the session today. That entire bucket will remain in focus. And as I think Samina and Tamanna highlighted on the back of the Jefferies note, the utility players, Dixon as well as Whirlpool, certainly come into focus. So I think that's the other set of stocks that one should be watching out for in the session today. We haven't quite discussed Cello and wonder what that stock is up to in the session today. If we can just before the market open, just pull up Cello World once and see what the stock has done in the pre-open session before we get to the open, because that note from Motilal Oswal is interesting too. They have a 36% upside if I'm not wrong on Cello, and starting off about 3% higher. So do watch out for this one too in the session today. Has had a good start. Let's see how the volumes pick up. But the first rates on this Tuesday morning, coming up in just moments from now. We're starting off flattish. Yes, indeed. We're starting off very flat for the Sensex and the Nifty, the Bank Nifty. And the Nifty IT will come up on your screen next. The Bank Nifty, usually the one that we refer to. But yesterday, the Nifty IT had taken a deep crack and wonder what the Nifty IT is doing today. Well, a bit in the green, courtesy couple of notes maybe. We'll watch out for TCS when we come to stocks, but quickly the mid-cap and the small-cap indices once before we get to individual stocks and just see what those are doing. Mid-caps about a quarter, no, not even a quarter of a percent. So flat moves there. Small caps about a third of a percent. Let's get the heat map up. Let's see if Asian Paints is down below here yet again or no. No, not really. Today, Asian Paints is not in the list of the top 10 losers, so that's a bit of a respite for that stock. ONGC, the top drag, Axis Bank a little, M&M a little, Power Grid a little, but the story might be in the winners, actually not there too that much, because while Ultratech is up about 1%, it seems that IT's done okay today. So after a big crack yesterday, TCS, HCL Tech, Infi, Wipro, LTI, Mindtree, all 5 in the top 10 list. But don't be deceived, because this is less than 1% gain for the top gainer and less than 1% loss for the top loser. So virtually the index movers are doing nothing. Just that the key takeaway is that amongst the indices, IT seems to be a big one. The other aspect is that we're not seeing too many metal losers today. Yesterday, metals had a deep crack. In the top 20 losers, except for Tata Steel, I don't see a single metal name. So that's the other, maybe, just maybe, a bit of a takeaway for the large cap space. Tamanna, what are you spotting?
Yeah, specific spots of action, and we saw that working out in the pre-open as well. A Jefferies note this morning, which downgraded Dixon and Whirlpool, saw them crack pre-open. Let's take a look at how they've opened in trade, and that has hurt it. Dixon has been downgraded to underperform rating with a target price of 5920 by Jefferies. It's already 3.5% down. Whirlpool also has been downgraded to underperform, target price of 1125, about 5% down in opening trade. I want to see what's happening with 197. We've discussed the stock in great detail. Vijay Shekhar Sharma stepped down from PayTm Payments Bank. I want to make it clear that tag over this as VSS quits. He's quit the PayTm Payments Bank. He still owns 51%. The stock up 3% because it's seeming like an effort to say that, hey, I've distanced myself from the problem area, and 197 is okay. So another up move. Remember that stock has gained about 20% in the last 5 sessions already. Vodafone is the one we should look at, and just before that, CMS. All right, there's Vodafone. So fundraise on the cards today. Promoters may put in money. What does it mean for Vodafone? Is it going to be enough to do more than just keep them alive as a lifeline is what we need to see. So Vodafone seeing some action. That stock was already down 3.5% yesterday, has opened weak as well. CMS is the other one which is on our radar. The promoter is exiting. about a 26-27% stake. Our technical analyst this morning was positive on CMS, but look at the levels where you enter because it's already seeing weakness. Of course, the exit is at a lower level than the current market price, and which is perhaps why you're seeing a tough opening. Cello World is the other one, and Neeraj mentioned it, in his trade setup as well. Motilal Oswal has initiated coverage. That stock having a fine morning, actually, not too bad. 4% up right now. But what are you spotting, Samina?
There are a few names that are not looking too bad. Easy Trip Planners is topping the list of gainers this morning in the broader markets. Remember, there has been a bulk deal that took place on the counter yesterday, on back of which the stock trades with a gain of 5%. You've also got Canara Bank that's up 2% on back of a stock split being approved. Zuari Agrochemicals, that's up 5% as well. They have finalized sale of land parcels in Goa to Zuari Infinity. The sale amount is going to be 80 crores on back of it. Zuari Agro trades the gain of nearly 6%. You've got Power Mech Projects, which is up 3.5% on back of a pretty large order win to the tune of 396 crores. Andhra Cement is seeing some pressure, down 4.5%. Promoter Sagar Cement has proposed to sell 5% stake in the cement company. Hind Rectifiers, if I can get that one up too, is trading with a gain of 7% on a rupees 200 crore order win from the Indian Railways. So 7.5% on that one is what we have. Segachi Industries also seeing a big up move, 5% higher, or as they form a JV with a US-based company, Segachi Global, and this counter is reacting positively to that news for up 5%. Uniparts is seeing a 12% up move. Insurance companies again having a good day this morning. New India Assurance, ICICI Lombard, GIC are all trading with a gain of 3 to 6% each. So all in all, it's not looking too bad. There are pockets of gains, pockets of form coming in. Idea Forge is up 4% in trade this morning. So those are all the winners that we are picking up on. On the sell side, you've got Whirlpool that Tamana mentioned, along with Dixon, that's looking weaker. Devyani is seeing a 5% cut this morning. You've got PB Fintech that's seeing some profit taking after a sharp up move in yesterday's trade. So all in all, it's not a bad start. A bunch of gainers, a few losers, but Devyani is leading the way down about 5.5 to 6% in trade as we see it. Well, that's pretty much what we have. Aditya, have you spotted anything in market open that makes a good trade today?
Look at Havells. That is something which is looking very interesting to me on the chart. It's open next with gains of about 3.5%. Good volume action in early trade, and it's broken out from a hurdle trend-like resistance. So I believe one can look at fresh long positions in Havells for a target of 1550 to about 1600 on the upside, with the stop loss closer to about 1450 on the downside. And I would also like to comment on Asian Paints, Samina. This is a very interesting looking chart setup. If we flip the Asian Paints charts to a weekly chart time frame, and we plot a 200 weekly moving average, stock hasn't traded below its 200 weekly moving average from 2009 onwards. And this is the first time that the Asian Paints is trying to test that 200-day weekly moving average on the weekly time frame. So this tells the kind of underperformance that the stock has posted. If somebody is looking for a long-term, interest in the stock, one can actually start nibbling into the stock, because it clearly shows the kind of trend that the stock has seen from 2009 onwards, and this is the first time that the stock has seen some kind of a dip. So maybe this is an interesting time to look at the stock. It won't, I believe, would break its 200 weekly moving average and sustain below that for too long.
At the current levels, Aditya, you would, like you said, nibble into Asian Paints or wait for a
Yes, absolutely.
Yeah.
Absolutely. I will start nibbling into the stock at current levels, and maybe all the way down till 2,800, 2,750 odd levels. I would like to get into the stock, because this is looking at the chart setup from 2009. It's very interesting.
You know, the stock Havells is interesting. Goldman has a note today. The stock is up 3%. The Goldman target is about 1660. And multiple factors that they lay out as well, including, I presume, an upcoming summer season, which could be great for cooling solution companies. And I think that's why Havells and some of the others could be in focus today, but 2.5% higher for this one. Nirav Asher, a Havells, a Voltas, a Symphony, do any of these feature in the list of stocks that you'd be watching out for a positional trade / investment?
Yes, definitely. Because as we enter the summer season, and of course expect it to be a grueling summer, and of course there's going to be a good demand which is expected for ceiling fans and all kinds of appliances, cooling appliances. So definitely like Havells in this space, we like Crompton also, we like Orient. Voltas is also, of course, looking quite good. And especially we have a coverage in the commercial refrigeration space on Blue Star. So I think that is looking very, very exciting to us from a medium to long term perspective.
Just a quick look at Tanla. It was in our stocks list this morning on their AI play, and that stock not doing too badly in open trade, apart in the opening trade, apart from some of the IT names. Nirav, I started the day by asking you about TCS. It's doing fairly decently, relatively, I would say, in an otherwise muted market. But anything else you like in your IT tech space?
I think we'd like to have a look at HCL Technologies also. That's also looking quite good.
Okay, so HCL Technologies are also on Nirav Asher's radar. Market's not showing too much of a bump up at this time. I think a range-bound trade, like I said, IT is one which is not doing too badly. Aditya, anything here that you like? TCS, of course, doing well, but Coforge, HCL Tech not having a very bad day at all, relatively speaking, of course.
Yes, I would like to stick to maybe an HCL Tech or Infosys. We'll first talk about Infosys. I believe there is one up move in Infosys which is due, and I believe it will test levels of 1750 to about 1800 on the upside. Offers a good risk to reward as well on the downside. 1620, 1630 is a good support area. So Infosys will be my top bet within the large cap IT space. If I have to pick something from the mid cap IT space, Coforge definitely stands out. On the upside, stock can easily test levels of 6750 to about 6800 with a good support on the downside at 6600.
Okay, gentlemen, we'll leave it at that. Thanks so much, both of you, for taking the time out and being with us and giving us your thoughts and the ideas as well. Do watch out for Asian Paints, do watch out for Havells, do watch out for Clutch for the newsmakers. We slip into a break. On the other side of the break, we get in Sailesh C. Mehta, CMD at Deepak Fertilizers, about the company's recent LNG contract. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell, How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Hello and welcome to NDTV Profit. I am your host Varsha Chandanani. Today we are going to talk about Deepak Fertilizers and Petrochemicals, wherein it has entered into a 15-year LNG contract with Norwegian giant Equinor. We have with us Mr. Sailesh Mehta, Chairman and Managing Director of the company, to give us more details. Good morning, sir. Welcome to the show. So, sir, my first question to you would be, can you give us more details about this contract and what are the synergies that you are expecting from this collaboration?
Sure. So, is what you mentioned, it's a 15-year LNG contract beginning from May 2026. And we have tied up almost 0.65 million tons of LNG. This tie-up is with, the Norwegian giant Equinor. They have been in the oil and gas business for almost 50 years, and they operate from 30 different countries. And today their market cap is around 75 billion. So it's a very solid company in this field. We believe that the formula that we have worked out is the gas formula, pricing formula, is among the most competitive in today's space, and looking at all the other Indian entities. And with that attractive pricing, we have also tied up a little additional gas. So that will be helpful for us in terms of either our growing captive needs, or of course it will pave the way of us entering into some bit of gas trading in this attractive growing market. So as you shared about the synergy, I might share in terms of the context that, now with this LNG contract, we will be laying a very solid foundation for our complete value chain. So it will be right from LNG to the ammonia, building block chemical, to the nitric acid, which is another major building block chemical, and then finally to fertilizers, industrial chemicals, mining chemicals. And then, as you are aware that, we are moving into the forward integration of holistic solutions. So it will be a very strong end-to-end value chain that will be established. And this will bring us a great degree of not only containing the volatility, but of course, very good margin accretions. So that is the broad synergy.
So now talking about, you did mention about pricing point. So if we see the gas prices which are lower than the historical levels, considering pre-COVID period or during the COVID period. So my point is, how is the pricing of this contract? I mean, are we going to get these supplies at fixed rate?
No, this is because it's a long-term contract. For both sides, it is safe that it is linked to a certain kind of a platform. So this is linked to the Henry Hub pricing. So it's, linked to that. It's not a fixed price contract.
Okay. And sir, so you did mention about like this synergy will I mean, correct me if I'm wrong, this synergy will help you in enhancing your margins. And you did mention about your foray into the derivative products also. So how this is going to help your margins, and what will be the sustainable margins that I can expect going forward?
So basically, over the last decade or so, we have seen ammonia prices anywhere from $500 to maybe even $800, $900 on. And now we will be able to contain that volatility because, based on LNG, as you're aware, we have also set up a world scale ammonia facility, like just across our current complex. And very recently, we have also completed the guarantee test runs. Of course, the plant was commissioned in August last year, but we have just completed our guarantee test run and it's running beautifully in terms of capacities, efficiencies. So that ammonia, production will be just piped across to our current downstream complex, and it will be based on the LNG that we have tied up. So all the margin accretion for ammonia will be sitting within the group. And, this aspect, the ammonia facility not only will bring a huge, because of the import substitution, a huge forex saving, but also it will reduce the carbon footprint in a major way. So this is as far as what is going to help the margin accretion. As far as the value addition part goes, that rightly so is what you mentioned, that on every product, instead of being in the somewhat of a commodity space, we are now moving to holistic solutions. And in terms of, let's say, the fertilizer sector, instead of the focus on commodity DAP or NPKs, we are now looking at crop specific nutrient basket. So something that is focused on the sugarcane, or focus on cotton, or focus on fruits and vegetables. And similarly for our mining chemicals, instead of just making the product, we are looking at mine by mine the right kind of product mix, even in terms of knowledge base, blasting services, drone based analysis. So this whole value chain, right from LNG, ammonia, nitric acid to the fertilizers, mining chemicals, is going to benefit out of this arrangement.
So any kind of ballpark number that you can give us, I mean, not the exact number of course, but between how much basis point are you expecting addition to your margins?
So this being a long-term contract, and it would be walking into a speculative zone because of the way the global prices would run. But I can only say this, that in terms of benchmarking it to the past, where we were open to the vagaries of the ammonia prices, we were facing the vagaries of port congestion, and so on and so forth. Those will be behind us thanks to this complete arrangement.
Okay. And sir, now you mentioned in your exchange filings about you look forward to exploring strategic tie-ups in your chemical business per se. Now, can you throw some light upon the consideration of this chemical business? I mean, considering the chemical sector that we are in, or the problems that we are facing in the chemical sector, can you give us brief timeline about the same?
So, as you are aware, we had approached, the NCLT for restructuring the complete group, and NCLT has recently, approved it. We are waiting for the final orders to come out. What it will do is it will now house the chemical business into the current Deepak Fertilizer. It will house the fertilizer business into Mahadan Agritech, which is the subsidiary that has been now pulled out, and the mining chemical business into Deepak Mining Services, and that also has been pulled out. So this unfolding of different businesses into different corporate entities has been recently approved by the NCLT. Like I said, we are only waiting for the firm orders to be now out. That is going to, in one sense, not only help us focus on the strategy from commodity to holistic solution, because each business is now very uniquely placed and focusing specifically into that sector. The second is, of course, the investors will get a very strong, I would say, better understanding of each sector, because today it is some bit of a conglomerate. And the third aspect that we are seeing is that strategic investors, global strategic investors who have been very keen to come to India, they have been also now, they find this an attractive proposition because of the focused corporate entity on the focused business sector. So among that is the chemical business also, where we are looking at organic and inorganic growth, and also looking at, we're finding some very attractive interests emerging from global giants. So as we go forward, we will see how that pans out.
So then my last question would be on this, that what is the capex that you are expecting in FY25, and what are the growth, what is the growth number that you are envisaging for FY25?
So as you are aware, we have just completed a large capex in our ammonia facility with almost 4,500 crores. And that got commissioned, middle of last year, and now it's into a stable production space. Our other investment into technical ammonium nitrate, which is the project, for the mining chemicals, the mine sector. That is, I would say, midway in terms of execution. That's another 2,200 crores odd. And, that we are hoping that in another year and a half time, we should be able to commission that project. And very recently, we have taken up another growth in the nitric acid business, because it's a very good building block. And with the China plus one shift that we are seeing, our downstream customers have been very keenly, requiring more nitric acid. So that is something that we have recently taken up. That's another 2.5 years away. So those are the growth projects that we are going to see in the following year.
18 to 20% of sales growth I can expect in FY25?
FY25 will probably not see the TAN project and the nitric acid project, but definitely there will be some bit of margin accretion emerging from the ammonia raw material project that is kicking in. So I would put it that way.
All right. Thank you so much, sir. It was really nice speaking to you. Thank you so much for answering our questions. All the best for your business.
Thank you so much. Thank you.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us
worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Welcome back. You're watching India Market Open. It's a quiet morning on the street. After a little bit of consolidation yesterday, the same trend continues into trade this morning. The broader markets outperforming the benchmark, with the Nifty itself trading flat in early trade. One company, a new one actually, been around for a few months, is at Tega Industries. We've got Mehul Mohanka, Managing Director and Group CEO of Tega Industries, joining in to talk to us about the earnings, what the quarter has been like, outlook, and of course, any sort of big acquisitions and expansion plans that the company has. Mehul, morning. Thanks for joining us. Mehul, just let's start by telling our viewers what exactly does Tega Industries do. From the little I know, you produce, or your products are used for mining, mineral processing, and material handling industries across different stages of their value chain. And you're one of 4 companies in the world to do this. And I also believe you've got IP that is used for the gold mining industry. So break it down for us and tell us what and how much do each of these verticals contribute to your top line.
Sure. Thank you. Good morning. Thank you for having me on the show. So what we do in Tega Industries is basically extraction of ore from the rock. So conventionally, we get clubbed in as, as part of the mining industry, but we've got nothing to do with the excavation of rock from under the earth. So all our processes are above ground, and every mining industry or a mine site has a mineral processing plant, which is above the ground. And once the rock is excavated and brought to the mineral process plant is when we step in with supplying consumables and aftermarket products, which go into the different stages of liberation of ore from the rock, which includes, crushing, grinding, screening, and downstream flotation and recovery of metal. And that's what our business does, is aid customers in the most efficient way of extracting the maximum amount of ore that they can, or metal they can from the ore. And that's what our business is primarily centered around.
Mehul, in terms of the quarter that's gone by, top line saw an increase of about 14.5%, but profitability was down 26% year on year. You want to tell us to what led to that in this quarter?
So as we've always said that, our business is, moves from quarter to quarter. So it's very difficult to average one quarter and multiply that for the rest of the year. So we go through, periods of where the customer, we have increased order book, picking up from Q3 onwards, leading up to a big Q4. And what we've seen in Q3 is nothing different. While we had a robust, healthy order book, we did have products manufactured on time, but because of the ongoing crisis in the Red Sea and all over Europe, we've had challenges with getting, containers on time and ship product out. So it's not much of a concern. I would say that the Q3, whatever the dip was, we will see that being caught up in Q4 and still ending the year as our guidance of 15% growth.
Right. So it's fair to assume the next quarter will turn out to be much better, and your growth target of 20 to 25% is still on track?
So we've always guided the market in terms of a 15% growth on revenue and about a 20 to 22% EBITDA margin. And we're going to be pretty much there.
Right.
By the end of the year.
Right. Mehul, I believe you're one of 4 players in the world who've done this. And I read a report from Saurabh Mukherjee recently where he said he studied your industry for the last 20 years and there haven't been too many new entrants in this business. So I'm assuming high barriers to entry. But how much of the global marketplace do you control?
So there are different segments of the market. I would say our mainstay, which is grinding mills, we're at about I would say on a global level, we're at about 6%. I mean, we don't have a specific market research report out there to validate it. So that's a disclaimer. It's just based on what we think our estimated market share is. And it's healthily ticking up. I think over the past 2 to 3 years, we've seen it move up to close to 8 to 9%, starting off at 5% about 2.5 years ago. And so that's a big, about 75% of our revenues comes from one single product line, which is grinding mill linings. And yes, the technology is all about, again, like I said, extracting metal from rock, and the grinding equipment, or what we call the comminution circuit, is where most of the liberation of the metal happens from the ore.
Mehul, good morning, Neeraj here. What do you expect the industry growth rate to be like, let's say, for the next 5 years? A lot of people are talking about India being the bastion of growth, a lot of global growth opportunities coming to India. So what could your industry, if you are classified under one industry, would the growth rate be? And would you look to outperform the industry meaningfully over the course of the next 3 to 5 years? Where I'm trying to get at is, from the captain of the ship of Tega Industries, how does he see growth over the next 5 to 7 years and not just over the next 12 months?
Sure. Interesting question. If you look at our country in general, mining hasn't been a mainstay in terms of growth, driving the growth in the country in terms of contribution to GDP. We've had challenges in the country from the perspective of availability of mining leases and monetization of those mining leases. So I would say in India, per se, I mean, our growth rate of the industry has been sub 2%, and globally around 3.5 to 4% in terms of growth rate of the mining industry. But as you see, our growth rate, it's outstripping the industry, and I see that to happen in the foreseeable future, because we're not as much linked to the capex cycles of the market. So we're more of an OPEX spend for a customer. So it's all about how well we can position our business to take on more market share that's available in the mining industry, and about how much more we can put forward investments in innovation and R&D to be ahead of competition.
So would that circa move to about 15% growth? Would you be happy with that? And would this, in order to achieve that, would it entail heavy capex, or would you be able to do it easily?
So we have been delivering, in excess of 15% growth year on year. If you look at since we listed in December 21, and information is public, we've been delivering growth rates above 15%, and we will continue to do that. I don't see our growth be muted. In terms of capex, we did announce last year that we're putting in about close to $30 million in one of our subsidiaries in South America to put in greenfield expansion of capacity. And we see that coming online around FY 25-26, about first quarter. And that's where we will anticipate a higher growth rate coming in from that year as we monetize our capex.
Mehul, how much of your top line do you get in from exports? Because while India seems to be in a good place with steel demand, globally the picture is pretty much a corollary to what we're seeing in India.
So overall on the group revenues, I think close to about 85% of our revenue comes from outside of India. And I would put our Indian revenues, India-based specific revenues, at about 12 to 13%. And globally, I mean, our mainstay is gold and copper. So those are the two specific metals which contribute to almost 60% of our total revenue mix. And the reason for that is gold and copper are the largest metal groups that are beneficiated, as in that needs to be enriched, processed to be able to improve recoveries. Just to give you a bit of perspective, in a typical gold mine, 1 ton of rock that's excavated from under the earth would yield anywhere close to a gram of gold. And our job is to ensure that in the most efficient fashion, we can recover that 1 gram of gold. And over a period of time, as it's getting more and more difficult to mine metals such as copper and gold, world over, customers have to go to greater depths to be able to recover the same percentage of metal from rock. And that's good news for us, because that would mean that they would use larger equipment and more of our products to be able to extract that metal.
Mehul, what are your margins currently stand at? And if you can give us a little bit of a guidance on that front for the next few quarters at least, or the next financial year?
Yeah, so as of third quarter, we're sitting at close to about 21% on our mainstay consumables business. and about 11% EBITDA on our equipment business. So those two businesses are quite unique and different, with different revenue streams and margins. But on a blended basis, we see ourselves ending the year as per our guidance of about closer to 21% on an EBITDA basis.
To those numbers in terms of revenue growth and margin growth?
So revenue growth around, as I said, 15% is what we're targeting. And margin growth would be 21% over last year.
Quickly, if you can just bring us up to speed with your greenfield expansion in Chile to increase growth opportunity in LATAM, I believe. What's happening there? What sort of growth are you working with on that front? And also, any other brownfield expansion plans on the way? I know Neeraj asked if you were looking to make any acquisitions or investments for growth. Anything on the cards?
So like I mentioned, in Chile, we're putting in a capex of about $30 million. We're looking at, first quarter FY 25-26 for that capacity to come online. We should be able to, get up to almost close to about 800 crores of revenue when that capacity is fully utilized in Chile. In India, we're planning a brownfield expansion that will happen as soon as we complete our capex in Chile, and that would involve an investment of about close to 90 odd crores in our plant in India. And that cumulatively should put us in track, of a continued growth rate of over and above 15% in years to come.
Lastly, would you be, funding these expansion plans through raising funds, or is it going to be through internal accruals?
So we have sufficient cash accruals in our business, so we're looking at funding it internally with a healthy mix of debt, if required. But we're not looking at going to the market for a primary raise for this as of now.
Right. Thank you, Mehul. It's been great talking to you. You've been, of course, in an industry that is such niche, and you clearly are at the helm and the captain of the industry, like Neeraj said. It's good talking to you, and we'll see you soon. Well, let's take they've managed to post solid profit growth of about 47% CAGR over the last 5 years. In a niche industry, they, of course, have equipment or products that are made for the metals and mining industry, and also have the gold mining industry under their belt. So lots happening for the company, gunning for a 10 to 15% growth on top line and on margins at 21 to 22% EBITDA. With that, we're leaving it with the markets being quiet. It's last 3 days of trade as we end the Feb series. But on the other side, it's going to be Ashwini Agarwal, founder at Demeter Advisors, will be talking to Neeraj. So stay with us on Talking Point.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty.
Thanks for tuning into today's Talking Point. I'm Neeraj Shah, and the case for a chat today with our guest Ashwini Agarwal is multifold. There has been a one-way rally of sorts in the market. Could there be volatility ahead, or will we continue to see a stable ascent? So that's part one of my questioning to him. Where is it that there are relatively comfortable valuations existing, coupled with some growth? I think we'll try and talk about that as well with him. And of course, if indeed flows are to come back, if you can make a thesis around flows coming back into India, will the ones which have suffered the most from that, which is private banks, again make a bit of a comeback? It is very important for the bank Nifty, markets at large, for private banks to start doing well again on the bourses, and that can happen with flows, which can possibly happen only with global flows. So I think in some sense we'll try and talk to Ashwini about that as well. He's the founder of Demeter Advisors and joins us right now on the show. Ashwini, good having you. Thanks for taking the time out. Hope all is well.
Morning, Neeraj. Thank you. All is well.
Ashwini, a lot of chatter around how the Indian valuations defy, in some sense, what's happening across the world on the growth front, even if India were to be growing well. I'm trying to understand, are you okay with the kind of moves that we've made index-wide, though the last 2 months we've been largely flatlining? And what's the way ahead, therefore? Would we continue to flatline? Could we see an ascent in the run-up to the elections? And would that be something that would make you uncomfortable?
So, Neeraj, 2 important points here. Like you said, the growth globally has been slowing down. And the second macro reality is that with the expectations of very sharp interest rate cuts that we had, let's say, around September, October last year, have now been pushed out. Even in the Indian context, there's been no cut in rates. And if you read through the RBI policy, it appears that there may be no development on this front for at least the next 3 or 4 months or post-elections. We might see something, not right away. And it's similar trajectory for rates, at least in the US. So the question I'm asking myself is that if you look at growth, is the growth accelerating? And I'm talking about real GDP growth here, or is the growth stable, or is the growth slowing down? In the Indian context, I think we saw very strong growth in the first half of the current fiscal year, which is the period April to September 23, and now we are starting to see the base period catch up. I think growth should be stable around 6 to 6.5% over the next 1 financial year or so. And there is no acceleration visible yet, despite significant push by the government on infrastructure spending, especially in the areas of defense, railways, and so on. So my sense is that, with earnings growth of the order of maybe about 14-15%, slightly ahead of nominal GDP growth, the market is already pricing in a significant amount of near-term earnings upside. So to answer your question that, do we see a continued, moves upward from here on an index-wide basis? I think that's a tall order. Within the emerging market space, if you were to look at it, and I know several people keep saying that that asset class is dead, India is a really expensive outlier. So notwithstanding the diversity of the Indian market, notwithstanding the growth, I think a lot of good news is priced in. That's what I see from a global perspective looking into India. However, if you look from within India for savers in India, what's happening is that we are hostages to our own market because of capital controls, and there is of course a home bias that every country has with its own investors. And these investors have done very well in the last 4 years, notwithstanding correction that we saw between September 22 to maybe about September 21 to about March of 23. So that was the 18-month period where we saw the markets go down. And despite that, over the last 4 years since COVID, investors have done well. So the domestic money continues to flow in, and that may prevent the market from going down a lot. So, flat lining is what we've seen over the last 2 or 3 months, and that might continue, notwithstanding my concern on valuation.
Okay, so in some sense, Ashwini, you are saying that the going seems to be, and correct me if I'm wrong, but the going seems to be so, there's to be so much of interest that despite the higher valuations, we may still flatline and not correct because there is an appetite at every dip.
That's correct. If you look at the local flows that are coming into mutual funds and direct money that's coming into the market, that may not allow the market to sink a lot. But valuations have their own way of imposing themselves on the market. If you go back to again September 21, and we saw a plethora of IPOs, then the new age internet-based companies, their valuations were very expensive for traditional investors like me who've been around for a while and have value as a constant discipline that we are trying to adhere to. And we were amazed at the kind of response that these issues got. But lo and behold, over the next 18 months, you did see a significant correction. So pockets of market where the valuations are expensive today, be that defense, be that railways, there you can see a lot of correction, because I think while the stories are good in the long run, just as they were in the internet-based companies in the middle of 21, you may still see a significant price correction because valuations are completely absurd.
And viewers, I must bring out this point, and with a couple of charts maybe before I go back to Ashwini, because the point that he's making is very important. A lot of us and a lot of people who are coming to the markets in the last 4 or 5 years, which is a large percentage of my viewing population as well, at times forget this. So look at say maybe a 2-year or a 5-year chart of Zomato, or whatever time it's listed. And the stock, while it's rallied from 50 rupees all the way to 130, 140, it has corrected initially from 160, 170, whatever it is, all the way to 45. So in some sense, Zomato 12-month chart looks really impressive, right? Now expand this to 5 years, and you will see how the stock corrected quite viciously before coming up again. And maybe an even better example, look at that. And that shows you that over 3 years or something like that, you've gotten virtually no returns. That's part one. If you're invested right at the peak, at the expensive valuations. Similarly, for a behemoth like DMart, and just look at what the stock has done. A brilliant stock. Everybody shops from there, from the stores, but it's virtually flatlined in a minuscule way for the last so much of a long period of time. Ashwini, I'm inclined to ask you, since you've been around, as you said, for such a long time. Private banks, now they are performing fundamentally. The issue has been that the supply from the FPIs has been large. What would it take to turn the fortunes of these banks around? Would it need to come from FII flows for these stocks to start performing?
Yes. The simple answer is yes. I mean, it's a little bit of a circular logic. But what happens is that the domestic investors, when I'm talking about the large behemoth of the large body of retail investors, they tend to take price momentum into account. And I'm not looking down upon price momentum as a strategy. I mean, one of the best explanatory factors for a single stock performance is actually momentum, if you do factor analysis over a long period of time. So momentum is the way a lot of people invest, and that's fine. And for the momentum to change in private equity, in private sector banks, you will need foreign interest to come back, because these are very significantly owned by foreign investors. There are very large, these are very large free float companies. So unless there is a significant shift in institutional buying for private sector banks, it's difficult to see how the price momentum will change. Having said that, I'd like to draw a parallel here between what you just spoke about on Zomato and on DMart. And I don't own those stocks. I don't usually talk about specific names. But here I'll take the liberty of using a few names. HDFC Bank, a position that I own. Kotak Mahindra Bank, a position I don't own. If you look at these names, they were very expensive towards the end of, let's say, 2019, because we were coming out of a decade of highly stressed bank balance sheets, and these two banks managed to keep their balance sheets very, very clean. As Mr. Kotak has always has often said that they were the cleanest shirt in a dirty laundry basket. The valuations for them were very high. And why I'm linking this to your Zomato comment or your DMart comment is that valuations are very important at the point of investing, because you may buy a great company, but if you just pay too much for it at the time of going in, you might be stuck with no returns for a period of 3 to 5 years. And that's exactly what has happened to some of the private sector banks. And Neeraj, you spoke about private sector banks as a body, but I don't think that's true for all the private sector banks. I mean, if you look at some of the other names within the private sector, they've done very well over the last 3 years or even 5 years, dare I say. It's the 2 or 3 names that had become ridiculously expensive that have failed to perform for the reasons that valuations have finally caught up with them. And I think in the case of HDFC Bank, again, to reiterate, it's a position that I own, it is facing the merger-related challenges and might take some time to sort itself out. But I think if we were to look at a 3 or a 5 year picture, I think, this might actually not be such a bad time to invest into them. But of course, the momentum has to return.
Okay, fair point. And yes, I stand corrected. It's not that the whole body is not done well. There are some exceptions to the rule as well. Just that everybody gets caught up in the commentary around HDFC Bank, Kotak Bank and their likes. Maybe even an ICICI Bank in the recent past, if you will. Okay, so that's one. The other interesting study, Ashwini, that was done by Bernstein, that PSU stocks, which have again, for the month of February, kind of gone completely quiet after a breakneck rally for the last few months. And their ownership analysis seemed to suggest that FPIs have largely avoided this pocket. It's largely been retail DII investors which took this space higher. Now it's flatlining because of expensive valuations, save for maybe PSU banks. And difficult to assess as to what happens there. But the ownership analysis was interesting. So my question to you is, because domestic flows continue to remain strong, but the flows are managed by very smart mutual fund managers, if you will, do PSUs as a body, because of the valuations, largely stay flatline for the next few months until earnings catch up?
I would think so, selectively, because some of the PSU stocks, if you were to draw long-term price to earnings or price to book charts for several of these PSU names, they are now trading pretty much at the upper end of the valuation range. And this includes the period of 2006 to 2008, which is when these stocks had done phenomenally well. So I think valuations are now pretty full. but these companies are doing well because the way the administration has kind of turned around, in the sense that from what we hear, there is not that much interference from the government in the independent running of these PSUs, and some of them are pretty well run. But I think the valuations are now expensive in several pockets, and they might take some time to catch up. I think the PSU banks, there are still some selective pockets where valuations are not very expensive, but again, in the historical context, they've always traded at a discount to private sector banks, and I think there is good reason why that's the case, and that I don't see that going away. So yes, my sense is that PSU stocks are also pretty fully priced at this point.
Okay. Viewers, lest you think that I'm talking only about the ones which are overvalued, including the disconnect between economic growth and market. What we'll do after this break, we're going into a break. After this break, we'll try and talk to Ashwini Agarwal about where does he see opportunities in a market where he believes largely could give a flattish performance over the course of the next few months/quarters. Stay tuned, we'll be right back.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Back with Talking Point in conversation with Ashwini Agarwal, founder of Demeter Advisors. We were talking to him about what may likely not do well or maybe may give a flattish performance. Includes the wide market, includes maybe banks, to an extent maybe private banks selectively, but good time to invest into them because at some point of time the underperformance will end because they're doing well fundamentally, just that the supply has been high. Or PSU stocks, which have actually rallied quite a bit and they need earnings performance to catch up. Now, Ashwini, I was trying to understand, therefore, in such a scenario, what looks attractive enough to invest in, aside of maybe say select private banks wherein there might be opportunity? What is it that is looking attractive?
So, Neeraj, if you look at a lot of the chemicals space, right? It was hugely in favor immediately post-COVID. Prices for a lot of base chemicals went up a lot and they made humongous margin gains. And over the last 12 months, all those margins have been given up, even though stock prices haven't given up all their gains, but they've given a substantial part of their gains. But the core story hasn't changed in the sense that China Plus One is still a reality. I think globally outsourcing is moving to India. We are getting a lot of attention for being in the space that we are as a stable country and so on and so forth. And in addition to the fact that China also wants to vacate the space where value addition is lower from their perspective, where they're focusing more on electronics and cars and EVs and battery technologies and so on. So I think in base chemicals, I think where prices were down significantly because of excess inventory built up immediately post-COVID. I think you're finally starting to see an end to that inventory cycle. And I think margins will normalize, growth will come back. So that's one space that I'm quite excited about. Pharmaceuticals, I continue to be fairly excited about. I think here again, the generic pricing environment is a lot better is a lot better today than it has been in the last 3 or 4 years, and demand is also pretty decent both in India as well as overseas. So I think that's another space that I'm looking at quite favorably, especially the generics space. I think in several exporters, smaller companies, the China Plus One narrative is real. There's a huge opportunity for them to win market share on a global basis. And if you have companies which are well managed with good balance sheets, new capacities in place, I think you'll be surprised by the kind of earnings growth that will come through over the next 2 to 3 years. And the Indian market always rewards earnings growth. So if there's a company that's growing at 20-25% compounded annual for the next 2 to 3 years, you should always expect the valuations to go bananas at some point. So I think those are some of the spaces that are looking quite interesting. I think as a defensive trade, I would say consumer staples in India and IT services are both places where you're likely to lose less in case the market goes into a correction. I mean, these are not fancied places to be for obvious reasons, but I think valuations are reasonable. There is good, management in place. Cash flows are very, very strong. So I think, on a relative basis, these are places to hide.
Are you defensive in your portfolio? Have you added these names for that particular virtue?
So, Neeraj, not IT services, but I have added a couple of consumer names because I do think that rural consumer demand should come back because the inflationary shock that has hurt the demand over the last 12 to 18 months is now beginning to fade. So I'm hopeful of that outcome. But I have turned defensive in my portfolio allocation in the sense that I'm sitting on about 15% cash, which is not normally the case. So if that reflects my view on the market, that's something that I'd like to share with your viewers.
Yeah, thank you. But so viewers, the other point is IT is good, but Ashwini is still sitting on cash as opposed to deploying that money into IT names. So maybe clarity from the companies at some point of time around turn of discretionary demand. Maybe that is a factor, but yeah, certainly a pocket to focus on. Now, a couple of questions, Ashwini, follow-ups to your first answer, which is pharmaceuticals, for example. If I look at the last 3, 6, 9, 12 months performance, at any point of time you bought into any of the generic names, Sun Pharma, Dr. Reddy's, Lupin, etc. Lupin has been a poster boy, but the others too, you've made money. So these stocks have rallied. It's not like they've stayed quiet in the last 12 months. You still reckon that there is value in investing in them?
I mean, the value is less than what it was 12 months ago for sure. But I think they're not expensive. They're reasonably priced and the earnings growth is strong. So, if you're looking at the whole market, which is expensive, you buy you go into spaces where valuations are reasonable and earnings is decent. So, it's not like 2015, 2016. If you remember, 2016, there was a cover story when Sun Pharma's market cap briefly had eclipsed that of Reliance Industries. The valuations were nuts back then. So it's nowhere close to that. I mean, valuations are okay, they're fine. I mean, they're in their 20s. The earnings growth story is pretty solid for some of them. larger companies especially, there are differentiated portfolios that they've been able to create. So these are not pure run-of-the-mill generic companies anymore. They are also significantly competitive at what they do. Similarly, in the upstream chemicals and the downstream chemical space, I think there are niche products that companies have been able to build. I think one of the things that we underestimate is the amount of confidence in Indians in general have. So people don't shy away from investing in R&D with uncertain outcomes, as used to be the case 10 or 15 years ago. And that's starting to pay off.
Oh, that's true. I mean, we've seen so many pharma companies, even in the CDMO space, talk about making large investments with the returns not being necessarily coming in the next 12 to 24 months, but building out for the longer term. So very well put. Thanks, Ashwini. I have one final question. Your conversation with us on Insight, when we spoke about a particular real estate name, evoked a lot of responses to our social media team and our handles. I'm trying to understand, are you constructive on real estate per se as a pocket? We had spoken back then about Max Estates. Was it a particular bottom-up idea, or are you still constructive on Max and the real estate space at large?
Okay, so first, due disclosure, I am a shareholder in Max Estates. So that's something that your viewers should know. Second is, I am constructive about real estate. Okay, real estate has long cycles. At least that's what I've experienced. And typically, the real estate cycles start 1 or 2 years after a bull market has set in, and they continue for much longer than typical bull market cycles in the equity market. A better home is a universal desire. And when people make money, be it by way of ESOPs, be it by way of investments, smart investments made by them in the market, be by way of listing companies and benefiting from them, as has been the case for several promoters, both on the SME as well as small and mid-sized companies on main bosses. The desire to buy a good home is a universal desire. And I think real estate will continue to do very well for the next 5-7 years. Picking stocks in this space is very difficult because these are long gestation projects, and very often, balance sheets get into trouble, projects get into trouble because of regulatory difficulties they face. So, on a bottom-up basis, I have historically found it very difficult to find companies. And Max Estates, about 1.5 years or so ago, or maybe 2 years ago, when I first looked at it, looked reasonably appealing from that standpoint. From the kind of governance checks and balances they put into place. And it's a unique company in the sense that it has a large portfolio of rented properties that bring in regular income, and a developmental portfolio and a development portfolio as well, with a very strong discipline around balance sheet. So it's a bit of a unique story, and that's the only real estate play I own. But I'm positive on the space, except that I'm wary of investing in individual stocks for the reasons I outlined.
Got it. Ashwini, so good talking to you today. Thanks for joining us and giving us your thoughts on a variety of issues. Have a great trip as you're heading out tomorrow. Looking forward to talk to you soon.
Thank you. Thank you, Neeraj. Have a nice day.
You too. And viewers, thanks for tuning into this edition of The Talking Point.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Benchmark indices gained marginally to trade flat after opening in the red. The Sensex below 72,800. Meanwhile, the Nifty trades around 21,100. Sectors trade mixed. Real estate, IT and consumer durables lead the gains. On the other hand, financials drag. And PayTm's Vijay Shekhar Sharma steps down from PayTm Payments Bank. Board moves comes ahead of March 15 deadline of the RBI to wind up its operations. An IT giant TCS emerges as the top Nifty gainer as the UBS upgrades the stock from neutral to buy, citing large deals and revival in the BFSI and as growth drivers. And shares of Dixon trade lower in trade as Jefferies downgrades the stock to underperform with a revised price target of 5,920. Hello and welcome. This is Samina and you're watching the F&O show where we take you through all the action in the F&O market. But first up, a quick check on how the markets are doing. The markets are trading flat pretty much on the index this morning. Agam is standing by with more on that. Agam, it's another morning of consolidation for the street.
It certainly is, Amina. Well, we would keep an eye on the Nifty and how things are panning out, currently at 22,100. But remember, we're also in the monthly expiry week, which means a lot of the equation with respect to futures comes into play. That said, we're also looking at the FinNifty weekly options expiry, so perhaps markets could be a tad choppy, and that has in fact turned out, at least so far, at least as far as FinNifty goes, but I'll come to that in just a moment. For now, the Nifty is flat. We're seeing unwinding in open interest, and this perhaps is also to a certain extent expected, considering we are in the monthly futures of expiry, because of which we will start seeing a lot of unwinding in February futures. As far as the Bank Nifty is concerned, the picture may not be very different. In fact, it is actually, because we're seeing about a 9% increase in open interest there, even as we see a 0.4% correction as far as the spot is concerned. Moving on to the options market, coming down to the Nifty, as one might expect, a lot of traction, further out from where the current market is. So the Nifty is currently at around 21,100, 21,200. We're seeing a little more, writing around 21,900 on the lower end, and on the higher end, continue to see a lot more traction around 22,500, 22,600. So these are largely the ranges that we can expect the Nifty to move within. But in terms of today's day of trade, naturally, as one might expect, a lot of consolidation coming through, which is why around the 22,100 mark, we are seeing a little more of traction with respect to calls and puts, more in terms of puts than calls. So keep an eye on 22,000. And of course, Fin Nifty is also in focus. Well, we're keeping an eye on how things are panning out around 20,900 and 21,000. Those are the levels around which we could potentially see the Fin Nifty see a substantial amount of resistance, though it's currently trading a few points shy of the 20,600 mark. That's something which is going to be a little bit of a pivot in today's day of trade. Now, there's plenty of other factors that you need to keep an eye on, but Samina, I reckon that today it'll be a lot more about stocks than indices.
It is a lot about stocks. This morning, a couple of stocks that are gaining in the broader markets that are worth a mention is E-Strip Planners, it's up 5.5%. Swan Energy is up 5.5%. JBM Auto is not looking too bad. Insurance names are up and about. So GIC, New India Assurance, ICICI Lombard are all trading with gains of 3 to 6% each. You've also got RITES that's up 3%. Sona BLW is having a good morning, up 3.5%. Jamna Auto Industries, relatively small but big volumes, and the counter trades the gain of about 7%. On the sell side, you've got Adani Energy that's seeing some profit taking after a sharp move yesterday. Devyani International on back of the block deal is down 3%. Varun Beverages, Dixon on back of the downgrade, along with Whirlpool is trading lower. In fact, all the broader market Adani names are seeing some profit taking after a very sharp trade that we saw in the session yesterday. So that's largely what the market is. It's quiet. It's relatively quiet as compared to other trading weeks that we've seen. But we have with us our guests now joining in. Aditya Arora and Richard Jain both join in for a view on the markets and their top trading strategies. Richard, I'll start with you first. It's a monthly expiry, last 3 days of trade. Markets would have liked to maintain some momentum to keep up with how the Feb series has played out so far. In your opinion, where are you eyeing expiry?
Very good. Good morning, Samina. Very good morning, Agam. Well, if you look at the data, then the data indicates that we may see some range-bound activity for next couple of trading sessions. So ideally, I'll just start with the FIS FNO data first. So FIS have covered some of the short positions in last 1.5 weeks. They started this series, February series, with a long-short ratio of just 22%. And now with around 108,000 net short contracts in the index futures. But now if you look on as on yesterday's data, their long short ratio has improved to 45%, and their net short positions, which were around 108,000 at the start of the series, they are just 29,000 contracts. So clearly this up move which we have seen in the second half of the February series has been more because of some short covering move, but we have not seen any significant longs additions which would support markets to go much higher from current levels. Secondly, if you look at the options data, then a lot of writing has been seen on both calls as well as put side. Well, 22,000 put option has significant open interest outstanding, indicating that the downside should be limited, where 22,000, 21,950 should be a good support. On the higher side, 22,200, 22,300, both these call options also have witnessed good amount of open interest increase in last couple of sessions. So this is clear indication that on the index front, we do not expect any trended move on the either side. I think markets would trade within this range, where more stock-specific opportunities would be there.
Okay. All right. Aditya, good morning to you as well. How are you reading data and how are you trading these indices?
Very good morning. I think market data is such that it is suggesting a range-bound market. A lot of positive cues and negative cues lined up at this point in time. So 20 to 100 would be acting as important pivot point for the market. And I see bearishness when market closes below 22,000. So below that mark, I see market becoming weak, and post that we can see correction till 21,800. Until that point, I think it's a neutral market, and there isn't much action at this point in time.
Right. What's the trade, Aditya, on Bank Nifty this morning, if there is one?
So I'm avoiding any trade on indices today. But if I had to take one probable trade, then I would short the call option in Bank Nifty. 47,000 call option in Bank Nifty, March expiry with 50% stop loss. So that would be one of the trades which one can take.
Okay, Ruchit, what about you? How are you dealing with the Bank Nifty? Also, of course, we have the Fin Nifty expiry. Maybe if I could combine that question together, how would you play the Fin Nifty on an intraday basis as well?
So frankly, I am not expecting any significant move on the either side on these indices as well. No, Fin Nifty is trading around that support of 20,500, and on the high side 20,600, 650 is the resistance for intraday. So I think we would trade within this range. In case if anyone wants to trade for the intraday, then I think one can go take a short straddle with selling 20,500 put option, and on the high side 20,600 call option. So I think today's expiry would be within this range. In case if we see a breakout beyond this range, then one should look to exit in the later half from this strategy.
Right. Aditya and Richard, stay with us. We'll take a quick break. We'll come back. We'll talk stocks, because that's pretty much where the action is today.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment.
all you have
Welcome back. This is the F&O show, and we take a look at all the stocks which are buzzing in trade in the futures and options space, specifically futures where we are in fact seeing an increase in open interest. So that's the list in front of you. We have Muthoot Finance, which is advancing by, well, it's actually marginally in the green, but it is looking at a substantial increase in open interest towards what were not necessarily longs, but sure, a lot of increase in OI there. But shorts building up in Berger Paints. SBI and ICICI Lombard, of course, are the other stocks which are looking at longs. And among stocks which are seeing unwinding in trade, well, we are seeing a bout of short covering for Atul Limited. But save for that, something like an Oracle Financial Services, it's red, but it's marginally in the red. And the same for something like, BPCL. So the declines are not substantial, but we are seeing unwinding there to the tune of maybe 5 to 7-8% out there. And of course, PNB is the other one, which also is in focus today. But let's move on and take a look at what our experts have to recommend in today's day of trade. Aditya, I come to you. What's on your radar?
So Agam, my first pick is TCS. I think it's the lone wolf in the pack and very strong candidate in today's market, which is standing in green. So I think it's a good buy, and we'll take a bullish trade over there. We'll sell 40-20 put option, 4,020 put option at 17.05. 34 is the stop loss and 0 is the target. So it's a neutral to bullish strategy over there. And second stock is PFC, wherein I see little bit of bearish patterns. So over there, we'll sell 425 call option at 1.15, and stop loss is 2.30 and target is 0. Both these options are in Feb contract. So there are just 2 days to go for the expiry, and we have taken option selling position. So if the view goes right, you get the money in 2 days.
Right. You get the money in 2 days if the view goes right. Constructive on TCS. Richit, you've got a call on Bharti Airtel. You want to take us through what that is?
Yes, so I have in fact a couple of buy recommendations. The first is a buy call in Bharti Airtel. Recently, we have seen that the prices have corrected after forming a high of around 1170, and the stock is now trading around its 100 EMA support. And if we look at recent price action, then in this entire corrective phase, we have not seen any significant short formations. So the stock is around its support, so the risk reward ratio is quite favorable to take some contra longs over here. Short-term traders can buy with stop loss below 1080 for probable targets around 1170. And my second pick is a buy call in ICICI Prudential Life Insurance. So ideally, a long consolidation has been seen in this stock too. And after the stock has given breakout from a falling trendline resistance technically, we have seen some short covering as well in the stock. So I think this stock has potential to go higher. One can look to buy on some dips in the range of 534 to 532, keeping a stop loss below 523, expecting targets around 547 followed by 554.
Okay, all right. So that's as far as Richard's calls are concerned. But to talk to you all about a handful of other names which are, of course, in focus at the moment. Let's start off with BPCL and take a look at what's happening there. We've been talking about BPCL of late quite often, man. Of course, it's not just BPCL; it's the entire OMC pack. Of course, one of our experts has also a view on IOC today, but. Let's take a look at how things are panning out for BPCL, and I want to actually take a look at how things are going on for the last 1 month, because BPCL certainly has been one of the bigger movers in the Nifty 50. There you have it. That's your 1 month gain out there. Now, that said, in the last seven odd sessions, we started to see just a little bit of consolidation coming in through as far as this one goes. Rachid, coming back to you on BPCL, do you think that there is some amount of consolidation now on the charts for this one, or do you think that there could potentially be further upside? If there is upside, at what level would you perhaps initiate longs, and otherwise at what levels would you initiate shorts?
So although OMC started rallying in the first week of November itself, BPCL was somewhere around 340 levels in the first week of November. from 340 to 680 without any meaningful correction. We have seen the stock rallying in last 3 to 4 months. So I think this calls for some consolidation, at least in the short term. And usually when the trend is very strong, we do not witness any significant price-wise correction, but time-wise corrections generally happen to relieve that overbought setups. So I think in the near term, we would see some time-wise correction or what we call even a consolidation phase. And once that overbought momentum setups are cooled off, then I think we should see a resumption of the uptrend. So if you look at from a very short-term perspective, not expecting any significant move on any side, but yes, if one is looking from next 2 to 3 months perspective, then I think the trend remains bullish, and this remains a buy on dip. One should keep a buy on dip strategy where around 600 to 580. This is a good range where one can look for buying opportunities there.
Aditya, another sector or another two stocks that have been doing quite well in the last few days has been Bharat Dynamics and HAL this morning. Both defense players. How are both those counters looking? Are they looking ripe for a breakout, and hence a long call could be recommended?
I think the stock is, if we talk about HAL, the stock is facing resistance at levels of about 3120, 3100. And we can also see a lot of call writers are active at 3100. The open interest is pretty high. Hence, that is acting as resistance. I would be bullish on the stock only when it crosses 3125. Until then, I think probably it could get knocked off from this important resistance level. So currently not bullish on it, but I would look for a short selling opportunity over here.
Oh, a short selling opportunity on HAL. Well, a few other names that are looking really good this morning is, of course, the likes of a TCS, but on the sell side, you've got Dixon and Wockhardt that are looking weak. Richard, anything on Dixon or Whirlpool, not Wockhardt, pardon me?
So we have seen a gap down opening today, but the follow-up move would be more important to see, because the overall trend has not changed with 1 day of correction. And 6,500, 6,400 is a good support range for the stock. So I would not suggest any trade over here, but in case if we get any kind of dips towards 6,500, 6,400 range, and if there is no high volumes or short formations in this corrective phase, then I think one can look for buying opportunities and declines around the support.
So Dixon is a really interesting one, because what's really happened is that a few days ago, and to be precise, last week Monday, we saw Dixon move out and break out of a range within which it was trading, and in fact it broke a near-term high. From there, it moved on to the mark of 7,000, and today it's taken a little bit of a backseat. Of course, we do have a brokerage downgrade, but that downgrade is still a positive as far as Dixon is concerned. The concerns are around valuation. So it's certainly going to be a very interesting stock to watch out for, specifically with respect to the kind of moves that we've seen in Dixon off late. So we certainly will keep an eye on that, and of course the levels that Ruchit has provided us with. But let's also talk about something like an HDFC Life. Now, HDFC Life is another very confusing one. It does have a life of its own, and let's take this up with Aditya. Aditya, how would you trace this one? I know this is firstly a stock which usually tends to consolidate a lot of long periods of doing nothing, and then suddenly you'll have a spurt coming through. What are your observations here?
So if you talk about HDFC Life, then I think it's a lifeless stock. It consolidates most of the time, but it has got a new life right now with a good jump of 2% today. And that is accompanied by good data points. So I think Life is coming back to HDFC Life, and it's looking good at 590. And it can be bought at this point in time, and stop loss should be 570, and target would be 610 to 630. So other F&O strategies which could be deployed in this stock is that put writing can be done in this counter, futures could be bought, or credit spread strategies could be done, but the bias is neutral to bullish in HDFC Life. At this point in time, it's stop loss of 570.
There's a lot of life there, Aditya, but thank you, Aditya, and thank you, Richard, for joining us today. It's a morning of consolidation with lots of stock-specific action, like we've discussed with Richard and Aditya both. Thank you very much. Well, a quick move on from there, US tech stocks have actually rallied, and how? We at NDTV Profit bring you a special series called The Magnificent Seven, where we tell you all about the top 7 tech stocks that have impressed Wall Street. My colleague Varsha has on her list has a market cap that represents 45% of India's GDP. Over to you, Varsha.
So hi Samina, so as you all know, we have started this Magnificent 7 series, wherein yesterday we spoke about Alphabet, known as Google, but today we're going to talk about a company who is 45% of India's GDP. Now if you see, this company is part of everyday's life. Like they always say, they start from A to Z, you get everything into their platform. The name of the company, which has a market cap of almost 1.8 trillion, is Amazon. Here you go, A to Z. Now, this company, if you see, they started in 1995 from a single product. They used to sell an online bookstore. Now, if you see, you get everything on their platform. Now, the man behind this successful company is Jeff Bezos, as you all know. We all know what Amazon does, what is the business model of this company. But if you see, if I were to give a description about what products or what their sale comprises of, so they sell through 2 segments. That is, one is product segment, which you have got revenue from sale of products, then shipping fees and digital media content. And from service business, if you see, they do have sale from AWS products. That is, they are into cloud computing, which nobody knows of that. It contributes almost 15% to their business. Then they do have advertising services, Amazon Prime membership fees, and digital content subscriptions. Now, if you see, what is the reason that they became so big? So what is the pillar of growth for this company? So one is they are obsessed with customers. So they are not competitor obsessed, but customer obsession. Now if you see, till now, the vision for the company has been that they have to become customer-centric company in the world. And just to give an interesting insight, whenever they hold a board meeting, so they keep a chair idle into the board meeting, and they keep that chair idle for customer, and they ask their board members to think from the customer's perspective, point of thing. If customers were sitting in this board meeting, what customers would want? So, and also Jeff Bezos himself calls Amazon customer service and just to check whether the systems are in place or not. So this is a reason that the company has become so big that if you see the revenue grew over 64% CAGR in last 24 years, and they, for the first time in 2001, they did convert their revenue into profit. They did turn profitable, but has the journey a very smooth journey? No, they did see bumpy roads. If you see, between 2000 to 2002, share price of Amazon fell almost 95%. But shareholders did stick to this company, and if if you would have invested $1 in IPO, that $1 would have become almost $2,000 as of date. Now, has this journey been stopped? No. The company have a lot of growth prospects, even if they are actually on track to launch their first production satellite in the first half of 2024. As they say, picture abhi baki hai mere dost.
All right. Varsha, that's so true. Jeff Bezos is a story in himself. And I think, Agam, he had an interview recently where CNBC US asked him that what was the secret sauce? Yeah. And remember, this company was a loss-making entity in 1999. And he said, obsessed with my customer, and that's all that matters. And if you're an investor investing in the company, in the long term, the only thing that matters is customer. And that's what Amazon is all about.
Right. And what is also very interesting to me is that while the general assumption would be that they're making a substantial amount of their revenues from retailing, well, a big chunk of their revenues have now started coming in from Amazon Web Services. And I'm sure a lot of traders out there who are watching us will be very well aware of all that Amazon Web Services can in fact offer in terms of their trading as well. And that's just like one aspect of what Amazon Web Services is used for. Well, it's certainly a company to watch for, and we'll continue to keep tracks on that one. But on that note, it's a wrap on the F&O show, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
don't listen to
Good morning, welcome. You're watching the Small and Mid Cap Show. I'm Harsh Saita. This show we generally cover specific small and mid cap names and some interesting ones that we always try to speak with in terms of what they are up to, future growth potential, what the management seems to be highlighting in terms of risk factors. Now today we have an interesting management, Ugro Capital. We had them last month as well on the back of numbers, but this month we have an initiating coverage note by Systematics Institutional Equities. They've given Ugro a target price of 335 rupees a share and they've given it a buy. Current market price roughly 270 rupees, so a considerable upside that they see in this one, a 20% plus upside. We have with us Mr. Sachendra Nath, who is the Managing Director at Ugro Capital. Welcome firstly to the Small and Mid Cap Show, sir. It's a pleasure having you here.
Thank you, Harsh. Thank you for having me.
Right. So, several guidances issued by you as to where you see Ugro in the next year and a half to 2 years at least, so FY25 and maybe FY26. You're planning to double down on the book. You're planning to make sure that OPEX starts to come off significantly. Current OPEX ratio around 53%, expected to come down to 45%. Could you talk us through what could possibly impact some of these metrics which you have pointed out? What could the downside risk to some of these factors be?
Harsh, we, as the builders of business, we are always motivated with the, long-term opportunity in front of us. Any, guidance for the quarter, 6 months or a year, actually they are good to have, but we have come to a time where we continue to believe that this is the decade for small businesses in India. They continue to power India's economy, and the level of digitization which has happened because of or the formalization of MSME, because of the advent of GST, the digitization of banking, maturity of bureau, can actually create consumer financing equivalent MSME financing in India. And we continue to work very hard on that. And we believe that UGRO is all set and poised to be the market leader when it comes to MSME financing in India. Now, with respect to the guidance and what could be the risk, obviously for a non-bank finance company, not necessarily just with us, for the growth, the liquidity is always one of the biggest concern, because you want to grow at a certain pace, but finally your growth, unlike banks, which is dependent upon the CASA and the public deposit, is to some extent dependent upon the liability which comes from the bank and other financial institution. For UGRO, actually, that continues to be a risk, as you might have seen the narrative from RBI saying that banks should lend less to NBFCs. They have increased the risk weight. But from day one, we have diversified that because we are one of the largest co-lending NBFC in India. We have largest DFI financing. We have just completed our public issue of debt, and we also have bank debt and small NBFCs debt, large NBFCs debt to us. So that continues to be a little bit of a pressure point, but I think so that we will be able to manage that and continue to progress as we have been progressing in last 3-4 years.
Right, sir. I appreciate the candid nature of that answer because it's a difficult question to answer, especially if it's the first question. So I appreciate that. Let me also try and understand as to what is the likelihood of this kind of growth continuing. Your AUM growth has been extremely robust over the last couple of years, 3 years maybe. You're currently at around 8,400 odd crore in terms of on-book AUM. And, you continue to grow at 10% sequential. Your roadmap to 2025 suggests 20,000 crore. A cool off in MSME, would that mean that this 20,000 crore would not get hit?
So first and foremost, the 20,000 crore is, we don't look at this purely in terms of a financial year. 20,000 crore target is a target for our teams to have an aspiration to achieve. I think so by end of 2025, not the financial year, we would be there, and I have no doubt about it. The map for that, and I constantly keep hearing that we have been growing very fast, but that's not true actually. This year, so you should look at it in the context of who we are and how we have built. This is a company which invested very heavily into its OPEX. We raised our capital in 2018. We started our business in 2019. We during the period of COVID, we expanded. Pre-COVID, we were a 120 people company. Post-COVID, we were a 1,500 people company. And since then, because of the low base effect, we grew faster. But beginning of this year, at April of 2023, we did a 550 crore of monthly disbursement. And for the whole year, we have been just doing that only. So our monthly volume have remained more or less static, and that is by design. If you look at the math, if you'll exit this March at the same 600 crore, multiply it by then another 12 months, so 7,200 crore of gross disbursement and around 2,000 odd crore of repayment, and our incremental capacity of another 100, 200 crore would take us to midpoint, and so on the next year. So I don't think so we have been growing very fast. We are growing to what our capacity is, and we are now putting effort into areas which may not be a big leader in terms of the number on AUM growth, but leader on the profitability increase. One is we are expanding our micro enterprises network. We were at 75 locations. We added another 75 locations. So by end of this March, we will be 150 locations in India in 8 states. And we intend to expand that network to and take it to around 250 odd location by end of FY25. And also we are expanding our retailer financing business, which is again large volume business, quite exponentially. We don't have a good sense in terms of what would be the number, but we are working very hard. Probably in a quarter we'll be able to tell you. So I think so in summary, we continue to remain motivated with the opportunity. We think the MSME economy, and you should read through our MSME Sampark report with DNB, continue to remain very buoyant and resilient. And we think so that Ugro has all the characteristics to make it very big.
Sir, you've spoken about business growth remaining pretty much intact. But would competitive intensity coming from banks impact margins going forward? Because banks are coming into MSME in a big way. You have PSUs as well as private sector banks doing solid MSME lending. The opportunity seems large even for them.
So first and foremost, I just want to remind your viewers, this 20,000 crore, we look at as calendar year because this is the target for our teams and as our aspiration. So I think so by end of 2025 year, we should be there. That's our view. With respect to the contraction of margin, our contraction of margin is not a function of a competitive intensity. The total addressable demand is 90 lakh crore. Only 20% of that is formal credit to MSME. Within 95% of the balance 60 lakh crore is between the customer band of 15 lakh turnover to 15 crore turnover. So no degree of competitive intensity, would contract the margin. The margin is a function of our cost of borrowing. So our cost of borrowing, if it increases, then the margin decreases. And if the cost of borrowing decreases, then margin increases. So that is the play. I think so by another 2 to 3 quarters, we would start seeing little bit of softening of the rates, and that should improve our margin rather than to contract the margin. And second is that we are constantly expanding into the geographies and areas where banks are still not there. If that would have been the case, why 9 banks would be doing co-lending partnership with us? The reason for that is not that banks are not capable. They are very much capable. Banks have much larger market to address. They just don't do MSME financing. And banks predominantly focus on customer within the band of 50 crore turnover to 250 crore turnover, which is the medium size MSME rather than the small and micro. We focus on micro to little small, and that is still an area of lot of under penetration.
So my last question is with regard to your shareholders. You have NewQuest, you have Clear Sky, you have Samena, cumulatively holding roughly 40% of the share capital of Ugro. Any thought or timeline with regard, and any conversations you've had with regard to when they are expected to exit?
So we have 3 large shareholders. One is Denmark government, which owns roughly around 17%, which is called IFU. Then we have TPG NewQuest, which another owns 17%. We have ADV, which owns 17%, and we have Samena, which owns roughly around 7%. So both 4 of them together own around 54%. Look, IFU has entered in April of 23. And as an arm of a sovereign government, they are a long holder of any equity. So I continue to believe that they will be here for many number of years to come. With respect to TPG NewQuest, ADV, both of them are now 5-year-old investment. They came in the first round alongside me. They co-created this business. And I think so in another 2 to 3 years, they would like to monetize some of their investment. The timing is still unknown. I think so their returns are not right now. Our pricing and the value which has got created doesn't justify them for an exit. Samena actually went down to 5% and now have increased back their shareholding. I think so with continuous progress of our business, these investors would have an opportunity to exit to another institutional investor, and a lot of new institutional investors would come into our case. I don't think so that this Ugro is designed to build as an institutional play, independently managed and independently supervised and professionally managed company. And like many of our peers, large banks and others, large shareholders entry and exit market would give them an opportunity to do that.
Fully take your point. Thank you so much, sir. It's been a pleasure speaking with you. It's been maybe a little bit of a difficult conversation, but we've just tried to highlight some risks. And thank you so much for giving us all of that perspective on what the downsides also could be. Thank you for that.
Thank you. Thank you so much, Harsh. Thank you.
Right. So with that, we're completely out of time on this segment. More on the other side after this very short break.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talk.
Welcome back. You're watching the Small and Mid Cap show where Paisalo Digital is in focus on back of considering fundraising through various modes. And today we have with us on our show Mr. Santanu Agrawal, Deputy MD of Paisalo Digital. Hi, Mr. Santanu. Welcome to the show. Well, my first question to you is that fundraising is on the cards. Can you give us a brief as to where these funds will be used?
Namaste. Thank you for allowing me to come on the show.
Yeah, so we've just recently got the board approval to go ahead with the QIP. We are planning to use the QIP primarily for the expansion of the book. So we are targeting a mix of on-book and co-lending exposure to be increased on the book through the money being raised through the QIP. So that's the primary plan.
Right, and your CAR is approximately at 37%. If your CAR is so healthy, why are you raising funds again?
So the CAR has always been healthy. We have always maintained that we need to maintain adequate capital levels. It allows us to take on certain products and parameters despite the regulatory changes that may occur at a future point of time. That's reason number one. Number two is that despite the CAR being so heavy, the markets are performing really well, and we feel it's a good opportunity to enter the market and raise some primary money, because the last time we did a primary issue was in 2010. So we have not come into the market in a long time. We come very rarely, but we come and we give a very huge upside opportunity to the stakeholders and the investors who participate in our issues. So yeah.
Right. So like you rightly mentioned, your CAR has always been healthy. Well, because your CAR is healthy, you can always fast track your lending aspect, right? So what is the AUM that you're targeting at? Like, let's say in the next 3 years, what is the AUM target that you're aiming at?
So currently we are at an AUM of about 4,220 crores. We were up about 40% on a year-on-year basis in Q3. We are targeting very strong numbers with a very strong CAGR return to all the investors who come on board. But because we are listed, I cannot give a projection number which has not already been disclosed. So, but all I can promise is it will be a good journey.
Right, but if there is any CAGR in your mind, any specific percentage at which you plan to grow, if you can mention that?
So we are planning to grow stably at about 25-30% CAGR. That would be the ideal choice.
Right, so 25 to 30% CAGR growth in AUM is what you're aiming at. Okay, perfect. And also recently you had a collaboration with Bank of India. Like in this pact of with Bank of India to provide services of business correspondent, what does this mean and what value will it add to your organization? And are you also looking for such collaborations with other banks?
Yeah, so basically to ensure that our business thrives in the present and the future landscape, we have undertaken several actions. So one of the key points that we identified was that we possess the capability of incorporating low capital or no capital revenue streams directly into our operations. So one of the things that we are doing for it is tying up with banks for offering business correspondent services. They allow us to generate a revenue without investing significant capital or basically partaking significant capital requirement. So we already have one national business correspondent tie-up with SBI, and we have rolled out over 800 locations with them as of Q3. This is the second tie-up that we have done with Bank of India, and we are very open to looking at new tie-ups. What we are seeing is that, recognizing the evolving profitability dynamics, we are understanding that we need a certain type of holding certain type of loans or credits or assets have become less lucrative and would require more capital requirements because of the significant stringent changes that have come. So consequently, we are basically strategically allocating credit and capital where it makes sense, while focusing on generating granular credit-related revenue and capital-related revenue to maximize profitability for Paisalon.
Okay. Also, in terms of customers, what is the run rate at which you're planning to grow at?
So we are currently at about 34 lakh customers. We added roughly 8 lakh customers on a quarter-on-quarter basis. In Q2, we were at about 28 lakh customers as far as I can recall. So the number of customers being added on a quarter-on-quarter basis have gone up significantly. As of FY23, we were at, I think, 15 lakh customers. In Q1, we were at 22 lakhs. In Q1, we were at 22 lakhs. In Q2, we were at about 27 lakhs. And in Q3, we are at 34 lakhs. So we have added significant amount of customers. On a cumulative basis, I think we added in about 3 quarters, 22 lakh customers in comparison to ending the last financial year at about 15 lakh customers. So the run rate remains extremely strong.
Right, I'm sure it's strong. Also, in terms of your new customers versus existing customers, what is the AUM contribution, like in terms of percentage or maybe in terms of absolute terms? New customers are adding more, or the old ones are adding more?
So it's a mix between all of them, between the both of them. Sorry, it's a mix between the both of them. So on a percentage terms, if I do it, so we maintain a credit policy where even if you are coming in as an old customer, there is a bit of a cooling period before we onboard you onto the system as another customer. This cooling period typically ranges for between about 4 to 6 weeks. So it's not like if you finish a credit line, let's say 24-month credit line in the 24th month, we will give you another loan in the 25th month itself. There is a little bit of a cooling period. This allows us to maintain very stringent capital credit requirements and credit parameters. So I would say the current split is about 55-45, where 55% is coming from about existing customers, and we are obviously adding about 45% new customers.
All right. And also in terms of touch points, what does the growth aspect look like? Where are you at right now, and what is the growth target that you're aiming at?
So as of, I think it was as of last year, FY23, we were at about 1,052 touch points. As of Q3, we are at 1,944 touch points. So we have had a very strong increase of roughly 890, 900 odd touch points that we have added in about 3 quarters. We are planning to close this financial year at about 2,000 touch points, which we are sure we'll achieve very easily. In terms of the additional increment that we are aiming in the touch points with regard to our geographic and product strategy, it should somewhere in the next 2 years, 3 years, it should be closer to about 10,000 touch points.
All right. And when you mention geographical expansion, any specific area that you're particularly aiming at?
So as of March of last year, we were present in about 9 states. Currently, we are present in about 18 states. And these 18 states also, we have not completely saturated. So the plan is to go within these states and just target that granular customer level revenue that we can generate out of them. So we don't have any immediate plans to add on an additional state. We are planning to go within the states itself.
Right. And I believe SBI is your major lending partner. Do you have any other lending partners? And if not, do you plan to expand this? What does the lending partner rate look like?
So we currently have 15 lending partners. SBI is one of the biggest of them. We have added a new lending partner last quarter. We onboarded Indian Overseas Bank on the lending desk. So that's been really well. In terms of growing the lending partners, we do not plan on adding too many of them. We are very comfortable between the 15 to 20 number. It allows us to manage the relationship really well, and it also allows us to focus more on the business and focus more on the credit that is being generated out of each of these lending partners than to run around in the market behind everybody. So we are quite comfortable. We have always maintained 12 to 18 lending partners on our balance sheet.
Well, that was the Deputy MD of Paisalo Digital, who has guided us that they're aiming to grow at they're planning to grow their AUM at a CAGR of 25 to 30%. It's all we have on this show for now. Stay tuned for more news and updates at NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money,
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of it.
Good morning and thanks so much for joining in. You're watching Ask Profit. My name is Alex Matthew. With me is Smriti Chaudhary and we'll take you through the next half an hour of trade. Now, this show is geared towards getting you answers to all of your stock-related questions. So if you've got them for us, then send them to us on the WhatsApp number that is on your screen right now, or in fact, on any one of the social media platforms that you might be tuned in on. Let's very quickly take you through how the markets are faring right now. In fact, it's a very narrow range for the benchmark Nifty 50 in trade today, and that consolidation from yesterday's session continues today as well. You have the Nifty 50 with trading near the high point of the day, but still with gains of only about 0.2% or so. Remember, trade across markets, risk assets around the world are seeing a little bit of muted action all through the week. And that starts, of course, from the US markets. In Asia as well, you're seeing a little bit of muted action. For our markets, you have the broader markets that are doing slightly better. And you have, in fact, the mid-cap 150 index that's gaining about 1/3% at this juncture. And you have the small-cap index, which is trading with gains of about 0.5%. I'm talking about the small-cap 250 index. And so, therefore, I would think that the market breadth is tilted just a tad bit in favor of the advances, or well, it's more or less even Stevens at this juncture. It was, in fact, earlier in the session tilted towards the advances. In terms of some of the sectors that you should be watching out for in trade today, let's pull up that screen as well. And in fact, you've got most sectors that are in the green today, and this is not what was the case yesterday. In fact, the biggest gainer today is the realty index, but it's up only about 0.9% or so, and consumer durables and IT also leading gains. Of course, we're talking about IT at the start today, and one particular counter, Tata Consultancy Services, and Smriti is telling you why that is.
Well, we're seeing TCS up in trade today. It was the biggest gainer on the Nifty 50 a while ago, but now it has slid down to the second position while HDFC Bank has taken over. Now, if you look at the UBS note, there's an upgrade on that note, and they have revised their rating from neutral to buy, and they've given a price target of 4,700 from 4,050 earlier. Now, their reasoning for that is that they expect TCS to outperform its peers, that is other Infosys, Wipro, Tech Mahindra and sorts, and this will be because of their revenue growth in FY25. Now, UBS also says that this is not completely priced in. So the impact of the large deal ramp up and the scope of margin improvement, we're yet to see that happen, and that's not priced in yet. So which is why the target price is slightly higher than before. Now, on that note, let me introduce you to the guests for today. We have with us Astha Jain of Hem Securities and Osho Krishnan of Angel One joining in. Welcome to both of you, and thanks for joining in. Now,
very good morning.
Good morning. Asa, I'll come to you first. On TCS, we're seeing a big upgrade by UBS, and we've seen some weakness in IT pack as a whole. But now maybe the tide has turned and TCS is set to outperform others. Do you also believe that's the case?
Hi, good morning to all of you. So yes, if we talk about the TCS, the results which came out, that were good. Basically, we have seen that the company has shown strong performance, and their book-to-bill ratio is standing at 1.1. That is sounding to be good. And why I'm talking firstly about the book-to-bill ratio, because that is the major criteria for looking of the future performance. So yes, the tailwinds were not very high, but still they are maintaining book-to-bill ratio of 1.1. And yes, we have seen some sort of moderation in the client discretionary spending. So that is impacting the performance. But I think going ahead, the way we are seeing the US economy is going on right now also, I think that will not be a major case or that cannot be a negatively impact the company's financial performance going ahead. This is what we believe. So yes, even we are positive about this company, although our price target is not that high. At the initial levels, we are keeping the price target of around 4,200 for this counter. So yes, even we are positive on the TCS on the back of its results. And one disclaimer from my side, it might be there in our PMS holding. So keeping that in mind, we are recommending again buy on this counter for the price target of 4,200 at the initial level and maybe 4,350 later on.
Fair point. On the fundamentals, Tata Consultancy Services is a buy. Astha, I'm coming back to you on the first question we're taking today, and this is from Ravi Kumar, and he's asking about whether or not this is the right time to invest in the cotton textile industry, where he has seen some bit of drop in the prices, or he sees that the prices might just be a little attractive at this juncture. Would you suggest a buy in any of the counters in that space?
Industry as a whole, yes, we have seen the drop in the prices, and might be that can be a good counter to say right now, yes, that we can do some sort of investment, but still I want to wait a little more before making a new call in this counter or in this industry as a whole. So maybe I'll take another quarter to see the results, because ultimately the results need to be seen. Right now the results which are coming from these counters are not that strong. So maybe if we can see the impact of these increase in the prices, I think then only we can take a call. So it might take 1 or 3 months to just see or review the things. So my idea here is not to jump into these counters right now, which are into the cotton textile industries. Wait for some more time. Let the Q4 FY24 results come and then take a call.
Got it. Next up, we have a short-term query, Osho. So this one's from Rakesh from Hyderabad. He's talking about Natco Pharma. He bought the shares at 1,033 and he bought 100 shares. From a shorter-term perspective, would you suggest holding on to this?
See, Natco Pharma in the recent period have seen a very huge movement from the zone of nearly 850 odd levels till 1100 odd zone. Currently, it is consolidating, or we can even say that the counter is under time-wise correction phase. So after the vertical rally, there can be some consolidation that can be seen in this counter, but it is having a very strong technical perspective, and from here onwards, it is making a base near the 1000 odd levels. So any development above 1050, 1060 on the spot zone can give a strong thrust in the counter. So from short or even from medium term perspective, one should stay invested in this counter. The immediate target comes around 1200, but it still has the potential to move towards the zone of 1250 to 1300 from a medium term perspective. On immediate basis, 1100 to 1160 should be seen as the immediate resistance or immediate target for short term perspective.
Okay, the next question is coming in from Mamta, and she's asking about EPAC Durable. I would understand, Asta, if you don't have specific fundamental coverage on this particular counter. It's just under 2,000 crore of market capitalization. But what should she do? Should she buy it on the fundamentals if you have coverage?
Basically, this company came out with this IPO recently. So yes, we did cover that in our IPO note. And at that time also, our view was not positive about this company, and we have not recommended subscribe on this IPO for the short term. Maybe if anyone has a long-term perspective, then only we have recommended that. So talking about this company, I'm not very much comfortable with the kind of business this company is into, because there is a lot of competition and there is nothing particular which this company is doing great, as we have seen in the cases or other cases also. So talking about this industry, there are various other competitors also. So the competitive intensity is high for the business which this company is into, and that's why we were not very much comfortable about the business model of the company. Secondly, the pricing was not very reasonable. They have kept the pricing at a at around the average level also. So as far as I remember, the price to earning multiple was also not very low. So I mean, talking about these factors, I think right now also we are not very much comfortable about entering into this stock. So what we recommend is that don't enter into the stock at this present moment of a time. Give it more time, let it fall more, and then only we can see. Even results should also need to be seen. So I think after both, results as well as a decent correction in the stock prices, one can enter into the stock. Right now, wait and watch is the strategy which one can adopt.
Got it. Next up, we have a question from Shyam Sundar Gupta. He's written to us on YouTube. He says that he wants to invest 50,000 rupees from a perspective of 3 months and is expecting an upside of 20%. Osho, would you have any stocks in your basket that are capable of giving over 20% returns in the next 3 months?
See, that would be great if I can identify or I can claim a counter to give a return of 20% within the 1 quarter of time period. But there are many counters which are looking very positive on the terms of technical perspective and even from the front of valuation. For me, I will first bet on large cap company like HDFC Bank. HDFC Bank, after seeing a decisive correction from the zone of 1700 towards 1400 now, so one should definitely try to keep that counter in their portfolio. I am not very much surprised that in the coming period it can give a very strong returns, but cannot claim to have a 20% kind of a return within 3 months of time frame. But if one can hold this counter from medium to long term perspective, one can definitely witness a very strong returns in HDFC Bank. Second, which is having a bit of higher beta upfront that can give a strong volatility or a strong movement that can be seen, is from Havells. Havells is on a verge of multi-week breakout, currently hovering around 1460 odd levels. So this is one of the technical pick also. So one can definitely try to gauge the momentum coming in Havells for a higher target of nearly 1520 on immediate basis. But from a longer duration or positional perspective, even one can target for 1600 odd levels, 1640 odd levels in the coming future. So these two companies one can put in their portfolios.
Got it. I'm just trying to see, do you have enough data on Jana Small Finance Bank,
Osho, and if you do, we've got Senthil Kumar, who's writing in from Salem in Tamil Nadu, asking whether or not it can be bought at the current market price.
See, this counter does not have that suffice technical setup or development that can be enough for giving such kind of recommendation for a shorter or longer duration perspective. But overall, whatever data is there, one can definitely look for a accumulation purpose for a medium term time frame. It's not a very short term perspective, one can get a decent returns, but from a longer duration, yes, one can definitely bet on this counter for a higher targets near about 490, 500 can be seen on immediate basis, but from longer duration, one can definitely keep this counter in their portfolio.
All right. Next up, we're talking about NBCC. Shalini bought the shares at 161. The current price is below that. Now, Osho, she wants to know if, now this is a multi-bagger in last 1 year, but is the upside potential limited from here on? It's been on a bit of a downturn in the last couple of sessions.
See, the recent movement from the zone of 100 towards 175 odd levels was very vertical. So one should not be very much surprised with some kind of correction or cool off in the counter, because if we will be seeing the movement was approximately 80 points, so even 50% corrections comes around 140, 130 odd levels. So currently it is hovering around 50% of the retracement. So from here onwards, there can be some kind of time-wise correction that can be seen, but longer duration, it is a very positive counter and one can definitely keep this counter for investment perspective. For shorter term, there can be some kind of consolidation or even further correction in this counter. On immediate basis, the support lies around 120 to 125 odd levels. On the higher end, again, once the counter moves beyond the zone of 155, then it can gain some strong traction in the coming period.
We got Babu, who's asking about Grindwell Norton. He's been holding it for the last 2 years, and he's been hoping that the abrasive business would do well. The question is to you, Asta, on the fundamentals. What is the long-term outlook based on your reading of the company, and should he hold on to his investment?
So long-term outlook is positive. First of all, want to give the price target, which is 2,500 at the initial level. So talking about this counter, yes, this counter is looking good to us. Although they have the results which they have posted, the moderation was there in the bottom line. It was just a 10% uptick which they have shown in their bottom line as a growth. So I mean the bottom line's growth was not very high, but looking after the industry perspective, we are positive on this counter and recommending a buy as well as hold for the price target of 2,400 to 2,500 at the current levels.
All right. We'll slip into a short break, and after the break, we'll take rest of the questions. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there.
Welcome back. You're watching Ask Profit. Now, we are in the midst of the query segment, and you can see that number on the bottom of your screen. If you've got a question for us, you can send them to us on that number. We've got Vishwanath Gowda, who's writing in from Pune, and is asking about Shilpa Medicare, which he's bought at levels of 448. The stock is currently trading below that, and in fact, he's losing a little bit of ground, but he's asking whether he can hold for a period of a month or so. Osho, based on the technicals, based on the charts, should you hold on?
See, definitely this counter, if I'll be looking on the weekly time frame, this counter has given a cup and handle pattern breakout from the zone of nearly 380 to 390 odd levels. So with the pattern development, that is also on the downtrend, is a very positive development on the technical chart. No doubt, because from 380 we have seen a very vertical rally. So it might retest the neckline of 390, 400 odd levels, but one should stay intact in this counter. The duration or the higher target, both are very huge. The duration is approximately 3 months, and the target comes around 520 to 540. So one should definitely stay invested. If there is some dip towards the zone of 390, 400, then even one can add more positions in this counter.
Got it. Next up, we're talking about Arjun Chemical. This one's from Satya, who's written to us on YouTube. He bought the stock at 600 levels. It's currently trading around 800 or so, above that. From a longer term perspective, Asa, do you have coverage on the stock? And if you do, is there any target for the stock?
Talking about this counter, sorry, I don't cover this stock, so I cannot comment on that. Arcan Chemical, we have not this stock in our coverage.
All right. I'll take it to Osho then. From a technical standpoint, what's the kind of trajectory do you see for the stock?
See, the technical breakout have been seen near about 660, and the positional target comes around the zone of 900. But as there has been a vertical rally from 660 towards 800 odd levels, so one should definitely keep trailing their profits with a revised stop loss. At present, 760.65 is the zone where one can keep their stop losses to trail their profit. On the higher end, 900 is the positional target, but in between we might see some kind of correction because the technical parameters are definitely overbought. So even if there is some kind of correction below 75 towards, let's say, 700, 720, then one can even further add positions in this counter. The positional target remains at 900 odd levels.
Okay. We've got a viewer writing in from Leh Ladakh. Smanla is writing in, asking about two counters, but I will take a question on NHPC, which Smanla is bought at levels of 97. Where's the stock currently trading? Let's take a look. It's trading at just below that price at around 91. So Smanla has got 2,170 shares of this particular counter. On the fundamentals, Asta, NHPC, part of that entire power pack that has been in focus, would you say that it's a hold at this point?
hold this point, but one thing I think she can see some more downside in the stock prices, and the reason behind it that we have seen the degrowth in their bottom line. Apart from that, in fact, the price to earning multiple of more than 28 is also not working well because the industry is running at a 20p multiple. So I think from the valuation perspective as well as the financial performance perspective, the stock can see more downside. But in the longer term perspective, because of the industry tailwind, we are positive on this counter. So my take here is that wait for some more time, at least for 3 months, and make it as a long-term holding, because in the short run we can see some more pain in the stock, but in the long term I think the cost price again can be seen, which is 97 rupees, and this stock has a potential to move above those levels also, provided if they post strong financial performance. But for the time being, the stock can see more downside. This is what we believe on the basis of their past financial performance.
All right. Next up, we're talking about Sangvi Movers. This one's from Amit Rastogi on YouTube. Astha, do you have a fundamental view on this one? It's the stock is a little bit of in a downturn today. Yeah, no, sorry, it's up 1%. Apologies there. Do you have the stock in your coverage? And if you do, is there any target in the stock?
Yes, we like this stock. In fact, we have recommended in the past also. So talking about this counter bottom move, it has shown in past few days, I should say, or a few months. So now the major reason behind is the 95% increase in their bottom line in the Q3 of FY24 goes well with the company's stock performance also. Apart from that, the industry in which this company is into, so we have seen the automobile industry is really growing strongly, and what we are expecting moving ahead also, this industry will grow at a decent CAGR. So that will also help the company in showing strong financial performance going ahead. So on the basis of the strong financial performance of 95% rise in the bottom line in Q3 of FY24, we are really positive on this counter, recommending hold on this counter. Price target can be set at 1200 to 1250 at the initial levels.
Got it. All right. Jignesh Shah from Ahmedabad has got the next question. He's asking about PTC India. The purchase price is 239.7. He's got 161 shares. Let's pull up the chart and see what it's currently trading. And we've got Osho. Osho, what's the view on the chart? Should you hold on to this one?
See, again, as we have seen, there has been a very strong movement in this counter from the odd levels of near to 130 odd levels towards the 250 odd levels. So there can be some correction that can be seen, and these things should be considered healthy in a bullish market. So any consolidation towards the zone of 190 to between 190 to 200 odd levels should be considered healthy. The technical parameters have cooled off from the overbought zone towards the comfortable zone of just above the oversold territory. So from here onwards, one can expect the rally to continue in the recent period, but before that there can be some time-wise correction that can be seen. So one should stay intact for a medium to long-term duration in this counter.
Got it. Next up, we have a question from Vignesh. Actually, he has multiple questions, but I'm going to take the one on Tata Motors. He says that he already is sitting on a profit of 40% on Tata Motors. Now, we've seen certain reports, Astha, that Tata Motors is planning to list its EV business. Now, from that perspective, how do you think this is going to unlock value for the people who are already into the stock from a longer term perspective?
Definitely, it will create a strong value for the people who are already into the stock. Apart from that, what is working well for this company is their guidance, especially if I talk about JLR. So they have really shown strong performance. And now, in fact, if I talk about the guidance also, whatever guidance they are giving is looking very positive. So yes, I mean, the combination of all will help this company to move further from here. And we can see a northward rally in this counter, expecting stock prices to move towards north side, and our price target for the same is 1100. So recommending buy as well as hold on this counter with a price target of 1100.
Fair point. We've got Tarun who's got the next question, and he's writing in from Ranchi. Tarun, thanks so much for writing in. Tarun wants to know about Indus Tower, and you know, we've got Smriti who's been talking about Vodafone Idea and their plans to raise capital. That's going to be discussed today, of course. and that could in fact have a positive bearing on Indus Tower. So let's get a fundamental view on this ASA at the current market price. Given everything that we know about this particular counter, would you suggest a fresh entry?
Yes, one can make a fresh entry because I can say a turnaround case from the negative or a negative profit in the Q3 of FY22 to the positive profit in the Q3 of FY24. So I think a turnaround case from FY23 to 24 makes a case to buy into this counter. We are positive on this counter and recommending buy as well as hold. Price target can be set at somewhere around 280 at the initial levels.
All right. Unfortunately, we're completely out of time on this edition of Ask Profit. Thank you so much, Astha and Osho, for joining and for answering questions for us. And viewers, if we were not able to take questions today, and there are multiple of them that I can see on YouTube, we'll definitely try and take them tomorrow. So come back tomorrow at 11:30 a.m. But lots more coming up on NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Benchmark indices continue to gain after a flat start. Sensex near 72,900. Meanwhile, the Nifty moves closer to 21,200 levels. Sectors trade mixed. Realty and consumer durables lead gains. On the other hand, financials drag. PayTm's Vijay Shekhar Sharma steps down from PayTm's bank board. Move comes ahead of March 15 deadline of the RBI to wind up its operations. An IT giant, TCS, emerges as the top Nifty gainer as UBS upgrades the stock from neutral to buy, citing large deals and revival in BFSI as growth drivers. And Prime Minister Narendra Modi has reviewed the Gaganyaan mission in Vikram Sarabhai Space Center in Trichy, meeting ISRO Chairman S. Somnath along with Kerala Chief Minister Pinarayi Vijayan. Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade. I'm going to start off by taking a look at how the market's faring, which are flat at the moment. But the positive is that the Nifty and the Sensex are marginally in the green. We have a little bit of weakness in the Bank Nifty, a little bit of an underperformance, but it's less than a 0.25% correction here at the moment for that banking benchmark. The Fin Nifty, of course, which continues to be in focus today on account of its weekly options expiry coming through. It's been a fairly volatile day of trade, but that's been a very, very tight range. In fact, actually, we haven't seen as much volatility, save for the changes that we're seeing in option premiums in today's day of trade. But let's take a look at some of your key contributors to see what's providing the push and pull as far as the index is concerned. And well, it's TCS and HCL Technologies right at the top, where we have an upgrade for TCS. L&T is starting to contribute positively towards the benchmark of late. And on the losing end, we have some weakness in banks like State Bank of India, something like an ICICI Bank, Axis Bank, a handful of those other banking counters which are in fact weighing on not just the Nifty, but also the banking index. Well, let's move on and talk about the broader markets then and how things are faring there. And well, overall, this has been largely moving in tandem with the benchmarks. Not too much to speak for as far as the mid-cap 100 goes, or for that matter, the mid-cap 250, a little bit of an outperformance there. But to tell you a little more about what's really working out in the broader markets, while the mid-cap 100 is largely flattish, we do have gains in the likes of delivery, which is up around 4%. So delivery is in fact starting to gain a little bit of traction off late once again. And along with that, we have Sona BLW, which is also up and about, advancing by around 3.5%. Then we have Torrent Power, which is up around 3%. And CG Power also advancing by around 2.8%. Very quickly, to take a look at all those counters which are losing out in today's day of trade, NMDC down 4%. Vodafone Idea, which is of course looking to raise funds, that's down 3.3%, and Devyani International, which has of course seen a handful of block deals. We'll be talking about that as well. That's down around 3% in today's day of trade. And from there onwards, let's take a look at all the stocks which will be in focus in today's day of trade and in this show specifically. Well, we do address PayTm of the step down of Vijay Shekhar Sharma from the PayTm's bank board, and then we have Vodafone. We'll talk about that. Oil marketing companies are also in focus. They've been buzzing off late, and we have a few more updates there. Then there is Cello World, a recently listed company where we have a brokerage note, in fact, an initiation on the coverage of the company. TCS, as I've already mentioned, Dixon Technologies, as well as Whirlpool. So these are a handful of stocks that we're going to take up with none other than Sunny Agarwal, the head of fundamental equity research at SBI Cap Securities, who is also going to be joining us on the show to take us through his view of, some of the counters that we want to address. Sunny, good morning, and pardon me, good afternoon. Thanks so much for joining in. Sunny, before I come to you, let me quickly, apprise our viewers about PayTm and what's really happening here. So we understand that the PayTm founder and Chief Executive Officer, Vijay Shekhar Sharma, has resigned from the board of the PayTm Payments Bank. Now, much has been spoken about PayTm of late. We've also seen a huge amount of volatility, and of course, let's not forget that there is a certain deadline that the company also has to work towards. It's 15th March in terms of resolution and remedies for a lot of problems that have already been raised by the Reserve Bank of India, and that's going to be in focus. At the moment, PayTm is currently trading just shy of the 440 odd mark. It is advancing by around 2% at the moment, but it's not without volatility over the past few weeks. Sunny, good afternoon. Your view on PayTm, how would you go about this one?
Yeah, good afternoon, Agam, and thanks for having me on the show. Coming to PayTm, definitely we all know that there is a regulatory restriction on operating PayTm payment bank. And then on the other hand, there is a PayTm payment ecosystem, which works as a normal payment UPI app. I think the entire ecosystem of PayTm business model was based on assumption that when the PayTm has developed an ecosystem of vendor as well as a consumer, based on the cash flow, they will cross-sell various financial product and earn a commission out of that. So I think with this regulatory restriction, I think that model need to again reset, and again there is a speed breaker in the growth which PayTm was seeing by giving loan, SME loan or working capital loan to this vendor, or offering various financial products to this vendor and consumer ecosystem. I think for a next 2-3 quarter, there is a lot of uncertainty on the earning front. Hence, I would stay away at a current juncture from the PayTm as my investment bet, and would wait for more clarity from the company how the business model is going to evolve post this restriction on PayTm payment bank.
All right, Sunny, stay with us. We move on to the next stock that we want to talk about, and that's Vodafone Idea, which plans to consider fundraising proposal through multiple instruments, and it is set to evaluate the proposal for its capital raise today. We have Smriti who's joining us to give us an update on this one. Smriti, what key details would we look forward to here?
Well, yes, Vodafone Idea will consider a proposal to raise funds today. Now, the promoter had previously, one of the promoters rather, had previously said that they will infuse up to 2,000 crores in the company if needed. So, and time and again, the company has said that the promoter will infuse these funds through an equity fundraise. So if this happens today, it's likely that the promoter will infuse either 2,000 or a part of it in the company through a rights issue. So that's one option. Now, just to give you a little perspective, there are two promoters in the company, Vodafone PLC and Aditya Birla Group. Now, Vodafone PLC in its books has the value of Vodafone Idea is zero in the books of Vodafone PLC. So it's unlikely they will participate in the fundraise. So the other promoter left is Aditya Birla Group, and we've seen Kumar Mangalam Birla talk about how they do not plan to exit the company. Let's also look at why this fundraise is essential for the company. Let's look at the debt position. The gross debt of the company is at 2.14 lakh crore as of December 31st. 90% of this debt, that is 1.8 lakh crore, is owed to the government. But let's look at it from a shorter term perspective. The dues for FY25 stand at 5,400 crore. So the company will have to pay 5,400 crore in the next 1 year. Of this 5,400 crore, 1,600 crore are the optionally convertible debentures to American Tower Corporation. The 3,200 crore are the bank dues and spectrum dues at about 500 crore or thereabouts, and this is only the principal payment. So the fundraise becomes absolutely essential for the company because the cash position of the company as on December 31st was only 500 crores. Now, if you also go a little bit forward, in FY26, the company has given that the debt that it will have to pay is at 30,000 crore. 28,000 crore is towards the government, and the bank dues will be about 800 odd crores. So this fundraise becomes absolutely essential for the survival of Vodafone Idea.
there's plenty of insights that's given to us by Smriti there, and a lot of, key factors that you do need to watch out for. Of course, Smriti has elaborated very well out there as to why this fundraise becomes very, very important for Vodafone Idea. Sunny, your view on this one? About 4 weeks ago as well, we did have the government which suggested that they are looking forward to perhaps, they don't want a duopoly as far as the telecom sector is concerned. That said, this fundraise will be crucial for Vodafone Idea. How have you placed on this one?
Yeah, definitely. This fundraise is very crucial for Vodafone Idea, basically from two angles. One is to service their regular interest payment as well as debt obligation. And second most important aspect is doing capex on 5G infrastructure. Ultimately, the world is moving towards 5G, and a better network and better infrastructure is required for a subscriber to stay with the organization, right? So I think with the fundraise, suppose it happen close to the current market price or some premium or discount to the current market price, I feel again it will lead to the massive dilution at a current market price. So again, I would like to wait and watch, see how much fund the company is able to mobilize at what rate, and post fundraise based on diluted equity, how much is the earning per share which we can expect from Vodafone over the period of next 3 to 5 years. So again, I would like to wait and watch if I want to deploy a fresh capital in the Vodafone at a current juncture.
Right. Okay, Sunny, stay with us. It's time for a quick break, but on the other side, we get you that long list of more stocks that you want to address. Stay tuned, and we'll be back in just a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Welcome back. Putting the spotlight on Indian oil marketing companies, the pack is currently trading at a 7-year high. My colleague Mihika Barve has put a story out on NDTV Profit.com, and he joins us to help us out to understand how things are panning out and whether or not they are in fact overvalued compared to its global peers. Mihika, what do you have for us?
Yes, so the Indian oil marketing companies, mainly Indian Oil, Hindustan Petroleum and Bharat Petroleum, has surged around the range of 19 to 27% in the past month. Factors like Brent prices averaging around $74 to $84 per barrel and higher global petroleum demand have fueled the surge. But despite the ramp up, the Indian OMCs trade at a lower EV per EBITDA multiple compared to their global peers. Currently, the EV EBITDA multiples of the Indian OMCs trade between 3.59 to 5.02, HPCL being the most expensive, while Bharat Petroleum Corporation the least, while global company Chevron Corporation trades at the highest of 13.27. Now, in terms of historical valuations, Indian OMCs trade at least at a 7-year low, while global peers saw valuation multiples lower in FY22 and FY23. The valuations have also come down since FY20, when the companies did face lower earnings due to the Russia-Ukraine war, but since then they have experienced supernormal marketing margins because of getting Russian crude at a discount. Now, there is potential for more upside according to certain brokerages. Stable Brent crude prices, no government policies or fuel rate cut announcements, and higher global petroleum demand could help margins. JP Morgan says that those integrated margins with petrol and diesel have around $20 per barrel, which is twice the mid-cycle average. And according to Yes Securities, the stocks are undervalued, and the government push and the capex plan will help with profitability. But there is some downside despite the optimism. Certain risks like Brent crude prices, even a 5 to 7% rally could hurt the margins according to CLSA. And furthermore, the large global refining capacity additions could also raise doubts over the continuation of the current high margins.
Mika, thank you so much for getting us that update on valuations of these oil marketing companies, which, well, as Mihika has mentioned, that they are at a 7-year low. But that said, well, oil marketing companies themselves, in terms of prices, well, they are in fact actually trading at 7-year highs. So this is a little bit of, an odd thing that's turned out for as far as OMCs are concerned, because we are looking at significant growth, and along with significant growth in its earnings, we have also seen a lot of these OMCs rally, which have in fact taken them at the highest levels since January of 2017. Yet they are still trading at 7-year lows in terms of valuations at the moment. Sunny, an interesting turnout, the way things are panning out for the oil marketing companies. How have you placed here, and do you think there's a lot more legs to the rally of the kind of, the moves that we've seen as far as OMCs go?
Yes, I think FY24 has been a remarkable year for all the oil marketing companies, and the reason being that on the refinery business, especially third quarter and the ensuing fourth quarter, that is likely to be pretty robust because of the spike in Singapore gross refining margin, and that is purely due to the Red Sea crisis. And at the same time, marketing business, wherein the retailing of the petrol and diesel, that continues to command very attractive margins, the blended margin close to 5.5 rupee to 6 rupee per liter. Purely based on the due to basically benign crude oil prices and no change in the end user petrol and diesel prices. So that has led to the extraordinary margin in that vertical also. But having said that, even if we assume that there is a slight spike in crude oil prices, I think FY25 based on FY25 or 26, the stock continue to trade at a cheaper valuation, close to 8 to 10 price to earning multiple. Although we may see a degrowth in earning as compared to FY24 in FY25 and FY26, still I think on valuation front, stocks are looking attractive. But again, the caveat is we need to keep on tracking the crude oil prices. Obviously, that's one of the main driving factor in terms of profitability. So we are cautiously optimistic on the oil marketing companies, and especially in the light that with the election very close by, We don't know. I mean, government may give a surprise in terms of petrol and diesel price cut, and that can have a big bearing on the earning growth of all the oil marketing companies. So net, I think cautiously optimistic. If somebody want to deploy a fresh capital, I think one can take a gradual bet on the all the three counter. Maybe 30-40% deployment ahead of election, and post-election, maybe rest of the amount can be deployed. Yeah.
Okay, well, there you have it. That's your view on OMCs. And we move on to a recently made debut counter, and that's Cello World. It's just listed back in, yes, it's back in November 2023. And it has moved substantially from there on. Well, you know, it was, it of course, on its listing day, it opened at around 790 odd rupees per share. And then eventually it has currently moved towards closer to the mark of 900 rupees per share. But we have a new brokerage which has initiated coverage on Cello World. Let's get in my colleague Kanika to tell us a little more about that. Kanika, good afternoon. What do you have for us?
Good afternoon, Agam. So, Motilal Oswal has initiated coverage on Cello World with a buy rating and a target price of Rs 1100. Based on the current market price of Rs 880, it implies an upside of 25%. And it is estimated that Cello will grow faster than the industry with a robust revenue and EBITDA over FY23, FY26. Now, this growth will primarily be driven by expansion in SKUs and distribution reach, which will be facilitated by Cello's robust manufacturing capability with 13 plants spread across 5 locations. Additionally, the company is building a new glassware plant at Phalna, Rajasthan, and it is expanding its opalware capacity at Daman. Now, this growth will be coupled with strong improvement in the glassware segment post the commissioning of the new plant in Rajasthan. Now, with a presence across diverse product categories, it is expected to benefit from growing total addressable market at 13% CAGR over FY23, FY27. However, there are a few key downside risks, including volatility in key raw material prices, dependence on third-party manufacturers, and intensified competition.
Kanika, thank you so much for getting us that initiation note on Cello World. Sunny, how are you placed on this one? If you this is under your radar, what's your view on Cello World?
Yeah, a very strong consumer franchisee as far as consumer appliances or day-to-day consumer wear is concerned. At the same time, a very strong brand on stationery side. I think the capacity addition on the glassware and opalware side in the next 2 years will definitely add to the incremental revenue stream. I think we continue to remain bullish on the Cello World with a medium to long-term investment horizon.
Okay, and Sunny, finally, a quick word on Dixon Technologies. We have another broking note where Jefferies has downgraded this counter and to an underperformed rating with a price target of 15,920. And they say that, well, this does look like an expensive bet at the moment. Your view on Dixon Technologies?
Yeah, definitely. So we have seen a massive run-up in Dixon of late, and I think valuation have turned pricey as far as Dixon is concerned. No doubt, I mean, company will continue to do well over the next 3 to 5 years. I think the relatively better bet from a valuation perspective is Amber Enterprises, which I feel still trade at a significant discount to the Dixon, and have got a multiple growth levers in the company as far as earning growth is concerned.
All right. Well, Sunny, on that note, we leave it at that. Thank you so much for joining us and taking us through your view on the several stocks that we wanted to address. As far as markets are concerned, well, it's still trading largely flattish. The Nifty is currently still at 22,100 and slightly higher than that. But all eyes will continue to be on the Fin Nifty expiry. Now, you know, it's seen sharp moves, you know, sharp drops in a matter of 5 minutes, and then another sharp up move in another matter of 10 minutes. So we have seen, you know, its fair share of very sharp moves on an intraday basis. this. But if you just zoom out a little, you'll notice that we've seen a less than a 0.25% cut as far as the Fin Nifty goes. So while some may argue that it's been a quiet expiry, many others may suggest that there's been a sharp change in all of these option premiums, which is why it's not exactly turning out to be a very easy day for trading the Fin Nifty, especially the weekly options expiry. So, well, we continue to keep an eye on a whole host of these counters as well as indices. But on that note, it's a wrap on Hot Money. But don't go anywhere. Lots more lined up. Stay tuned to NDTV Profit and we'll keep bringing you more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and my guest today is from Platinum Industries. The company is coming out with an IPO which opens on Feb 27th and closes on Feb 29th. Price between 162 to 171, and there's a fresh issue of 235.3 crores. And joining me is Mr. Krishna Dushyant Rana, who is the chairman and MD of the company. Mr. Rana, thank you very much for joining us on IPO Adda. Sir, you are into a specialty segment. Can you take us through what exactly is the business? How does and how do you stack up within the specialty segment?
Much for having me here. Let me give you a short background about Platinum, what we do and our products. Of course, we are into a specialty chemicals industry, and we are making specialty additives for the plastic industry. So mainly focusing PVC as a polymer, and we manufacture additives for making PVC pipes, cable wires, profiles, and all the applications that are related to PVC as a polymer. And this product that we manufacture is called PVC heat stabilizer, which is a very, very important ingredient in the formulation of all the PVC applications. So this is considered as a specialty industry, and it's of course the heart of the entire PVC formulations.
Can you take us through the use of these products and which are the industries that use it? From a consumer point of view, I just wanted to understand, the usability and where it is.
Sure. Sir, in a layman's language, if I would like to explain you, is PVC additive is basically a product that is used to stabilize a polymer, that is PVC polymer. And normally what happens, PVC's itself has a peculiar property that it starts degrading at 60 degrees temperature. So when the degradation happens, right, you see that there are too much of HCl that is coming out. So PVC additive helps the polymer to sustain up to 200 degrees temperature, and it traps the HCl, and it gives a better quality of extruded products. Like PVC pipe is one such product that is made from PVC resin and with the additive PVC stabilizer. So many applications where these additives are used, there is PVC pipes, PVC cable wires, PVC profiles, and so on.
Okay, I got it. You're raising 235 odd crores, and you have already raised 14.3 crores in pre-IPO. Give me a sense of where are you going to use this funds that you're raising?
This is a complete primary investment. We are using this money for our expansion plans, where we are expanding our capacities in Palghar, that is 100 kilometers from Mumbai, and in Egypt. So we are adding our capacities in Egypt as well.
Okay. Now give me a sense of, what is the current capacity that you have, and once you have these two facilities coming up, and I understand that it will be Q4 of FY25, how much will the capacity go up by?
So in Egypt, we will be the first manufacturer for this product, and we are building a capacity of 30,000 tons per annum. And in India, we are expanding our capacity to 60,000 tons per annum for lead-free additives.
Okay, so you're basically more than doubling your capacity in some way?
So in India, yes, we are increasing our capacity 3 times.
3 times. So basically from 20,000 tons to 60,000.
Yes. So from 20,000 tons of lead-free additive to 60,000 tons for lead-free, but the total capacity will be around 90,000 tons, where the old plant will be based, manufacturing the other products.
I was looking at your RHP, and I was seeing that your capacity expansion has been growing on a year-to-year basis, but the utilization levels are much lower. Is there a demand issue which is coming up, or how is it actually?
Sir, to explain you, we have a portfolio of products, right? So in India, 3.5 million tons of PVC is consumed, out of which 75% is dependent upon the pipe sector, because pipe is a very growing sector in the country. So, since more than 100 years, companies were dependent on a conventional way of, manufacturing a PVC pipe, that is using a lead-based additive. Now we are transiting, we are helping the industry transiting from lead-based products to a lead-free, which is a highly sustainable product in the industry, and we are transiting them. So till now, I think 25 to 30% of industry has been shifted from lead to lead-free, and remaining 70% is still remaining, which we are adding up the capacities for this transition that is coming up in the country.
And you see this adoption happening very fast. Are there regulatory mechanisms in place where you have to convert to from lead to zinc-based additives?
Yes, the regulation was passed by the government in the year 2018 that India has to stop the usage of lead in the pipe sector. Yes, there is a regulation, and till 2026, the regulation has demanded the pipe industry to shift. So probably I think I see that by 2026, there'll be a big shift and a big change that will bring in the products.
You're setting up this facility in Egypt. You could have also exported from India there, right?
Sir, the Egypt story is really close to my heart, and let me explain you that why we are going to Egypt. So just to explain you with a small example that there was a customer, in Uzbekistan where we wanted to export 3 years ago. But due to the competition from Turkey, Europe, and we could not compete in terms of the pricing strategy. So we thought that if we wanted to compete, what is the next step we should take? So we started studying about the countries that we could have a presence over there in terms of global expansion and global penetration of our products. So when we studied the market in Egypt, there was no manufacturer. So we are the first manufacturing industry for this product in the country, and we will be directly substituting the imports. So Egypt is dependent 95% on the imports, and they are promoting localization a lot right now. And due to the India and Egypt bilateral agreement, it gives us an edge that we can invest over there and have a global expansion and a great penetration in terms of market segment. So it will give us a edge in terms of our expansion plans. So probably if I can explain you that 2027, 28, 30% of the revenue will be a contribution from our Egypt plant.
And that will give you access to the entire European market as well, right?
European markets, MENA region, and entire COMESA. So the freight cost played a very huge role. So from India to Uzbekistan, one container was costing around $6,000. From Egypt, it was somewhere around $400 to $500. So the freight was a very important part, which made us think that we should take a chance of going global.
And you expect this to go on stream by fourth quarter of next financial year?
Correct.
Okay, give me a sense of how your margins are there, because I was looking at your first half margins. It was around 26.4%. In FY23, it was 23.2%, which was there. So, in specialty chemical, especially the segment where you are, and because you have moved on from lead to zinc, and the industry is also moving there, is there a margin gain that you have, or your higher pricing power that you have in this segment?
So looking at the margins, it's not only calcium, zinc, but it's also the other product mix that we have. So we are researching. So we are a very we have a very heavily resourced R&D center. So we have all PhDs and organic chemists working in our R&D lab. So we are a purely innovation-based company where we think that adding on to the government's idea of being a sustainable company. So we are researching on many products and adding many products for the industry. So that's not only calcium, zinc, but there are other products like lubricants or CPVC additives that CPVC is catching up well in the country. So these are the product mix that we have, which is bringing on to the better EBITDA margins. Of course, calcium zinc is playing a very important role.
Because between your revenue breakup, stabilizers account for nearly 59% of your revenues, CPVC additives nearly 4%, and lubricants 30%. When the entire plants come on stream between your Palghar 2 and Egypt, how will this revenue breakup move or change?
So the revenue breakup will change. Of course, we are very bullish on lead-free additives, and we are expanding multifold in terms of these products. So of course, lead-free additives will play a very big role in terms of the product mix. So what happens is, in the formulation, not only additives but also the lubricants are a part of the entire formulation. So if, say for example, the lead-free additives are moving up, there is a chances in the same way the lubricants will move up. And as we are focusing on the CPVC sector also, so we see a huge change in the product mix. As of now, I won't be able to give you an exact number, but lead-free additives and CPVC additives will play a major role in terms of our revenue for now and future.
Your top 3 customers account for nearly 75% of your revenues, and top 1 accounting for nearly 42. Who's this top customer of yours, and you have a very high concentration risk to that customer?
So I wouldn't say that it's a risk, but we are the top customer is Supreme Industries Limited, and they are one of the biggest processing houses in the country. So let me explain it to you in a different way. In India, 75%, as I told you, of 3.5 million tons is consumed in the pipe sector. Out of this 75%, I can say 2.5 million tons. Out of this 2.5 million tons, 6 customers contribute to 10% of the entire consumption of this PVC resin. So you can understand that how big is the scalability of all these top 3 to 4 customers. So we are supplying to Supreme Industries, Prince Pipe and Fittings, Astral, Polytechnic, and thereon. So when I say that, it's a risk, normally what happens, sir, when the notification in 2018 came that the government has to ban lead, normally a company like us, when it's on a growing stage, it grows from bottom to top, like, catering to the small customers first and then going to the top customers. But here it gave us an edge that we enter the top customers first and then we are going from top to bottom. So this is not a risk, but of course the dynamics are changing every year. So today it's at 43%. Tomorrow with the increase in sales, it will go to 35%, 36%. So these dynamics will change every year, and we are working towards increasing our revenue and growth for the company.
Mr. Rana, it was a pleasure talking to you today. Thank you very much for joining us on IPO Adda. Your IPOs opening on Feb 27th, closes on Feb 29th, price between 162 to 171. It's a fresh issue of 235.3 crores. And they've done a pre-IPO placement of 14.3 crores at 157 per share in January this year. Thank you for watching IPO Adda.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
welcome to NDTV Profit. You're watching IPO Adda, and my guest today is from Bharat Highways InvIT. The InvIT is opening on Feb 28 and closes on March 1st. It's priced between 98 to 100 rupees per unit. And joining me is today Amit Kumar Singh, who is the CEO of Bharat Highways Investment Managers, and Harshil Sawant, who is the CFO at Bharat Highways Investment Managers again. Gentlemen, thank you very much for joining us on NDTV Profit. To begin with, Amit, can you take us through the portfolio that you have in Bharat Highways InvIT, and how big it is in terms of growth opportunity which is coming in as part of this portfolio?
Sure, thanks. So yeah, I will take maybe your basically investors to the portfolio. So we are, as of now, as a part of the formation transaction, we are initially, taking 7 assets, which are 7 hybrid annuity model assets, into the InvIT's fold. These 7 assets are across 5 states. Two projects assets are in the state of Maharashtra, 2 in the state of Gujarat, and 1 each in Uttar Pradesh, Punjab, and Andhra Pradesh. Now, coming back to in terms of size, these 7 projects put together in terms of kilometers, this is almost 497 kilometers. In terms of size, we have almost more than 1,000 crores of the revenue coming in from across these 7 projects in this year. Same is the number going forward for the next year as well. And in terms of size, what we are talking about is almost north of 5,500 crores at the part of the enterprise value. Of course, we are in the process of book building, and IPOs opening on 28th and closing on 1st. We'll get to know the value, but ballpark, what I'm telling you, maybe in the range of around 5,500 crores. That's the enterprise value across the 7 assets.
Mm-hmm.
Also,
Harshil, Harshil, can you take us through, you're raising 2,500 crores through this process. What portion of that is being brought in by the sponsors, and what portion are you raising from the public? And the second thing is, can you give us an idea of the kind of growth opportunities that this InvIT gives to the investors?
Sure. So out of this 2,500 crores, as per the regulation, 15% has to be bought in by the sponsor of the total unit capital. So that works out to around 664 crores, which the sponsor, Adarshila Infotech, is infusing in the InvIT. The balance 1826 crores is what we are raising from the investors. Out of that, 75% will be from institutional, and balance 25% from the non-institutional investors. Now, with respect to the growth opportunities, we have entered into a right of first offer with GR Infra. In the next 5 years, GR Infra will be developing, wherein the projects are awarded to them, those assets will be available to us under the RUFO pipeline. This will ensure that, we have the InvIT's life gets increased up to 2045-46, as against the 7 assets life.
Give me a sense of what is the current life of the current assets. Basically, you recently acquired, or I would say GR Infra transferred 7 of their annuity projects to this InvIT. What was the cost of acquisition for that? And have you taken any debt for that? And the money which is going to be used, what is it going to be used for?
Sure. So I think in terms of the size, what the 7 assets we propose to acquire from GR Infra, these 7 assets put together will have an enterprise value of around 5,500 crores. Out of this, of course, 2,500 crores, what is being used from the market, basically raised from the market, and other than Adarshila 665 crores, which is almost 1,835 odd crores, which is going to be raised. That is entire this Adarshila as well as the public money. Out of 2,400 crores is going to be used towards the payment of the debt, which these SPVs has. Across the 7 SPVs, we have debt of almost more than 3,500 crores. So 2,400 crores will be used to pay those debt down at the SPV level. And the balance debt we will be raising at the InvIT level, to basically take care of the balance debt. And in terms of basically, as in that this life of the asset, initial seven assets, we have an average concession life of 12 years, and maybe it's going almost 13 and a half years, so ranging from 11 and a half to 13 and a half years. And of course, with the ROFO assets, what we enumerated a while back, basically the life of the asset can go up to 2047. Yes.
Give me a sense of what could be the enterprise value of the ROFO assets and how much you will have to pay to get them?
See, difficult to attribute a number for the ROFO assets because this is just a pipeline, and 23 assets, as we mentioned, are in the different stages of construction, and of course it's difficult to ascribe a value now because once the projects get completed, assets gets completed, there's a process where you do your diligence, where after a lot of diligence, which is tax DD, which is your legal DD, which is your technical DD, then you get your valuation done, and basically maybe the final value gets arrived because you need to get this valuation done from registered valuer. But I can tell you for this 23 HAM assets, if the ballpark we can talk about, because again, in a ballpark, this is going to be number because we are also looking at some assets which is non-GR assets from the market. This 23 plus other assets, what we are talking about, is going to be almost 20,000 odd crores.
So over the next couple of years, as and when these assets mature, and that's when you take this assets into the InvIT, you will have to generate cash or raise capital either in equity or debt or 20,000 crores to get those assets, right? Is that my understanding right?
Yeah, absolutely. So what happens in InvIT as per the SEBI InvIT regulation, initially you can have only leverage up to 49%. And then you can basically do 6 successful distribution and you remain as a AAA entity, you can take your leverage up to 70%. So I think right now to start with, our leverage is going to be very less, which is going to be in the range of 20 odd %. Maybe we propose to basically acquire further assets through using our leverage. And once we sort of reach our leverage threshold level, maybe 1.5, 2 years down the line, we'll able to come to market again to raise further debt to acquire those 23 assets. Overall, basically the capital which we may require to acquire these 23 assets again will be in a different size, but that will be again over the next 3 to 5 years, because as and when these assets will get completed, it will come to us. And over and above that, one more thing not to forget here is the ROFO, which is right of first offer we have with GR, is for the 23 more assets. But also for the next 5 years, whatever GR Infra will develop in the road segment, InvIT will have a ROFO on that. So with that ROFO, which is the validity of that is 5 more years, our InvIT life gets elongated to up to 2047.
Harshil, give me a sense of what investors should look at as a distribution income, because InvIT is not about share price appreciation or profits. It's all about a distribution income that comes to the investors who hold the unit. So give me a sense of what kind of cash flows that are expected from the seven asset that you have, and the kind of distribution income policy that you have.
See, on the distribution, philosophy and the policy which we are, going to follow post listing is on a quarterly basis. Now, with respect to, our, in these cases, these are HAM projects. So I think, cash flow from operations is a right number to look at. So, in our offer document also, we have specified for 24, 25 and 26, what are the numbers. So just to give you a sense, in 2024, it is close to 1,005 crores. In 2025, it is 982 odd crores, and in 2026, it is 915 crores. Suppose that, what is the debt at the trust level, that will be serviced, the interest and debt obligations, and the surplus, considering our requirement of, future assets, which Amit mentioned that, there is a strong pipeline available. So certain cash will go towards that and balance will be available for distribution. So since, the big building, book building process is currently, on, and then, the actual yield in the IRR will be determined basis that. But if we compare it with a similar product in the market, it is a yield accretive. That's what I can say.
Okay. What you're saying is that your cash flow from operations are going to decline over the next 2 to 3 years. That's what you're saying.
See, that is not what we're saying. See, there are two parts to it. I think we need to understand it a little bit. InvIT is a process, is a platform where the basic objective or tenet of the InvIT or this trust is to keep acquiring assets. So, of course, when you talk about the initial 7 assets, of course, you may see a decline in the revenue because, as and when it's matured, and the structure of the cash flow itself, what happens is, of course, what you receive from authority, basically you also receive from authority interest on annuity, so that amount keeps going down. So your cash flow maybe keep coming down because it's more basically alluding to its maturity. But that is not the way what rightly should be looked at. When you, of course, whatever the guidance management is giving, we are giving the market, that will also be achieved with the further ROFO assets which we will acquire, and every incremental asset acquisition will have a basically the incremental yield uptick to the asset to the existing unit holders. With that thought process, that investment objective, we'll be acquiring and we'll be basically carrying out our investment activities. Yes.
Gentlemen, it was a pleasure. It was a pleasure talking to you today. Your InvIT is opening on Feb 28th and closes on March 1st. Price between 98 to 100 rupees per unit. It's an InvIT which has 7 rolled assets, primarily HAM annuity projects which are there. And as I said, it opens on Feb 28th. Thank you very much for joining us on NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? when to buy, when to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Benchmark indices continue to gain after a flat start. The Sensex near 72,900. Meanwhile, Nifty hits 21,200 levels. All sectors barring oil and gas index in the green. Realty, consumer durables lead gains. PayTm's Vijay Shekhar Sharma steps down from PayTm's bank board. Move comes ahead of the March 15th deadline of the RBI to wind up its operations. And IT giant TCS emerges as the top Nifty gainer as UPS upgrades the stock from neutral to buy, citing large deals and revival in BFSI as growth drivers. Prime Minister Narendra Modi has reviewed the Gaganyaan mission in Vikram Sarabhai Space Centre in Trichy, meeting ISRO Chairman S. Somanath along with Kerala Chief Minister Pinarayi Vijayan. Hello and welcome. You're watching Market IQ and I am Pallavi Nahata. Now let's start the show with a quick look at the markets first. The markets continue to remain range bound but trading in the green. And though that's marginal, the Nifty 50 as well as the Sensex up by under 0.5%. That's not particularly bad looking at where we started the day off at and the cues that came in from yesterday as well. But let's have a closer look at some of the sectoral indices. Among the top performing ones is of course Nifty Realty. The index is up by over 1% in today's day of trade. That's followed by Nifty Consumer Durables and the Nifty IT, both in the range of 0.5% to about 1% up in today's day of trade. What's lagging is Nifty Oil and Gas. The Nifty Energy is flat. Nifty Oil and Gas down by about 0.5%. Sectoral, the broader markets too appear to be broadly picking up cues from the benchmark indices. The Nifty Mid Cap 150 as well as the Nifty Small Cap 250, both in the green, though marginally. But before we can move on, it's time to take a quick look at some of the key movers in the Nifty 50. First up is, of course, TCS. We're going to be coming back to that stock in a bit, but TCS up by over 2%, almost 2.5% currently after UBS changed the stock to a buy from a neutral performance. What's also up is HDFC Life, Tata Motors, Power Grid, all of these stocks having a good day in trade today. What's lagging is Hero MotoCorp, UPL and Adani Ports, all stocks down by about 1%. Hero Moto is the largest laggard, down by about 1.5%. But a handful of stocks are in focus today. My colleague Mehika Barve has the list. Over to you, Mehika.
Yes, so up first we have Cello World. The stock is up 5% intraday, and this was mainly after Motilal Oswal initiated a coverage at a buy rating at a target price of 1,100. Now, it expects Cello to grow faster than the industry and expects revenue, EBITDA and PAT CAGR of 18, 23 and 25% over the FY23 to FY26 time period. Strong brand equity and market penetration will fuel the sustainable growth according to Motilal Oswal, and the expansion of their SKUs and distribution REIT to also help the growth. Then we have JK Cement, it's up 3.43% intraday, and it's a top gainer among the cement pack. And this was also on the back of a Motilal Oswal note where a buy rating was maintained at a raised target price of 5,050 rupees. Now it expects the company to reach a capacity of over 50 million tons per annum in the long run, and it says that the regional mix and the cost benefits are better for JK Cements versus its peers. It also expects revenue EBITDA CAGR at 14 and 28% over FY23 and FY26. Also expects higher revenue on the back of better sales volumes, realizations and cost benefits. Then we have Hind Rectifiers, which has hit an upper circuit at 10%. This is mainly on the back of an order win of more than 200 crores from the Indian Railways. The nature of the order is a supply order and the execution time period is for FY24, FY25. And lastly, we have Pesalo Digital, which is up 7.74% intraday. The latest news around the company is that it's received a sanction and a disbursement of 200 crores from IREDA, and it will carry onward lending for the e-mobility sector. The board is also set to consider and approve the allotment of NCDs through private placement, and it's approved raising up to 1,260 crores via QIP.
Thanks a lot for that, Mehika. Moving on, Bandhan Bank is in focus. The company is keen on growing its micro-LAP loan portfolio. My colleague Mimamsa Verma joins us with more. Mimamsa?
Yeah. So Bandhan Bank is looking to increase its loans against property portfolio by offering these loans to existing microfinance loan borrowers in select geographies. They're not going for a wide reach in the LAP loans, but they're going to offer these loans to existing customers and in very selected customers. With this, the bank is looking to increase the customer's wallet share, according to bank COO Ratan Kumar Kesh. In the December quarter, LAP loans stood at rupees 3,960 crore, accounting for 13.9% of housing assets with the bank. What the COO tells us is that they are looking to grow this business as there's a big opportunity for them here. The average ticket size of these loans is rupees 6 to 8 lakhs with a maturity of 8 to 10 years. The interest rate on LAP loans is lower than the microfinance loans that the bank offers, but it is still higher than the affordable housing and prime loans. Since these are micro LAP loans, the credit underwriting process for these loans has been stringent now, and for the borrowers who are availing these loans, the COO also tells us that the aim of growing this portfolio is for the opportunity and without compromising on the margins.
Thank you for that, Mimamsa. The stock is down by almost about 0.5% in today's day of trade. But on to an NDTV Profit exclusive. Sources tell your channel that the Reserve Bank of India is overseeing P2P lenders. Pragati Oberoi joins us with the complete details. Pragati, what are you picking up from your sources?
Yeah, right. Thanks, Pallavi, for bringing that news for our viewers. Now, RBI has been reviewing the P2P lending system over the last 1 year, and that's what sources are communicating to us at this point. We know that, as a matter of fact, when this review was taking place, RBI sent out letters to certain P2P lenders or P2P entities that were engaged in this particular business. And in those letters, the RBI has sought clarifications on the business models of these P2P lenders. Specifically, sources told us that in the letters, the RBI also asked these P2P lenders to shut down certain business practices. These had to do with three main practices that P2P lenders are engaging in. One was the instant liquidity, the next was the pooling of funds, and the third was the flow of repayments via the P2P lenders, because all these practices are in violation of the RBI guidelines for the P2P lenders. So what exactly followed after that is very interesting, and that is also for the benefit of viewers on the screen. A 12-member association of the P2P platforms engaged with the RBI after these letters were doled out to certain players, and as a part of the conversations, they brought or highlighted three critical issues to P2P lenders. One had to do with the agreement signing between the lender and the borrower. The next had to do with the reinvestment of funds that are done by the P2P lenders, and third had to do with the functioning of a secondary marketplace. So clearly what the letters went on and what came in response from the association was largely in same lines, but they were seeking some sort of solution to all the problems that had been raised. Now, when we spoke to other sources and market experts, we realized and figured that the nucleus of the problem in the NBFC P2P whole business or the lending model lies in the structure of the products and the management of operations, and that's where RBI's main problems are with these P2P lenders. Now, sources have said that while a clarity is awaited from the RBI at this point as to what may happen to P2P lenders, because the association has already given its representation, as of now, RBI has not come up with anything new. One of the sources that we spoke to also said that the RBI may take a call on stopping certain products which have to do with the anytime liquidity. They may also ask these NBFCs or P2P NBFCs to stop products like instant liquidity, P2P escrow accounts and ultra short-term products. But we must remember that as of now, we are awaiting a clarity from the RBI. But yes, RBI is definitely overseeing the workings of the P2P lenders at this point of time.
Thanks a lot for that, Pragati. Moving on, Vodafone Idea plans to consider fundraising proposal through multiple instruments, and it is set to evaluate proposals for its capital raise today. My colleague Smriti has this report.
Vodafone Idea will consider a proposal to raise funds today. Now, the promoter had previously, one of the promoters rather, had previously said that they will infuse up to 2,000 crores in the company if needed. So, and time and again, the company has said that the promoter will infuse these funds through an equity fundraise. So, if this happens today, it's likely that the promoter will infuse either 2,000 or a part of it in the company through a rights issue. So that's one option. Now, just to give you a little perspective, there are two promoters in the company, Vodafone PLC and Aditya Birla Group. Now, Vodafone PLC in its books has the value of Vodafone Idea is zero in the books of Vodafone PLC. So it's unlikely they will participate in the fundraise. So the other promoter left is Aditya Birla Group. And we've seen Kumar Mangalam Birla talk about how they do not plan to exit the company. Let's also look at why this fundraise is essential for the company. Let's look at the debt position. The gross debt of the company is at 2.14 lakh crore as of December 31st. 90% of this debt, that is 1.8 lakh crore, is owed to the government. But let's look at it from a shorter term perspective. The dues for FY25 stand at 5,400 crore. So the company will have to pay 5,400 crore in the next 1 year. Of this 5,400 crore, 1,600 crore are the optionally convertible debentures to American Tower Corporation. The 3,200 crore are the bank dues and spectrum dues at about 500 crore or thereabouts, and this is only the principal payment. So this is, the fundraise becomes absolutely essential for the company because the cash position of the company as on December 31st was only 500 crores. Now, if you also go a little bit forward, in FY26, the company has given that the debt that it will have to pay is at 30,000 crore. 28,000 crore is towards the government, and the bank dues will be about 800 odd crores. So this fundraise becomes absolutely essential for the survival of Vodafone Idea.
Vodafone down nearly about 3.5% in today's day of trade, but we'll continue bringing to you the latest on that front. Let's take a break for now. Up next, we get to you a comprehensive overview of a US stock that has a market cap that represents 45% of India's GDP. We'll tell you all about that and more after the break. Keep guessing until then.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Welcome back. You're watching Market IQ on NDTV Profit. And before we can go ahead with the rest of the show, we'll take a quick look at where the markets are at currently. Both the Nifty and the Sensex holding on to some of the gains they've accrued over the course of the past hour or so. Both up marginally in the green, but performing better than we saw earlier in the morning in today's day of trade. Both up less than about 0.5%. And the sectoral indices, once again, looking at some of the key gainers, Nifty Realty continues to outperform. It's up by over 1% now, as is the Nifty Consumer Durables, the Nifty IT, as well as the Nifty Healthcare Index. That's where some of the key sectoral gainers are. Moving on to the losers, Nifty Oil and Gas continues to underperform the markets today. That remains down by about 0.5%, while Nifty FMCG now trailing as well, down by about 0.1%. Nifty Energy, which has been flat for most of today's trade, is now very marginally in the green. Among the top gainers on the Nifty 50, TCS continues to stay right at the top of the pack. It continues to remain up by a little over 2%, actually closer to 2.5%. Tata Motors, Power Grid, HDFC Life continue to remain among the top performing stocks. But with having had a look at some of the Indian stocks, let's move on to global markets. US tech stocks have rallied, and how? We at NDTV Profit bring to you a special series called The Magnificent 7, where we tell you all about the top 7 tech stocks that have rattled Wall Street. The stock that my colleague Varsha has on her list for today has a market cap that represents 45% of India's GDP. Over to you, Varsha.
Hi Pallavi. So as you rightly said, we are running this series called Magnificent 7, wherein if you see the collective market cap of all the 7 companies stands at almost $13 trillion. This represents half of the USA's GDP. Now, yesterday we did speak about Google, Alphabet, that is Google. Today we are going to talk about a company which is 45% of India's GDP. If you see, the current market cap of this company stands at 1.82 trillion. This company, this company has become everyday part of our life. The logo says you get everything from A to Z. This company started in 1995 from a single shop, from a single product. They used to sell this online bookstore. Now you get everything on their platform. Yes, we are speaking about Amazon. So if you see, the man behind Amazon is, as we all know, Jeff Bezos. Now, we all know what Amazon does, but just to give a little perspective about the business model, company's sale comprises of sale of products and services business. So if you see from sale of products, they do sales from shipping fees, then you have digital media content, then sale of products, and also if you consider their service business, that constitutes AWS sales, that is cloud computing, which forms almost 15% of their revenue. Then you have advertising services, Amazon Prime membership fees, digital content subscription. Now, how does this company become so big? What was the pillar of success? So they are actually customer obsessed. They themselves say that they are not competitor obsessed, but customer obsessed. So even in their board meeting, what they do is they actually keep a chair idle for customer, and they ask their board of directors to think from the customer's perspective, as if customer is sitting into their boardroom, and what will customer expect from them. Even Jeff Bezos, sometimes he does call to the Amazon customer care service just to check whether the system are in place. So this is the reason that this company has become so big. If you see the revenue grew over 64% CAGR between 1995 to 2023, and they did turn profitable for the first time in 2001. Despite being loss making for first 5 to 6 years, investor did stick to this company. Now, was the journey very smooth for this company? Actually not. Amazon did see bumpy road ahead. So if you see between 2000 and 2002, the share price of Amazon fell almost 95%. But investor did stick to this company, and if you would have invested $1 in IPO, the price of that $1 would have been almost over $2,000. Is the story finished for this company? I don't think so, because if you see the growth prospects for the company is actually on track to launch first production satellite in the first half of 2024. So a lot of growth prospects ahead for this company. As they say, picture abhi baki hai mere dost.
Thanks a lot for that, Varsha. But before we move on, let's cut across to Gary Dubin and Dion at Takeda Pharma in conversation with my colleague Monal Sanghvi on Takeda's Biological E-Strategic Partnership. Okay. Prime Minister Narendra Modi has reviewed the Gaganyaan mission in Vikram Sarabhai Space Center in Trichy, meeting the ISRO Chairman S. Somnath along with Kerala Chief Minister Pinarayi Vijayan. Now, speaking at the Vikram Sarabhai Space Center in Kerala, he says that an Indian astronaut is going to space after 40 years, and this time in an Indian rocket ship. Listen in.
40 वर्ष के बाद कोई भारतीय अंतरिक्ष में जाने वाला है, लेकिन इस बार टाइम भी हमारा है, काउंटडाउन भी हमारा है और रॉकेट भी हमारा है.
In a landmark achievement for India's defense sector, facilities to manufacture ammunition and missiles by Adani Defense and Aerospace, India's leading private sector defense manufacturer, were inaugurated. These cutting-edge facilities, which are first of their kind in the private sector in India, will provide a significant impetus to the nation's self-reliance and technological advancement in defense. Ashish Rajvanshi, CEO of Adani Defense and Aerospace, said that the establishment of these ammunition and missile complexes represents a leap forward in our quest for self-reliance. Listen into a slice of this conversation with Ashish Rajvanshi.
कानपुर में आज अडानी ग्रुप ने एम्यूनेशन फैसिलिटी खोली है. उससे बात करने के लिए अडानी ग्रुप के अडानी डिफेंस एंड एरोस्पेस के हमारे साथ आशीष राजवंशी जी CEO जुड़े हुए हैं. सर, सबसे पहले तो ये कैसे एक माइलस्टोन है, उसके बारे में बताइए.
ये 3 तरह से माइलस्टोन है. एक इंडिया के लिए सेल्फ सफिशिएंसी एंड स्ट्रेटेजिक ऑटोनॉमी के लिए,
प्राइम मिनिस्टर हैज़ बीन टॉकिंग अबाउट कि हम इंडिया को आत्मनिर्भर कैसे बनाएं, चाहे वो एनर्जी के क्षेत्र में हो, चाहे वो रक्षा के क्षेत्र में हो। दूसरा यूपी के लिए माइलस्टोन है, ये इन्वेस्टमेंट 15 महीने में यूपी डिफेंस कॉरिडोर की प्राइवेट सेक्टर की सबसे बड़ी इन्वेस्टमेंट है, जो इन्वेस्टमेंट से इनॉग्रेशन तक पूरा 15 महीने में हुआ यूपी सरकार के सहयोग से।
किस तरीके से आपको लगता है हम लोग अब इससे क्या और इंपोर्ट जो है वो कम हो जाएगा, एक्सपोर्ट हमारा बढ़ेगा? जैसे आप बता रहे सेल्फ रिलायंट, हम लोग किस तरीके से, अगर हम नंबर्स में बात करें, किस तरीके से हम लोग बढ़ सकते हैं उस दिशा में?
आज $75 बिलियन का सालाना स्पेंड है डिफेंस का, इंडियन गवर्नमेंट का, जिसमें से $25 बिलियन आपका नए सामान के लिए जाता है। 2 साल पहले तक उस $25 बिलियन में से 20 से 22 बिलियन इंपोर्ट होता था, लेकिन गवर्नमेंट के पुश से, मेक इन इंडिया के पुश से आज धीरे करके वो सारा उत्पादन इंडिया में होना शुरू हो गया है। आज बड़ी इन्वेस्टमेंट कंपनीज और MSME सब मिलके इंडिया में मैन्युफैक्चरिंग लगा रहे हैं, और ये जो सपना हमने देखा है कि अगले 5 साल, 7 साल, 10 साल में इंडिया को सेल्फ रिलायंट कैसे बनाएं, वो हम साक्षात कर लेंगे।
इस प्लांट की अगर हम लोग बात करें, इस मैन्युफैक्चरिंग फैसिलिटी की बात करें, तो कैसे एक्सपेंशन का कैसे प्लान है?
अभी जो पहला प्रोजेक्ट है ये स्मॉल कैलिबर एमिनेशन कर रहा है, जो कि दोनों कैलिबर्स 5.56, 7.62, 9x19 जो कि हमारे स्मॉल आर्म्स में जाते हैं, उसका 150 मिलियन राउंड का यहाँ पे प्रोडक्शन होगा। 150 मिलियन राउंड रफली 20% इंडिया की रिक्वायरमेंट है, 20% ऑफ इंडियाज़ रिक्वायरमेंट। और इसका नेक्स्ट फेज़ है कि अगले 12 से 15 महीने में हम यहाँ पे 155 mm आर्टिलरी का भी प्रोडक्शन शुरू करेंगे, जो कि आज दुनिया भर की सबसे बड़ी इंपॉर्टेंट रिक्वायरमेंट है। तो 155 mm और 125 mm टैंक एमिनेशन का भी इस पार्क में, और अगले 2 साल में मीडियम कैलिबर 23, 30, 40 mm एयर डिफेंस का भी उत्पादन इस कॉम्प्लेक्स में होगा।
अगर हम बात करें एम्प्लॉयमेंट, सबसे पहले एक एम्प्लॉयमेंट कितनी जनरेट कर रहा है, कितने मैन फोर्स यहाँ पे लगी हुई है, मैन पावर लगी हुई है यहाँ पर?
आज 3000 करोड़ का हमारा इन्वेस्टमेंट कमिटमेंट है, जिससे जब ये तीनों फेज़ पूरे हो जाएंगे तो 4000 लोगों को एम्प्लॉयमेंट मिलेगा डायरेक्टली। उसके अलावा उसका जो 5x मल्टीप्लायर है, तो रफली 20,000 लोगों को इनडायरेक्टली उसका बेनिफिट मिलेगा। आज पिछले 15 महीने से यहाँ पे 1000 से भी ज़्यादा कंस्ट्रक्शन वर्कर्स काम कर रहे हैं। हम उनको कभी काउंट नहीं करते हैं, लेकिन उसका लोकल इकोनॉमी में आप इतना पॉजिटिव इम्पैक्ट देखिए। तो उसी तरह अगले 3-4 साल तक कंस्ट्रक्शन भी चलेगा, ऑपरेशन भी चलेगा, तो 5 से लेके 15,000 तक के लोग आपके अंदर इन्वॉल्व रहेंगे।
बहुत बहुत धन्यवाद आशीष जी हमसे बात करने के लिए।
NDTV is a subsidiary of the AMG Media Networks Limited and Adani Group company. Now, moving on, with that we're completely out of time on today's edition of Market IQ, but stay tuned, we have a lot more post the show coming up on NDTV Profit.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is
Hi, thanks so much for joining in. You're watching the Mutual Fund Show and my name is Alex Matthew. In this show, we try to get you actionable insights so that you can make your investment decisions with confidence and with the right kind of knowledge. Now, I don't normally talk about insurance products on the show for obvious reasons because this show has to do with mutual funds. But today, we're going to make a bit of an exception. We're going to talk about ULIPs today because there's a recent advertisement by PNB MetLife that might have confused some of you if you've seen it. I have it on the screen right here. And I'm going to point to a few of these aspects. This is the advertisement that has been playing out on social media and various other places. And you have the first point right here, that is NFO. That is new fund offer, and that is usually something that is associated, as you probably know, with mutual funds. The other thing that you have right here is a NAV, which is the net asset value. Again, another thing that is associated with mutual funds. What you have here is the name of the fund that is being launched, and it's called a small cap fund. But this is a ULIP that we're talking about. It's an insurance product and not a mutual fund. If I were to meet you and if I were to say that PNB MetLife has just launched a small cap fund, and if I was to ask you which product you think it is, you would probably say mutual fund. So again, this is a little bit confusing. And right on the top, you probably can't see it because it's really tiny print. It says that in this policy,
the investment risk in investment portfolio is borne by the policyholder. There is no specific designation of the quantity of risk that a potential policyholder might face here. So we'll delve into some of these aspects and we'll discuss why something like this is such an opportune space for mis-selling, especially in the insurance space. Now, let me introduce you to my guests today. We've got Kirtan Shah as well as Prableen Bajpai joining us today. And we're going to talk about ULIPs as well as the mutual funds that might relate to this. So small cap, of course, is what PNB MetLife has chosen to use to describe their latest offering. So we'll talk about a few small cap offerings as well. Thank you so much to the both of you for joining in. Let me start, though, with a question to Prableen, you first, and then I'll go to Kirtan on this. What's your first reaction to an advertisement of this sort, where you're talking about a ULIP, but the name of the advertisement or the product is very clearly the PNB MetLife Small Cap Fund?
Good afternoon, Alex. And, I'm happy to say that we are actually discussing this topic. Yes, the first reaction is that nothing much is being done about the kind of mis-selling which is happening when it comes to insurance and investment-linked products, because the name typically definitely sounds like it's a mutual fund, and the features of mutual funds and a ULIP are quite different. Secondly, Alex, that, since the times we've been, because insurance is a very old investment and risk management tool. And most of the people associate insurance with a product which is broadly safe. Somewhere they feel that, if you're putting our money in an insurance product, all is well. And that's not the case. And when an insurance product is coming up with a small cap fund, I think it can really mislead investors, because probably somewhere in their mind, they would still have that feeling that it's going to be okay. It's kind of a guaranteed return product, which is broadly in the traditional schemes. So I think more clarity with regards to what the features are, how you're committed to paying your yearly premiums, the flexibility and other features is so required. And I think definitely just the way SEBI has been so clear, and I think each time we are seeing that more and more regulations are coming to make mutual funds a leaner, more transparent and flexible product. I don't see the same happening in the insurance industry.
Okay. Fair point. Now, I must point out that I reached out to a few people in the regulatory space, and what I've heard is that both the SEBI as well as the IRDAI are aware of this particular product, and we're expecting some regulatory action by the insurance regulator. I believe there has been discourse between the two regulators as well. I must also point out that I reached out to the company for a clarification, and what they've said is that they don't think that they are misleading investors or policyholders by their advertisement. I had to make that mention. They have clarified again that this is not a ULIP product. This is in fact a ULIP fund. And it's important that we describe why that classification is being made, Kirtan, because in a ULIP, there are two aspects to the premium that is paid. So say the 1 lakh rupee premium, there's a 1 lakh rupee premium, hypothetically, a portion of that goes to the life cover and a portion of that goes to the investment. In this case, what they're saying is that this small cap fund that they're launching is the investment component, but it can't be sold without a life insurance cover at the moment, right?
Alex, it's quite funny because like you rightly started off the conversation saying that NFO, NAVs, SIPs, these are very common terms which are associated with how the mutual fund industry operates. And because we've seen over the last 4 or 5 years how there has been so much of awareness around mutual funds, and the retail investors really want to bite into the investment vehicle, I think the insurance side of the business is trying to leverage the already knowledge that is spread around the mutual fund business by using these terms. Now, very clearly, when you use an NFO in the MF side of the business, it's actually a new fund which is getting launched. But like you rightly said, I think investors here have to understand that when you put a 1 lakh rupee of premium in a ULIP product, even when you don't want to buy an insurance, there is a compulsory insurance component that you have to buy. So let's say out of a lakh of rupee that you've invested, this is just for an example. 10,000 of that will compulsorily go towards buying you a term insurance even when you don't want it. Over and above that, there are other charges like probably a policy admin charge or a premium allocation charge that gets deducted over and above the mortality cost that we just spoke of. Whatever amount remains after these charges are deducted is actually where the investments come into picture. Now, you are given a choice to select between wanting to do equity, debt, or an hybrid as a product. Now, this new ad that we are talking about is one of the funds that have got introduced here on the equity side. So as a policy, you might have a lot of funds to offer on equity, a lot of funds to offer on fixed income, and some funds to offer on the balance or the hybrid side. Now you are introducing one new fund in the equity basket, right? Is what this ad is all about. And like you rightly said, that this is just a fund which is within the equity basket, and that fund cannot be offered to you individually unless you've bought the ULIP, right? So it's a subsection of buying the ULIP and not a product in itself.
That's a fair point. We've often spoken, Kirtan as well as Prableen, about insurance and the mixing of insurance and investments. And that's essentially what ULIPs are. Like Kirtan was just pointing out, Prableen, there are various options available: equity funds, income fixed interest in bond funds, cash funds, balanced funds. But the most important question, I think, is whether or not you should go for an insurance plus investment product in the first place. What do you say about that?
Again, Alex, insurance plus investment, ULIPs are the closest competitors for the retail investors' money. And what is being done is because of that little part of insurance that you get, which is 10 times of the premium. So let's say I buy a policy where I'm paying an annual premium of 50,000. I get an in life cover of about 5 lakhs. Now that 5 lakhs is no ways sufficient enough as a life cover. If something happens to me, that 5 lakh won't be enough for my family. But because of that, certain amount of tax benefits get embedded in the product. And because of that, the appeal tends to go up. And that is why ULIPs are still sold. Now we do have a limit where a premium of more than 2,50,000 a year. The tax deductions and benefits are really not there to the fullest extent. But answering your question, whether you should be mixing them or not, or these bundle products are good, ideally it should be kept separate. Whether you see in terms of sufficiency today, as a retail investor, if you are in a high tax slab or you're earning a decent amount a month, your insurance requirement would run into crores. It may be 2 to 5 crores, what you require for your family to take care of their life if you are gone. And any of these ULIPs, unless and until you're paying a very, very heavy premium, where you actually lose out on the tax benefits later, will not suffice. Secondly, that investment in itself can be just kept clean. Let's say, just buying one ULIP or having these 20 different ULIPs, where names like multiplier, optimizer, wealth are used, you really don't know where your money is going. So other than the comfort that investors get by investing in these products, I think ideally it should be a term plan. You have to have your risk management separate from your investment planning, which should be based on your goals, how much you require for your child's education, your retirement, your travel, and other things. And ULIPs can definitely be bought by investors, but they have to be sure about what purpose are they meeting for the investor, and where do they fit in the overall portfolio for the investor.
One of the points that you mentioned, Prableen, has to do with the tax aspect of it, and I think there was an attempt to correct what was seen as a bit of a gap between equity-oriented mutual funds and equity investments as a whole and ULIPs, but there still is a tax advantage. So, Kirtan, why don't we lay that out? And after that, I do want to talk about the issue of the lock-in period. But first, let's talk about the tax aspect and whether or not that's enough of a reason to choose ULIPs.
Alex, there are 3 things to look at while we talk about taxation to do with ULIPs. First, of course, is up to 1.5 lakhs, the premium that you are paying. You can claim that as a deduction under ATC. Exactly the same way probably while you do an ELSS in a mutual fund, right? Also, if your premium is 10% of your sum assured, or the other way around, your sum assured is 10 times of your premium, which means if your premium is ₹1,00,000, your sum assured is 10 lakhs. If that's the situation, then the maturity amount is also tax-free. But this is conditional to your maximum premium not exceeding 2.5 lakhs, which means 2.5 lakhs is the premium that if you invest in ULIP and you have a 25 lakh worth of sum assured, in that situation, your maturity amount is tax-free. And of course, that's a very large advantage that the ULIPs still command over any other products in the same category. But I think, like Prableen was also mentioning, that probably this is for a very small set of audience who probably does not have an insurance or does not do any investment, and hence that 2.5 lakh of yearly investment probably might look interesting. But the day you cross this 2.5 lakhs of ULIP total premium investment, either in one policy or in multiple policies, your maturity value ends up getting taxed, right? So if you've taken equity fund, you will be taxed at 10%, and if you've taken fixed income fund, you'll be taxed at 30%, or your slab rate, whichever that turns out to be. So over 2.5 lakhs, probably this largely has no real advantage in terms of taxation.
And you know what else? It seems like it's a little complicated if you are trying to manage a portfolio of investments that gets larger and larger over a period of time, because ultimately you're looking at asset allocation as a strategy, and you want to have fixed income plus equity. And I think that this tax aspect is also complicating things. I do want to talk about the lock-in period and why that should be a bit of a red flag, especially if you're approached by somebody trying to sell this product and who talks to you about it being a small cap fund. But we will do that after this very quick break, so do stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade,
Welcome back. You're watching the Mutual Fund Show, and we're in conversation with Kirtan Shah as well as Prableen Bajpai. We've broken from the norm and we're talking about the insurance industry. In fact, we're talking about a ULIP that has been labeled as a small cap fund, and this is because the PNB MetLife small cap fund that we've been discussing both today as well as yesterday. Now, Prableen, a hypothetical scenario, because this occurs quite often. You get a call from somebody from your bank and they say, hey, you know what, Prableen, we've got this new product that is available. It is the PNB MetLife Small Cap Fund. And you should invest in it because it's a great new product. You're getting it at an attractive NAV of 10 rupees. This is an introductory offer available till the 29th of February. The issue here is that you don't necessarily know about the lock-in period that is available for 5 years. Why is that a big red flag?
Absolutely, Alex. And the sad part is that the timing of the product launch, because we've already seen small caps do so well. And I think very recently, even Kotak Small Cap Fund has, put a ceiling on the amounts that they would be taking in the small cap fund. So, of course, it's an overheated space, and this is the best time to sell a small cap. But coming to your question on why the lock-in is a red flag. So with any mutual fund products, Alex, I can, start an SIP if I lose my job or for some other reason I cannot pay my SIP or I want to reduce my SIP. It's very, very easily possible. And if I want to discontinue it, I can just, stay invested with, let's say, the 12 SIPs that I had done or 5 SIPs, 7 SIPs I had done in the fund. So it stays invested in that particular small cap fund, for example, and it can continue to grow. When it comes to an insurance product, a ULIP, if you stop paying the premiums, because a lot of people are sometimes not aware that, let's say, this 2.5 lakh is not a one-time thing that they need to do. It's the recurring charge, a premium for the next 5 years. And if they want to stop investing, what happens is this amount moves into the fund, discontinuous fund, and there they are only earning returns which are equivalent to your savings bank account. And the money will also come back to you only after a 5-year period. So one really has to be sure whether you can, stay committed with that money, if you can actually keep putting it in the fund for the next 5 years. And the other problem, what happens is, Alex, that sometimes because people, of course, you don't want to sort of surrender the policy or discontinue because, there are charges involved. They stop all their better investments or they start sacrificing on other things because now they need to pay this huge premium that they're committed to. So definitely the biggest red flag, and that is why complete information about a product is so needed.
Okay. The last point on this, and I will take one viewer query that has come in, but Kirtan, most importantly, suppose somebody is stuck in a product that is not necessarily the best for them. We've just heard Prableen lay out what happens in the event that you realize this, and if you stop paying, it gets into a situation where you're a little stuck. But is it better to not pay and to say, okay, that's something that I will lose, and then switch over to better instruments or investments in this situation? What's the best thing to do?
So Alex, this is very individualistic because you will have to understand what the premium is. Which year in the cycle are you stopping? How much have you accumulated? And if you surrender the policy, how much are you going to get back? A lot of these calculations will keep changing depending on at what point in time and for whom are we talking about. But even if we have to still generalize this, I would rather say that, if you are very early in the investment, you are better off letting go of some part of it because they will cut some charges and give you back a little as surrender value. Because the longer you want to stay invested, right, the compounding effect will kick in. And if you're in the wrong product, the compounding will not work for you. You might as well want to move to a better product where the compounding starts working for you, then against you because of the charges of the product. So though it is individualistic, but if you still have to generalize, I would rather say that you want to get out of the wrong product and make sure that you move into the right product, even if that comes at a cost of some charges to you.
All right. And the bottom line, of course, is try and separate insurance from investments. And we've been talking about mutual funds quite often. this is something that you should consider. But we'll get to that in just a bit. I promised to take one viewer query, and this one is coming in from Ravi Agarwal. He says that he's 62 years old. He gets a pension of approximately 2 lakh rupees per month net of tax. He doesn't have a precise figure of monthly expenses as his wife and him have lived in the UK and UAE for the last 30 years, but he guesses that his monthly expenses, including health insurance, will be covered by the pension amount. They would also like to use about 1 lakh per month of the same pension amount for travel and other expenses. They don't have mutual fund investments right now, but they have about 8 crore rupees in NRE fixed deposits. They're looking to return to India soon and would like to invest that 8 crore amount in mutual funds and other investment tools to generate between 10 and 12%, which I think is a reasonable amount to expect. What funds would you recommend at the onset? So, Prableen, how would you recommend getting, just started on something like this?
So, Alex, because once they move back to India and the tax status changes, the benefits of keeping money in your NRE and NRO account won't be there. So for him, I think, yes, moving into mutual funds will be a good idea. Let's say if you're looking at 30 years into retirement, it will be nice to have some sort of tax efficiency and inflation-proof portfolio. So definitely for him, I think start with a mixture of large caps along with a mid cap fund, and I think along with that a hybrid fund can be picked for him. The portfolio would, the allocations would depend, I think, on what kind of a risk appetite they have, and I think clubbed with that, even debt funds at this point, locking into state development loans and the combination with government securities, I think that can also work well for them. I think the accurate structure would depend on the discussion.
Any quick names of schemes in the categories you mentioned?
So I think in the hybrid space, something like a balanced advantage or a multi-asset from SBI, ICICI, the more credible fund houses, HDFC. In the large and the mid cap, I would say just simply go with a Nifty 50 equal weight, and the mid cap, I would say again an index fund, because we are looking at a 25-year horizon.
Fantastic. All right. Prableen as well as Kirtan, thanks so much for joining in on this slightly different edition of the Mutual Fund Show. It's been a pleasure as always speaking with you. And viewers, hopefully this conversation has been beneficial to you. Write to us on any one of our social media platforms to tell us what you think. There's lots lined up over the course of the day. This is NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you see.
Hello and welcome. You're watching Large Trades, a show where we talk about all kinds of bulk deals, block deals, large trades and every kind of volume buzzers. I'm your host Mihika Barve and with me is Agam Vakil. Agam, why don't we start with a market check before we go on to the buzzing stocks?
Right, thanks Mihika. Well, it's been a largely quiet day of trade. We aren't seeing too much traction when it comes to the benchmarks. So what we are seeing is a considerable amount of gyrations within a very narrow range when it comes to the Fin Nifty, but I'll come to that in just a bit. As you can see, the Nifty is not any void of volatility. While it has, well, moved up, we've also seen a little bit of weakness seep in the last 20-odd minutes of trade. And as you can see, it's currently flat. But it's not bereft of very sharp moves upwards as well as downwards. But this is as far as your benchmark goes. Let's take a look at the Bank Nifty and see where that one's faring. And as you can see here, we are looking at flattish moves there as well. In the Nifty, let's take a look at the constituents and see where there's a pull and push and what's keeping the indices higher on the other hand. So what is in fact providing strength is the TCS. Of course, we have a broken note this morning, which is contributing to those gains. ICICI Bank along with Tata Motors. What is weighing down on the other hand on the index is State Bank of India, Bajaj Finance and Adani Ports. What about the broader markets? Let's take a quick look at that as well. And largely, well, we have seen them move. Okay, so now we've started to see a little bit of an underperformance when it comes to broader markets, at least as far as the small cap index is concerned. Then most through the course of the day, we did see that it maintained strength, and now it's given away a lot of its gains, and it's currently trending just marginally in the green. For the mid cap space, on the other hand, well, it's a tad different. But overall, if you consider things and how things and the stocks which are actually contributing to the weakness, let's pull that up and take a look at that as well. So we have Shriram Finance, which is down around 5.8%. And that perhaps is the big contributor to the downward move for a lot of these broader market indices. Vodafone Idea continues to remain weak since morning. It's down around 5% now. It does seem like the fundraising plan hasn't really gone down well with a lot of investors. I wonder why though. And NMDC is down around 4.7% as well. And a bout of profit taking coming through for REC and PFC. These are one of the bigger gainers, a few of the bigger gainers as far as your yearly returns go. But we've started to see some amount of consolidation seep in for both PFC as well as REC. But on that note, let's take a look at what we are discussing in today's show. Mihika, what's on the lineup?
Yes, so let's take the first stock that we have in focus on the back of a large trade. It's one of India's largest QSR operators, and that's Devyani International, and it's buzzing on the back of high volumes. Let's bring in Varsha with more details on this one.
Hello guys, so if you see volumes are trading at over 3x for Devyani International and stock is down almost 3%. Now this is on the back of 0.56% equity change hands between the price of 156 to 158. Now buyers or sellers are not known immediately, but let's look at the results highlights for the company. If you see Devyani's core brand, that is KFC and Pizza Hut, are seeing a decline of their same store sales growth due to impact of subdued discretionary spending, and the impact is higher in case of Pizza Hut. Now while KFC is comparatively better placed, it is also seeing a declining same store sales growth. Now as per the management commentary, this is on the back of global impacted by the macro factors basically, and as a result it may see some time to normalize. But if we see other highlights for the company, or what are the guidance that company has given in with perspective to their stores, so they've added 94 new stores in Q3 FY24, taking the store count to almost 1,452 stores, and including the Thailand acquisition, total store count reached to almost 1,735. Also, if you see, company is on track to inaugurate 250 to 275 new outlets in FY24, the last quarter. So let's see how this pans out for the company.
Thank you so much for getting us those updates. But the next one on our list is CMS Info Systems. Well, it has seen a lot of weakness in today's day of trade, but we have Mihika here with us to tell us a little more about that. Mihika, what are you tracking here?
Yes, so it is a cash management company in terms of ATM points and retail pickup points, and it did go to an intraday low of around 6.79%, and it's not, it's gained marginally 1.3% in the past month. Now, volumes were more than 14.6 times this 30-day average, with total volume standing at 1 crore equity shares, and this was mainly on the back of a block deal that took in the start of the day 4.2 crores, or which is 27% of the shareholdings changed hands at a price of 375.3 crores. Now the block deal was worth 1,576.86 crores, and sources also told NDTV Profit yesterday that the promoter's sign investment was to sell up to 26.7% stake of the company, and the floor price for the large trade was set at 360 rupees per share, and IIFL Securities was the sole broker on the large trade. The company also saw its Q3 earnings a few days back when revenue was up 19.3%, EBITDA was also up 11%, and net profit also gained much to 87.1 crores. One of the main highlights was the company's cash logistic business was up 11% year on year at 375 crore revenue, and the company is also on track to deliver revenue of around 2,250 to 2,300 crores in FY24. But moving on, Agam, what else do we have on the list today?
Right, absolutely. Well, we move on and talk about Uniparts India, which is also trading on high volumes. In fact, it's right at the top on the list as far as volumes are concerned, and we are looking at some sharp moves there as well. It's maintained its gains through the course of the day. As you can see, it's higher up as much as 12%. Let's get in Anushi to give us more updates here. Anushi, good afternoon.
Afternoon, Agam. So as you correctly mentioned, the stock is one of the most buzzing in terms of volumes today. It's about 22 times its 30-day average. Now, if you have to look at the intraday high, also about 17% of an intraday high over here. While there are no fundamental drivers driving the stock performance related to this, let me just go and give a recap on the Q3 performance. So if you have to look at the revenue, that dipped at about 22%, while even the margins were down about 870 bips to 70.1% compared to 25.8%. Even on the similar lines, even PAT took a beating. This is on the basis of the company's soft demand scenario that they have been seeing over the quarters now. Especially in the agri business, which constitutes about 62% of their revenues. However, they say that they are expecting the US construction equipment business to remain healthy. But one of the major reasons for this kind of performance in Q3 was the impact of their inventory destocking, which they are now going to expect to normalize from Q4 onwards. So that remains a key monitorable going forward. Again, as I mentioned about the sequential recovery, that is on the watch out. Going ahead to FY25 though, the company has retained its margin guidance of about 20 to 21% EBITDA, while it remains confident on the achieving a mid-teen revenue growth. So again, that would be watched out for in terms of revenue. Now coming to the valuation part, so the current PE multiple is trading at about 18 times 18 times its PE, now compared to about the 1-year average of about 16 times. While if you look at the stock performance also, not much of a surprise. You're seeing the kind of demand environment with about 1 month a 6.2% stock return, while the 6 and the 1-year returns are about just 1.7 to 10.3% respectively. So this is on Unipart's overall summary why it's buzzing in volumes today.
Thank you so much, Anushi. Moving on, we have a railway stock that is in focus today, and that is RailTel Corporation. Now, it's up 10.3%, and it's also shown quite a bit of strength. In the past 5 days, it's up around 20%. Agam, what is going on? What's surging the stock so much?
Right. So, Mika, this is not of surprise because we've seen a considerable gain in the entire sector over the course of the last 12 odd months. And RailTel Corp is one of those counters which continues to gain on the back of order wins coming through. Over the past 2 weeks, it has gotten substantial orders. In today's day of trade, sure, it's advanced by around 10.5% currently. It's off days highs, but it's still showing an up move around 10%. Its intraday volumes highest in 4 weeks. In fact, its volumes today are 4 times its 30-day average, and it's also taken it to a life high at the moment. Now, what's really playing in favor of RailTel of late, of course, is the order book. Now, at the end of the third quarter, its order book stood at around 5,000 crores, and the management has suggested that they're looking to add another 2,000 to 2,500 crores in orders over the course of the next 12 to 18 months. Moreover, we have seen, well, I would say not the best quarter gone by for RailTel, and which is why we did see a little bit of correction after its earnings came through, where its revenues were up 11%, 11.5%, something that you really wouldn't expect from a company which has run up so significantly. And margins had seen a contraction. Its net profit was down around 9%. But I reckon at this point in time, a lot of investors are trying to factor in the kind of revenues that can be anticipated from RailTel going into not only Q4 but also FY25, and that's potentially one of the reasons why we have seen that surge. There's no letting up from all these government contracts that you have seen over the past 6, 12, 18 months. And it does seem like RailTel continues to see that tailwind coming through, and which is why we're looking at that one currently trading at a life high. So that's as far as RailTel is concerned. And I guess the final stock on our list today, Mihika, is Dollar Industries.
Yes, Dollar Industries has been in focus. Today reached an intraday high of 6.9%, and the stock has shown some strength in the past month as well as in the past 1 year. It's up around 14.3% in the past month, and in the past 1 year, 64%. Now, volumes were at more than 3.8 times the 30-day average, where total volumes stood at around 6.25 equity shares, and buyers were 2.28 times the sellers. Now, one of the major highlights were the Q3 highlights, where volumes were up 30.4% on a year-on-year basis, and EBITDA also surged 68%, while net profit was 2.3 times on an annual basis. The West contributed the most to the revenue, while in terms of gender-wise allocation, the men contributed 83% of the revenues in Q3, while Innovare, the Innovare segment of their portfolio, are responsible for 81% of the revenues. In terms of future revenue estimates, when you compare it to its peers, we have Lux Industries, Rupa Company, and Page Industries as comparables. But if you see the FY24 and FY25 estimates have been stronger for Dollar Industries, double-digit growth from 11 to 13%, while companies like Lux Industries and Page Industries do have a negative consensus estimates for FY24 itself. But that was it on the last stock on our day. Moving on, it's time to slip into a short break, but do stay tuned as we have lots more lined up on the other side.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams? You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. This is Large Trades, and we are talking to the management of Servotech Power Systems, who's bagged an order for 1500 DC fast EV chargers worth 102 crores. To take us through what is in store for the future of the company, we are in conversation with Raman Bhatia, founder and MD of Servotech Power Systems. Raman, good afternoon. Thanks so much for joining in. Let's start off with this particular order. What this order does for your overall order book, where does your order book now stand at, and what kind of execution of this particular order book can we expect as we move into Q4 as well as FY25?
First of all, thank you very much for having me on this show. And if you're talking about this particular order of this SPCL and OEM orders, which you're talking about 1500 chargers, this order we have just got, and for the preparation and for so many things are there, so it will by default fall in Q1 or Q2, right? And if we are talking about the pipelines, then around 10-15 days back we have got another order that is from BPCL, which is also around 120 crore. So I'm very excited. The overall orders are very big, and pipeline are very strong right now.
Hi, Mr. Bhatia. This is Mika this side. Could we get an approximate number of your total order book as of today, and at what time period do you expect that to get executed in the next fiscal? What part of it?
Unfortunately, because we are a listed company, so we cannot disclose everything right now. But what we have disclosed already on in a news and on a NSE, according to that, and with a standard sale which is coming from our channel sales, the order book is very large. And if we are talking about that, so in 21-22, which turnover we have already booked last year, more than that orders are already in our order book. So things are pretty good.
Okay, Raman, the reason why we want to understand what the future holds as far as the company is concerned is we want to try and understand how the quarters gone by? Because from what I understand, we are looking at a decline in revenues, at least for the quarter gone by. And moreover, the profitability has also taken a little bit of a hit, even though you guys are maintaining your margins. What can we expect going forward when it comes to your top line and the bottom line?
Yeah, it was happening just because of, if you are aware, that government policies has been changed because there was so many loopholes in FAME 2 policy. So, hello, are
Yes,
you
yes,
listening
please,
me?
yeah, please go on, Raman.
So, due to the FAME 2 policy, there was some loopholes. That's why government has taken very strict actions against so many companies, and that's why in a EV charger they have changed all the guidelines and product specifications, and so many things they have changed. So for this whole process, so many projects got delayed, and there was a delay for more than 6 months. So if we are talking about Servotech, then our overall business uh, till 2021 was dependent more than 85% on a tender-based business. But in a last year, we have changed our overall business uh, fields. Now it's diversification in OEM and channel sales also. Now we are not fully dependent on tenders, and now it is around 50-50%. And in a near future, it will change a lot. Because we are working with the automobile companies, so many OEM companies, and now we are working for our CPOs, and we are working for our fleet owners also. So things are very good, and you will see big bang in a revenue and in a profits in coming quarters.
So, Raman, that's exactly what I want to try and understand now. You suggested that the focus between your tender business as well as OEMs and channels, if you put this into two different brackets, is now 50-50. So by the end of FY25, I reckon that your focus will be on further diversification. How will the split look like by the end of FY25? What are you envisioning?
I think it is more than 60% depend on this OEM, automobile companies, and export also. If you will, if I ask you in Q4, you will see around 8% of the turnover will come from export also. So we are also focusing on export also.
And in terms of product breakup as a percentage to the allocation to revenues, what can you maybe give us some kind of insight on what products would have majority focus in terms of your top line?
If we are talking about we are distributing total products in two buckets. One is a solar power generating systems, and one is EV chargers. So if we try to break up, then it could be a ratio is around 60 and 40. But in coming future, it could be a 70 and 30, because we are more focusing on EV chargers.
Okay, and Ms. Bhatia, one last question to you. In terms of production capabilities, where does the company stand right now? How many AC and DC chargers does it produce per day? And where will the production capability stand after the new facility is in play? And what's the timeline execution for that?
We are already, we have done one MOU. We have signed one MOU with the UP government around 6-7 months back, but unfortunately it was not through till now, just because of land acquisition and so many things in a pipeline. So we have immediately started with a mid-term plan. That was we have just rolled out one new factory plant in Sonipat, Haryana. It is nearby our existing factory. So right now our production capacity for if we are talking about DC chargers, then our capacity is around 400 units per month. It is a DC charger. And if we are talking about AC chargers, then our capacity is around 5,000 chargers a month. But with this new factory, we will reach around 1,000 chargers per month with the DC chargers, and around 15,000 to 20,000 chargers of AC chargers a month.
Okay, Raman, we'll leave it at that. Thank you so much for joining us and giving us clarity on the business and, of course, how things can change around in FY25. We wish you the best for the future.
Thank you. Thanks a lot.
Thanks. That's the management of Servertech telling us all about all the plans that are in store. But we move on to talk about Exicom Telesystems Limited, which has hit the Indian primary market today. And the public issue will remain open till the 29th of February 2024. That is this Thursday. The IPO is priced at 135 to 142 rupees per share. And the company aims to raise as much as nearly 430 odd crores. This is what the management had to say. Listen in.
We are, as you rightly mentioned, we are in a new age business of EV charging. Plus, we have another business which is, what we call as critical power solutions, which produces specialized power electronics for telecom and lithium-ion batteries for telecom, so the network can work 24/7. So underneath both these businesses, from an operation point of view, we are a common power management solutions company. And the proceeds are being used, about 150 crores is being used for a new manufacturing facility in Hyderabad, which will produce all our product lines. It is being used in R&D investment, so we can develop products for future long-term technologies. It is being used for working capital, both retiring some old working capital that we have, as well as a new working capital. And the remainder is general corporate purpose.
Give me a sense of the kind of work that you do in critical power solutions, because you majorly service the telecommunication industry. So what is the kind of orders that you can get from there, and the growth that is there? Because if I'm not wrong, it's basically supporting the tower infrastructure in some way with respect to power solutions or storage of power, basically. So what kind of growth do you see in that segment?
Yeah, so as you correctly observed, we manufacture power management solutions and lithium-ion batteries, which help to power the telecom network 24/7. Telecom network has specialized power requirement, whether it's the towers, telecom exchanges, cable landing stations. They have specialized power requirement, and they also need power in case of grid interruption or failure. That's where our products come into use. As per the CRISIL report, which has been published, the growth rate in telecom is a fairly mature market. The growth rate in telecom products is between 8 to 12%, depending on what product category we are talking about of ours. As far as lithium-ion batteries are concerned, because of advent of EVs and the demand created for lithium-ion batteries and the supply which has come out globally and hopefully in India soon as well, there has been sharp a shift towards use of lithium-ion batteries from traditional lead-acid batteries for us in the case in telecom, but the same shift is happening in many other sectors.
And with that, we are completely out of time. But do stay tuned to NDTV Profit, as we have India Market Close coming up next.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles. Hello and welcome to India Market Close right here on NDTV Profit. And there's some bit of profit booking that's probably happened at the broader end of the spectrum. The large cap end is exactly how it was when we started off trade. If you just draw an imaginary line from the moment we started till now, you'll probably see just a very faint downtick, if you will, but nothing to, or a very faint uptick, if you will, nothing too dramatic there. Bring up the banks and bring up Nifty IT, because IT was participating in a big way today. And I reckon that by virtue of what TCS has done, Nifty IT could actually be doing much better, 0.62% higher. So that one is pulling out the chops today, not so much for the rest. The mid cap and the small cap indices very quickly, that started off flattish to marginally lower. Mid caps are down 0.5% currently. Small caps actually had a bit of a crack. And frankly, if you look at the Nifty small cap 250 intraday, it'll show you a bit of a slide in the last half an hour, 45 minutes of trade. I'm sure Harsh will mark that. Pull up the heat map and show you what's, okay, this is the small caps, and look at this. This is what I'm talking about. The kind of slide that we've seen in the last half an hour to 45 minutes of trade. So the market breadth would have worsened just a little bit. But bring up the heat map and show you what's moving and what's not at the large cap end of the market. Let's start with the losers first. Bajaj Finance is the top loser now. It wasn't the case for a better part of the trading day, but now looking a bit sluggish. There is a bit of a sector rotation happening out here. And frankly, if you look at the top 5 losers, they're all from different sectors, right? There is Divi's from Pharma, Hero Motocorp, Auto, UPL Chemicals, BPCL yesterday did well, but today coming back as well. And yesterday Adani Enterprises and Port were up in the green. Today they are down in the red as well. Even Stevens for the gainers and the losers. And while Nifty IT is doing well, Infosys is not. But TCS is, to my mind, stock of the day, 2.5% higher. Some strength for Tata Motors. And again, you know, different courses. Hero Motors is down, Tata Motors is up, Bharti, Eicher, a few others out there. Very, very stock specific moves that are happening. But Harsh, the broader end of the spectrum has some very interesting moves, despite the fact that the index has slid considerably in the last 45 minutes.
Well, yes, absolutely, Neeraj. We'll talk about names, but before that, let me quickly highlight the advanced decline ratio, which you were referring to. If we can have that, you know, there you go. You'll see that sharp divergence in the last hour or so of trade, which Neeraj was referring to, and that pain is coming from the broader markets. While we predicted the color on the benchmarks, Neeraj, the broader markets clearly not doing as well. Let me quickly pull out some specific names. You have the likes of a Hind Rectifiers. That one is buzzing up 10% on the back of an order win, 200 odd crore. Paisalo Digital also was on our channel earlier today. Again, IREDA has signed an agreement, 200 crore of loan disbursals through Paisalo Digital, and that one is up and away, 4% higher. You also have Happiest Minds, some bit of business line, streamlining of business lines that they are going to be undertaking, 4% higher on that one as well. Let's pull up the likes of a PayTm, just out of curiosity on where that stock is settling in, at absolutely flat where we see it. JK Cements down around 2.5 odd percent, 4.5 odd percent, up 2.5 odd percent, Cello up around 4.5 odd percent. Both of those on Motilal Oswal notes, buzzing in trade today. PayTm, of course, slew of notes, and along with it, all of the news that's been surrounding PayTm. I won't cover that. CMS Infosystem, Dixon Tech, Vodafone, all three of which are buzzing on the back of news, all three of which are lower on the back of news. And those three are also in focus. Last off, I want to mark out something like a Shriram Finance. That one has fallen sharply midway through the day. It's currently trading roughly at the day's, just off the day's lows. In fact, 5.5% lower, that one as well.
Okay. Let's get in our guest to try and talk about what to do in a scenario like this. Kunal Shah, Senior Technical and Derivative Analyst at LKP Securities on the technicals and the derivatives side, and Dharmesh Kant, Head of Equity Research at Chola Securities on the fundamentals. Gentlemen, good afternoon, both of you. Thanks for taking the time out. Kunal, we've been getting this response from most experts on the opening of the closing show about not quite seeing the need to trade the index because the index is doing virtually nothing and keeping it very stock specific. Is your approach the same?
Good afternoon. I think exactly that is what we are seeing in the markets. There is a sector-specific approach which is working out. If you look at the headline index, Nifty, Bank Nifty, they have been just been consolidating already. However, if you look at the larger undertone for the market, it still remains bullish from me. For me, Nifty has to give a closing about 22,200.
I have to come in there. Kunal, I have to come in there because I think we're getting your audio slightly glitched. We'll just try and get that corrected. Dharmesh, can I come to you? The markets for the last 2.5 months have been almost flatlining, a couple of percentage points higher from the December 25-26 odd period. Par for the course, and you reckon that is how it would be until valuations become a bit more reasonable?
Yeah, good afternoon. Yes, definitely so. I mean, that is what the market has been doing. It's more of a sectoral rotation kind of game, where incremental highs are not made on a stock specific basis. It's like two step up and then again two step down kind of an environment in which the market has been trading. Valuations has been very high, as you have already pointed out, and that's the only concern. What is keeping the market up, I think, is the liquidity. So liquidity flow is so huge that the money has to be deployed, and that is what is holding the market up at the current levels.
Sure. Point taken, Dharmesh. Let's quickly mark out the stock of the day. TCS definitely ruling the roost for the day, Neeraj. And 2-3 levers which comes out of that UBS note, which is why the stock is up and away in trade. In fact, now, sitting at the day's high, sitting very pretty. One is with regard to growth. They believe growth is going to come back in a stronger way. Plenty of levers that they highlight as part of the note for growth. But more importantly, the margins. They believe 100 basis point margin improvement warranted over the next 4 to 6 quarters. What they are saying is margins will largely be aided by attrition coming down, efficiency starting to go up, and all of that will aid the gross margin number by around 100 basis points or so over the next 4 to 6 quarters. They've given it a 28 times earnings kind of a valuation. 4,700 rupees is now the target price, upped from 4,050 rupees. Neutral to buy. It's a big move that we've seen. Dharmesh, quickly, if I can ask you for your views, is this now a time where IT is at an inflection point? Are we going to see more order wins come through, larger order wins come through? And therefore, is this the start of a new cycle when it comes to IT?
Yeah, Harsh, I will beg to differ on that count. Let's see one more quarter. And more larger order wins or the bigger order wins will come from the AI-led IT offerings. So for that, I think still there is 6 to 9 months to go. I mean, citing TCS management himself, the CEO himself was very clear on the fact that the texture of hiring will undergo a severe change. So the type of people they are now hiring is more to do with AI thing, and they have just made that all agreements in place or memorandum of understanding in place. So for that product to be on the table, I don't think it will be before this calendar year end. So yeah, to say that bottom line is place, definitely I don't see more downside for IT companies from here. But who will gain the race and who will gain more business traction, order wins, that is still out for judgment. So difficult to say at this juncture.
Okay, Dharmesh, if I can pursue that point a little bit more. Yes, there is some bit of skepticism within the IT pack, especially the larger names. Smaller names, do you prefer that? Mid-cap IT, is there at all a preference within IT for you?
Yeah, definitely there was. I mean, KPIT or Mastech or Genser, Birlasoft, they all were looking good at a particular point of time, maybe 9 months down the line. But the stock prices have moved up so fast just based on the news flow surrounding their tie-ups with more of their global counterparts as far as AI business offering is concerned. And that is where the maximum traction has come. So one is AI, the other is in ERD space. So engineering, research and development space, anything to do with that, the business has been good rather than the normal SaaS kind of a platform offerings. So there the business has taken a back seat. So I'm waiting for some decent correction to set in most of the mid-cap companies to name a few, maybe a KPIT Technologies or a Mastech or a Birlasoft or a Genser. If those stock prices come down, definitely I would be a buyer in same, not at current levels. Tata Elxsi is one company which does give a good risk-reward ratio even at current levels. The stock price has corrected significantly. I think it can be accumulated for a long-term perspective.
Right, take your point there. Now, let me switch focus, move it across to Ashwini Agarwal of Demeter Advisors, because we spoke with him, or rather Neeraj spoke with him earlier today, and asked him about what sectors can you bet on as a defensive bet in this market. Here's what he had to say.
I think as a defensive trade, I would say consumer staples in India and IT services are both places where you're likely to lose less in case the market goes into a correction. I mean, these are not fancied places to be for obvious reasons, but I think valuations are reasonable. There is good, management in place. Cash flows are very, very strong. So I think, on a relative basis, these are places to hide.
Well, certainly in some means some of these stocks have done really well for themselves. What's come off a little bit of the boil today are some of the power related names as well. So REC is a prime example, 3.5% lower for that one. We've seen some of the others to come off. Inox Wind, for example, was trading flattish the last time I checked. So a clutch of these power names have looked slightly wobbly in the session today. And Harsh was talking about Shriram Finance, a clutch of other financial names. Home First is down 2.5 or 3%. RBL Bank down about 3%. IOB is down about 3%. So financials are, in some sense, the broader end of the spectrum, are just taking it on the chin because some of them have moved down on fairly high volumes as well. PNB Housing too, down about a couple of percentage points. Dharmesh, the valuations of some of the large banks have gone nowhere the last 3-4 years. If anything, they've come off. The prices have gone nowhere. Would you, if you had to put fresh money to work, bet on an HDFC, Kotak, ICICI, or would you choose the second-rung financials?
Neeraj, I would bet on the large caps, but there I would be selective. I mean, ICICI Bank is fine along with IndusInd Bank, rather than choosing a Kotak Bank or an HDFC Bank. The reason is very simple. ICICI Bank is still aggressive as far as lending is concerned. Kotak has gone into its own time zone kind of a frame for the last 3-4 years. They have not been very aggressive on the business fund. What they have been doing is to keep the asset quality in check, but then you have to pay a price which they have been paying. And from the public sector space, I think Bank of Baroda and Canara Bank, these are the two very aggressive players out there. Valuation-wise, still comfort is there. So to sum it up, basket of four, where ICICI Bank, IndusInd Bank, Bank of Baroda and Canara Bank from the banking space looks pretty attractive even at current levels.
And a clutch of other price volume buzzers as well. We'll talk about some of these volume buzzers on the other side of this very quick break. Stay tuned. Dharmesh, stay on with us. Viewers, stay tuned. We will take a quick break, be back with more market action.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Back with India Market Close right here on NDTV Profit. A clutch of stocks buzzing in trade. Anushi joins us with a list. Anushi, good afternoon.
Afternoon, Neeraj. So right at the top, we have Uniparts India with a stock with an intraday high of about 16.9%, now with its volume buzzing about more than 23 times its 30-day average. Now, while there are no fundamental drivers driving the stock performance, if you had to look at the Q3 performance, a weak performance over here with 22% down in their revenue as well. But the company remains confident on achieving a mid-teen growth and improving its margins back in the 20 to 21% range going forward. Next on the list is CMS Infosystems, about 15 times the volumes over here. Again, this was after sources told NDTV Profit that the promoter, that is Sign Investment Holdings, is selling up to 26.7% stake of the company. The floor price for the same had been set at rupees 360, which was at a discount of about 9% compared to previous close. Next is Mahindra Logistics. Again, over here, a 10% gain over here. While if you had to look at the company's performance over the course of just 1 month, a flat performance, about 0.2% gain, while in 1 year they have showed about a return of about 17%. Next on, we have Happiest Mind Technologies, a 7% upside over here in today's trade after the company announced a new vertical organization for its business comprising of 6 different industry groups in order. This is again on their track to achieve a combined revenue of about $1 billion by year of 2031. And lastly on the list is Intellect Design area, about 6% of a move over here, with the volumes also buzzing at about 6 times its 30-day average. The stock itself has been up about 22% in just this 1 month itself, while in the 6 month the return has been about 53%. So these are the stocks in focus ahead of the volumes today.
Right. Thanks for that, Anushi. some few interesting names coming in there as well, including some which are buzzing on the back of news. You have the likes of a CMS Info Systems. You will expect some amount of shareholding dilution to happen there. I want to go across to Dharmesh once again. Dharmesh, two quick questions, one on CMS and one with regard to Happiest Minds. I know we've spoken IT, but I just want to cover the base here. On CMS, dilution of shareholding, how do you view this entire announcement, as well as what's your sense? Second, with regard to Happiest Minds, this business group split that they are doing, how much of that could actually contribute significantly to value getting realized on markets, because the stock is up 4%?
Yeah, sure. I mean, both the stocks we don't track actively, so it would be difficult to comment on that. I mean, fundamentally, I can't take a call on that.
Sure, I take your point. Dharmesh, you have views on these before I take broader views of yours with... sorry, Kunal, you have views on these before I take your views with regard to the market.
So firstly, if I look at the technical chart of CMS Info, I think recently the stock had been a very good outperformer, but in the recent time the stock has went into a big consolidation phase, and the upper end resistance for the stock is placed at 400. So once it surpasses that 400 mark, we could see a quick rally towards 440, 450 level. That is a 10% kind of a move. However, the stock is taking a support at its 20-day moving average, which is placed at 375. So as long as 375 is sustained on the downside, one could continue to hold on to their long positions, or even on any dips can add fresh long positions, keeping that 375 as a stop loss and looking for upside first target of 400. And once that is taken out, 440 will be on the cards very soon.
Okay. Kunal, before we talk about the markets at large, your stock ideas for the day?
So firstly, we have seen, as we mentioned in the start of the show, there has been sector-specific action where we have seen the markets consolidating, but some of the sectors doing very well. So I have a bullish view on power as well. I think from the current levels, even power sector could do well. One specific stock which I would like to highlight over here is Power Grid. Power Grid, you have already seen that the stock on the technical chart has been trading in a strong uptrend. Higher high, higher low formations are intact. The stock is trading above its 20-day moving average, so that's a short-term moving average support what it has. And 300 is likely on the cards very soon, currently trading somewhere around 290, 291 zone. So one can initiate long positions, keeping a stop loss of 280, 300 downside, looking for targets of 300 on the upside. So Power Grid would be my first pick. Second will be TCS. As you have seen, finally, the stock has seen some momentum buying in today's trading session. And even on an intraday chart, you can see there's a breakout which is clearly visible on the chart as well. So one can initiate long positions in TCS as well, keeping a stop loss of 3950, looking out for targets of 4,400. This will be for a 1 to 2 day kind of perspective, where we can see the momentum building up in TCS.
Okay, well, clearly we're starting to see some kind of gains that we've seen on TCS today. But remember, a lot of fair degree of shorts that are built up, I think, over the last week on these IT names. Just wondering, Kunal, just before we move on, IT had seen short positions built up, right? So what does a move like this, if it continues, do for some of the stocks on which there were shorts for the current series?
So I think since we are heading towards the expiry firstly, so I think a lot of positions will get rolled over there. So the current month position will continuously get squared off. But on the next expiry, I'm not seeing any fresh long rollovers happening on the short side for TCS and specifically for IT counters. So I think this could be a good short covering move, what you'll be getting over here in IT space. And the broader Nifty IT chart has again given a bounce from a critical 20-day moving average. So I think you have a support on the IT index, plus the stocks are again showing some momentum. So TCS something which could do very well in the near term.
Sure, thanks for that, Kunal. We've kind of covered most of the bases when it comes to IT. We'll quickly put the spotlight on Indian OMCs. My colleague Mihika Barve has put out a story on NDTVProfit.com and joins in to help us understand if Indian OMCs are overvalued compared to global peers. Mihika, give us that perspective.
Yes, so the Indian OMCs have surged in the past month, ranging from 19 to 27%, fueled by factors like Brent crude prices ranging in the $74 to $84 per barrel and high global petroleum demand. But despite the ramp up, the Indian OMCs trade at a much fairly lower EV to EBITDA multiple compared to their global peers. Currently, the EV EBITDA multiples of the Indian OMCs trade between 3.59 to 5.02, with HPCL being the most expensive and BPCL being the least. Now, while globally, Chevron Corporation trades at a EV to EBITDA multiple of 13.27 and Saudi Aramco at 7.6 and ExxonMobil at 6.39. Now, in terms of historical valuation, also the Indian OMCs are trading at least a 7-year low, while global peers did have lower multiples in FY22 and 23 compared to current levels. Now, OMC valuations are also down from their levels of FY20, where they ranged into 10 to 15 EV to EBITDA multiple due to the Russia-Ukraine war that did impact their earnings. But however, they have recouped their losses since then. Now, in terms of potential for more upside, stable Brent crude prices, despite the disruptions happening during the Red Sea or the production cuts by OPEC, no government policies or no fuel rate cut announcements, and the high demand could help margins. Now, JP Morgan's latest note stated strong integrated margins with petrol and diesel margins nearing $20 per barrel. According to an analyst at Yes Securities, government focus on expansion on energy transition and the elevated capex levels could also help clock higher profitabilities. On the downside, however, despite the optimism, certain risks do dampen the rally. Any increase in Brent crude prices could affect and narrow the margins. According to CLSA, they note that the current prices might be pricing in a much higher than historical marketing margins, and a 5 to 7 rally in crude prices could also not augur well for the marketing margins that the companies are currently enjoying.
Okay, thanks a lot for that, Mihika. So do watch out. Remember, OMCs, while they had a good day in trade yesterday, in today's session, some of them are definitely sulking. So it's a chicken and an egg simply because of the move that they've already had thus far, and independent of the valuation, could they maybe see a bit of a corrective move? I think that is the question on most minds. Maybe a tech and a funda check before we take that break. Kunal, firstly, how would you trade BPHP IOC?
See, firstly, Neeraj, I would like to talk on the Nifty oil and gas chart. So the breakout what we had got earlier, post that we have seen a spectacular rally. Now, the overall structure for the oil and gas is still in a bullish structure, but every bullish structure will have a corrective phase. So I think this corrective phase is likely to go a bit lower as well. So I think this is not the right time to enter into these counters. You might still get them at lower prices. So whether it's an IOC, BPCL or an HPCL, even from the current levels of 4 to 5% downside is possible from the current zone, where I'm seeing the momentum getting lost. So the momentum will again come back once those correction gets over. So my preferred pick in this space would be IOC, which is looking very attractive on the chart. So currently trading at 173. So if you get anywhere a dip towards 165, 166 zone, I think that would be a very good entry point where you can again initiate long positions. Then 158 is a very strong support on the downside. Post that level of 158, we saw a quick rally towards that 180 mark on the upside. So I think again we will get a sharp bounce from those levels. So 165, 166 is what somewhere should be interested in buying. Again, you can see upside 175, 176 clocking in the very short term.
Okay. Fundamentally, Dharmesh, are you a buyer there? Whether IOC that Kunal seems to be putting or the other two?
Yeah, I mean, just based on the replacement cost basis, the capacities on which these refiners are setting, it's still a doubler from current levels. But the point here is most of these companies' profitability depends on the government policies. For last 1.5 years, that has been in favor. Earlier, the policy was to benchmark petrol and diesel prices to what the international crude oil price behavior was. But after the Russia-Ukraine thing, when it went to $125, $126 a barrel, they have not, they took the price hike, but they have not rolled back those price hikes. And that's the reason why the PE multiples are so low, because the earnings have been in their favor. So it's largely dependent, their profitability is largely dependent upon the political policies in context. So from that perspective, if the stability is continued, it's still a good buy. But again, it's a flip-flop of a coin, depending upon which government and what are the government policies as far as the stock price structure is concerned. Purely on valuation perspective, from replacement cost, there's enough juice left. So one can stay to be a buyer in these companies.
Okay. Stay on, gentlemen. So much more to talk about. Wish we could talk about Bitcoin as well, because that's having a breakneck rally, but we'll make do with equities. Take a break, come back on the other side and talk about the top buy today, sell tomorrow, or sell today, buy tomorrow ideas. And of course, some insights into conversations that standout conversations that we've had during the day.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. Thanks for staying tuned to India Market Close here on NDTV Profit. You know, I have Agam standing by right off the bat to give us all the FNOQs for today before close. Agam, what is the FNO data indicating?
Right, Harsh. You know, the markets may have looked quiet, but there really has been a lot of traction within on an intraday basis, largely because of the fact that it is firstly the expiry week. So we do have a lot of unwinding in positions, and that's evident in the numbers that we're going to talk about. But I'll start off with the Nifty. And it just so happens that while the Nifty is advancing by around 0.3%, we are looking at fresh positions in the February futures to the tune of nearly 6.5%. Do remember that this could potentially unwind over the course of the next 20-25 minutes. But, well, this is how things stand at the moment. To talk about the Bank Nifty, and of course, remember the Bank Nifty expiry, the weekly option expiry is not tomorrow, but day after. And we don't have too much traction as far as OI is concerned, but it's flattish at the moment. Let's talk about the options market, and that's where we continue to see a lot more consolidation coming through around 22,100, 22,200 calls and puts, and a lot of writing has happened around then as well. In terms of today, of course, we continue to see traction around 22,100 mark, because that's exactly where the Nifty is. In terms of the Fin Nifty, well, we have seen that come off. Actually, well, we should be going a lot lower, because we've seen it come off around 20,600, right on the lower end. This is as far as your overall markets go. To very quickly talk about stocks too. Let's pull that list up. So we have some shorts coming in Shriram Finance, but other than that, longs in Godrej Consumer, ICICI Lombard, TCS, and SBI Life. TCS perhaps is the Nifty stock of the day today. And in terms of stocks which are seeing unwinding, short covering for Bata and Lotus Labs on the other hand, longs unwinding in RBL Bank, UPL, and Biocon. So mixture of trade as far as the stocks go. But when it comes to indices, there is just an ever so slight volatility which has increased in the run up to the final, expiry date, that is day after. Well, keeping an eye on that one, the Fin Nifty as well has seen its own share of sharp moves on the upside as well as the downside.
Okay, thanks a lot for that. So, well, watch out for some of these names for sure. And, amongst the other things where we're seeing some good action, to be honest, today, is in the insurance space, not just today, the last few days. In today's session, I think ICICI General Insurance seems to be doing okay and on pretty decent volume because of the blocks as well. But just look at the kind of moves that some of these stocks are doing. Now, Kunal, coming on this PSU insurers, and what do you find on the charts for some of these?
I think if you look at Neeraj General Insurance, they have been doing extremely well, whether it's a GICRE or an NICL or a ICICI Lombard. So I think this up move is likely to continue. I think ICICI Lombard still has upside left from the current levels as well. So I think it was one of the beaten down stocks, and now it has seen a very good recovery in the last 1 to 2 months. So the trend is quite positive. We are having an uptrend where high low formations are intact. On the daily chart, we got a fresh breakout in today's trading session. The momentum indicator, that is the RSI, is crossing above the levels of 75.80. Now this can go up to 85.90 as well with the kind of strength what it had. So even from the current levels, you could have a good BTSC trade as well. 1726 is where it is trading currently. So at the current market price, or if you get any dip, even in the next half an hour or so, utilize that dip to buy. Keep a stop loss on the downside around 1706 and look for targets of 1760 to 1785 on the upside.
Sure, point taken. Kunal, I just want to quickly ask you for your views with regard to a couple of sectors which are doing fairly well. You're seeing a good 0.5% gain on the Nifty Pharma, % up on the Nifty Realty. These are sectors where or rather Realty more than Pharma, but we've seen good traction in some of these sectors. How are you viewing it at the current juncture on charts?
So I think if you look at the sector-specific approach, Nifty Realty still looks good and strong from the current level. So there is still some upside left over there. So Realty could continue to outperform going forward as well. But one sector which I would like to highlight over here, where I can see a decent upside, is infra. So infra as a space, that is a Nifty infra chart, has again given a fresh breakout here, and infra stocks could do very well in the next 1 to 2 weeks as well. So that is one sector which I'm extremely bullish on. You can, on a sector specific or on an index perspective, you can easily get a 3 to 4% kind of a move on the very short term, which equals to at least 8 to 10% kind of move in stocks as well. So infra is something which I'm very bullish on, and this could do very well in the next 1 to 2 weeks.
Sure, point taken, thank you. Let me quickly go across to another stock which is buzzing in trade. Cello World has been buzzing since the morning. If you see the intraday graph, you'll see that the stock was up. Motilal Oswal has actually initiated coverage on this particular counter. Buy rating, 1100 is the target price. Kanika joins us to try and break down what the note says. Why is Motilal bullish?
Thank you, Harsh. So Motilal Oswal initiates coverage on Cello World with a buy rating and a target price of Rs 1100. Based on the current market price, it implies an upside of an odd 25%. And this estimate, it is estimated that Cello will grow faster than the industry with robust revenue and EBITDA. over FY 23-26. This growth will primarily be driven by expansion in SKUs and distribution reach facilitated by Cello's robust manufacturing capability with 13 plants spread over 5 locations. The company is also building a new glassware plant at Phalna, Rajasthan and is expanding its opalware capacity at Daman. And this growth will be coupled with strong improvement in the glassware segment post the commissioning of the new plant in Rajasthan. With a presence across diverse product categories, it is expected to benefit from growing total addressable market at 13% CAGR over FY 23-27. But there are key downside risks that include volatility in key raw material prices, dependence on third-party manufacturers, and intensified competition.
Thank you so much for that, Kanika. Really summing up that note. Let me go across to Dharmesh, taking his views with regard to Cello. Dharmesh, before that, do you at all cover Cello?
No, Harsh, we don't cover it.
Okay.
Though we have initiated research on the entire space,
Sure.
but right now we don't have a recommendation.
Sure. Point taken. Okay, let me go across then to Kunal. Kunal, I know it's a bit of a new listing, but in terms of charts, whatever limited visibility we have with regard to charts, what's the sense like?
I think, yes, exactly what you said, that the data is very less, but whatever charts I have, what I can point out is that in today's trading session, the stock has given a gap up and there's a breakout in the stock. The most important part is that it needs to sustain above this level. So 850 was a resistance which we surpassed in today's trading session. On the technical chart, there is also a falling trend line breakout what we have got. Now sustaining above 850 is very, very important. So as long as we stay above this level, I'll be bullish. On an immediate basis, we can see a target of 910 to 930 on the upside. So even if you are holding, carrying long positions on the gap up, keep a stop loss of 850 on a closing basis. So anytime the stock gives you a closing below 850, then you can unwind your long position.
Sure. So that's the view coming in on charts. Quite a bit of a detailed view coming in there on charts. Thanks for that, Kunal. But let me take it across to Dharmesh. Dharmesh, Kunal has found that Nifty Infra is probably something that he looks as quite lucrative, especially on the technical side of things. On the fundamentals, any one or two pockets, sectors where you are finding value at this point?
Yeah, I mean, both infra and real estate is looking very attractive. Given the fact that the numbers were pretty strong in the Q3 and the order book of most of these companies are still swelling and getting stronger, and input prices are still benign. I mean, commodity prices, you look at any base metal for the last year, calendar year, it was all with a negative returns, and this year so far they have not moved at all. In fact, they are trending in the negative territory. So this lower input prices, better execution, better infrastructure from the government is auguring well. Most of these companies are now light on the debt side. Earlier, it used to be a big problem for them on the working capital as well. And on the top of the interest rate cycle, I think there's plenty of scope. If the interest rate starts coming down, there will be plenty more legroom to the operating margin. So having said that, the stocks which we like from this entire space on the infra fund is L&T. I mean, it's a behemoth. I mean, there are many verticals to it, but infra is the mainstay out there, along with NCC. And in the real estate space, we like Oberoi Realty, DLF, and Phoenix Mills. So these are the five companies which are an investment bet. Any declines, it can be important.
Okay, well, so thanks for that. And it's interesting, the K crust of the curve. I wonder what stocks like Ethos, for example, is doing. I haven't spoken about that for a while, or a Landmark Cars. And what is it that those stocks are doing? So Ethos, if you look at the last 1 year performance, it's had a stellar run in the last 3 to 6 odd months, from maybe 1,300 all the way to 2,700. So it's virtually doubled. In 6 months, about 69%. Yes, that's a kind of move. It's had a really good move. In the last 12 months, 177%. Landmark Cars too, I think, would have done okay for itself. So this premium consumption plays are actually doing very well for themselves. What is not doing well today are names like Dixon or Whirlpool, both of which corrected a little bit, and that's not across the space, by the way, because Havells, for example, Whirlpool is actually bounced back, because Havells is up about 2.5% on the Goldman upgrade, but Jefferies downgraded Dixon and Whirlpool with a 10 or 11% downtick suggested by the brokerage house, as a result of which the stocks had started off much lower. In Dixon's case also, because the stock has run up quite a bit. So the price target that Jefferies has put out on Dixon is 5920. On Whirlpool too, the price target that has been put out is about 10 odd % lower than the current market price. So both of these are to be watched out for. Do you have a view, Dharmesh, on the EMS space?
Yeah, I mean, the only problem, Neeraj, out there with the EMS space is the valuation part. Just to name a few, I mean, last 3 months we came out with 3 initiating coverages, and to our surprise, before the next quarter earnings was announced, all these 3 initiating coverages target price were achieved. And this was based on FY26 kind of earnings. So that's the scenario in which we are, Neeraj, in this market when stock prices are moving too fast. Not to, undermine the fact that businesses are also doing well. So, I mean, for Dixon Technology, there is no problem with the business. They have been garnering market share left, right, and center, and they are growing well. But the point is the type of valuation they are setting on. That's way too rich. So, even, I mean, Jefferies has done with a 10-15% downgrade. My own case, I would look for a 30 to 40% kind of a price cut for the valuation to have some semblance to the kind of growth trajectory they are setting on. Whirlpool has its own set of problems. So it's playing, I mean, every corner the business is not doing well. At the same time, there are managerial issues with that. And now they're in the pink of the input price kind of environment, cost environment. So I think if one has to go on the consumer durable space, Voltas still looks good. And Dixon Technology, if it corrects further from here, 10-15%, being one of the monopoly kind of a business, it is, you hardly have any choices in the listed space in this segment. So there it becomes attractive to buy again.
Okay, but 10-15% would be around the price range that I think Jefferies is talking about as the target price for Dixon as well. So keep that at the back of your mind. So that's a name to focus on for sure. Another stock, of course, I mean, we spoke about how Cello World has been buzzing, and that stock was active in the morning. So that's to be kept in mind. But so some winners and some losers. Kunal, can I come to you on Dixon? It's a derivative play as well. Do the charts look weak?
Yeah, I think if you look at Dixon, it has been one of the outperformers. Recently, the stock had given us a strong breakout, and there was a follow-up move which is there. Now, based on the reports what we have got by the Jefferies, we have seen some correction on the downside. The momentum is definitely getting lost because what has happened that the stock has been making a higher high formation, but the momentum indicator, that is the RSI, is not showing me strength. In fact, it is showing me a negative crossover as well. So if we sustain below this mark of 6,900 now, which has become a strong resistance, we might see this correction going towards the levels of 6,500, which is the next support where the 20-day moving average also lies. So I think today, if you look at a daily chart, probably we will have a doji candle kind of a close, so clearly an indecisiveness on a day trade basis. But if tomorrow we continue to trade below today's low, then this fall will get aggravated toward that 6,500 mark. So the structure looks weak. I'll be a wait and watch on this for tomorrow's trading session. If the follow-up selling pressure continues, then I'll be probably selling this Dixon, looking for targets of 6,500 on the downside.
Sure, thank you for that, Kunal. Dharmesh, I want to come back to you. You spoke about valuations being slightly elevated. I want to try and zoom in on a couple of PSU banks which are all set to raise money. And let me pull up something like a Punjab and Sindh Bank, something like a Union Bank. Both of those, Punjab and Sindh Bank now almost down 4%. What do you make of valuations at this point in some of the smaller PSU plays? And is this just a bit of money coming off the table, would you call that, within the PSU bank, which will thereafter lead to a larger rally? Is that how you look at it, Dharmesh?
Harsh, I mean, my take is different on the PSU banking space. I would be sticking with the larger players in the PSU banking space rather than the smaller ones. And the reason is the smaller ones are still miles to go as far as technological upgrade is concerned. So most of the smaller banks are still lacking in the technological upgrade or the systems upgrade. And they still don't have that bandwidth of the equity capital for growth. So that is where the chunk of the problem arises for smaller PSU banks. Among the larger ones, barring SBI, if you look at Bank of Baroda or a Canara Bank or even a PNB, which is coming off late from its own set of problems, they have still adequate capital adequacy ratio with their CASA base intact. The CD ratio is very much in their favor, and they all have done all the advancement which is needed for a faster growth of the AUM. So, and valuations are still much comfortable. I mean, they are still trading at 0.75, 0.8 times price to book value. In the case of PNB, it is again lower. It is 0.69 price to book value 1 year forward multiples if you are looking at. So there, I think the juice is still left, and those are the pockets. I mean, maybe post-election, they are the ones who will run up faster than most of the others in the financial space. So as a basket, these two stocks look much better. I would certainly avoid smaller PSU banks. They had their run in the sun a few months back, but I think that is it.
Okay. Looking at some stocks which have corrected. Today, the Adani Group stocks have come off a little bit. Adani Energy Solutions is down about 5%. I think enterprises and ports were also looking slightly weak. I wonder what Adani Green is up to. That stock should also come up on your screen. So some bit of, actually a bounce back from the lows of the day for most of these. But certainly Adani Energy Solutions is down. Adani Energy is down about 5% for that one. And Adani Enterprises too in today's session was amongst the key losers in the session. So that's to be kept in mind. Some which are doing well include a RailTel. Has a smart move today. RailTel does. So big uptick there, 10.5% on very high volumes, I might add. So RailTel is certainly a stock to focus on. There is Intellect Design Arena, which is up about 8%, and therefore a stock to focus on as well. So 2 or 3 names, which are Mahindra Logistics is the other one, which is up about 10% as well. So pretty good moves into some of these. Any thoughts on this, Kunal? On the charts, any of these 2-3 names?
See, I think firstly, if I talk about railway as a sector, earlier we had seen the entire pack moving together. Now that will not be the case going forward. You will have certain outperformance by certain stocks, while the other stocks will keep on lagging on the downside. So I think if we talk about RailTel, I think a very good strong breakout what we have already got in today's trading session. I would not be a buyer at the current market price. Probably a day or two before, I would be a very good buyer at the price at which it was trading. So for me, currently 455, 460. This could be a good zone where you can enter into long positions. That's a very strong support for the stock. So if you get any dip towards that support zone, utilize that to buy. The stock might hit that target of 500 on the upside on the technical chart. The indicators are showing some good momentum building up. Both the RSI and MACD are giving a positive crossover. So this will eventually touch the levels of 500, but not a buyer at the current market price. 455, 460 is the zone where you could enter. Keep a stop loss of 440 on the downside.
Sure. Let me switch it over. Dharmesh, any views with regard to railway stocks? It's a structural story, but fundamentally, do you find any possible value mismatches in this space?
Hard to find. There aren't any value mismatches. Everything has shoot off the roof, and off late there has been very high volatility in all these stocks, be it RVNL, Ircon, Radar, RailTel. So one day they are climbing up 10-11%, and then they are sharply down. So it's not for a faint heart kind of a trader to dabble into these stocks. And we were just, we had like on RVNL and Ircon, we had a buy rating, and we were just revising our numbers based on FY27. Even there, the comfort was not there. After baking in of 25% CAGR on the revenue, these all companies looks to be fairly priced on the upper end of the valuation multiple. So the only advice is if you want to trade when there is a good correction, one can still buy, because there is nothing wrong with the structural story which is playing out and which will definitely play out in the required direction. And as far as trading is concerned, one has to be very, very strong-hearted and lucky to get it right.
Sure, point taken. I also want to, try and flag off something like a DCM Shriram because that one has, in fact, gotten approval from the board for entering business into advanced materials, or rather venturing into the advanced materials business. It's a downstream business for them. Stock down roughly 2%, and 1,000 crore is to be invested in epoxy resins downstream products business. Let me quickly take it across to Kunal first on charts. I'm not sure if Dharmesh actually tracks this, but Kunal on charts, any views on this one?
So I think looking at the long-term chart, DCM Shriram doesn't look very attractive to buy at the current levels. In fact, we can see some correction going on the downside. If I look at the weekly chart as well, there has been multiple rejections around that zone of 220, and the stock has not been able to surpass that mark. So I think more correction on the downside, the stock could come around 195, 190 zone. So I think not a buy at the current level for sure. If you are holding it from lower levels, one can start booking profits, but not to initiate fresh long position.
Okay. Before we take in the closing strategies, and maybe one more from my end, but another management that a lot of people might be interested in listening to is Paisarao Digital, stock that was buzzing in trade today, up about 9% at a point of time, but still up in trade about 6%. We spoke to the Deputy Managing Director, Santanu Agarwal, and asked him about the growth outlook of the company. Listen in.
So currently we are at an AUM of about 4,220 crores. We were up about 40% on a year-on-year basis in Q3. We are targeting very strong numbers with a very strong CAGR return to all the investors who come on board. But because we are listed, I cannot give a projection number which has not already been disclosed. So, but all I can promise is it will be a good journey.
Right, but if there is any CAGR in your mind, any specific percentage at which you plan to grow, if you can mention that?
So we are planning to grow stably at about 25-30% CAGR. That would be the ideal choice.
Well, interesting. They've also got a sanction and disbursement of 200 crore from IREDA for onward lending to either e-mobility sector. So interesting play there, and the stock is up and away in trade at least today. But let me quickly take it across to Kunal. Kunal, top BTST ideas.
Yeah, I think as I mentioned in the show as well, infra as a space is looking very good. So that is where my eye would be on. The stock which I would like to highlight over here will be from the cash market, and the name of the stock is KNR Construction. I think after a long underperformance, the stock has finally given a strength breakout in today's chart. So I think the stock has surpassed its 20-day moving average as well, and the stock is on the verge of another falling trendline breakout as well. So 280 is where currently the stock is trading. The 20-day moving average on the downside is placed at 273, so that will be a stop loss on the downside. One can look for first target on the upside of 292, and second target should be 300 on the upside.
Okay. Kunal and Dharmesh, thank you so much, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time. Let's start wrapping up the markets, viewers, and we are ending pretty much at arguably the high point of the day. Bring up the intraday of the Nifty once. If I'm not wrong, this could be the high point of the day, but let's just bring up the intraday. Not that it's a big bang move, really. It's a move in the narrow band, but yeah, in or around the high point of the day, if you will. But yet another day wherein the daily candle is actually a very small body, so no big changes there. The mid cap and the small caps in particular, because the market breadth had worsened considerably in the last few minutes of trade, or last for 1.5 hours of trade. So while the large caps are doing what they are doing, the small cap index now about 0.28%. And if we can pull up the market breadth just for a moment before we get to the heat map and just show that, it's kind of yawned and kind of stayed in those levels. The heat map, and just seeing if any changes before I hand it over to Harsh. So Tata Motors has had a really strong move. It's eclipsed TCS as the better performing stock, or the best performing stock on the index. So not bad going for Tata Motors, I must say. 2.8%. Its strength in Indosin, Sun Pharma, to an extent Power Grid and Hindalco doing okay as well. A lot more green than red, so a bit of an improvement seen there. Hero MotoCorp, the top loser. Bajaj Finance, the second worst performer. You're not seeing, or you are seeing Asian Paints in the top 10 losers, but it's down only 0.5%, so that is not a bad ploy. And SBI looks slightly weak in the session today, so that stock kind of stands out too in trade. But clearly the winner has to be TCS or maybe Tata Motors, Harsh.
Yeah, absolutely. TCS, Tata Motors, probably within the large cap. But let me quickly try and focus in on a few names. Let me first start off with the top gainers on the mid cap, because that one is probably the one which is sulking the most in trade. Let me pull it up to something like a PB Fintech. That one is powering through in trade today. You have also Macrotech, which is doing fairly well. There you go, 5% higher on PB Fintech. Macrotech, as well as Sonacoms. That one is also flying away in trade. So positive on those three at least. Those are probably your top three winners on the Nifty mid cap. Will be interesting to see what's happening with Sonacoms. Probably merits a larger discussion, maybe, Neeraj, at a later point. Let's take it to the losers. Vodafone Idea, no surprise there. PFC, REC, Devyani, those are some of your losers. So QSR, along with Vodafone, along with your PFC and REC, are probably leading the losses on the mid cap. So that's the kind of flavor with regard to the losers. Some of the names which were buzzing, which we spoke about at the start of the show. Paisalo, we spoke about that, up 5% plus. Let's see where that's closing in on. There you go, in markets have closed, but Paisalo, let's quickly see where that's closed on. Happiest Minds, let's see where that has closed on as well. Okay, so nearly 6% higher for Paisalo, nearly 4.5% higher for Happiest Minds. Where has PayTm really settled? That one's an interesting one. There you go, 0.25% down. It's been a flip-flop kind of a day for PayTm, Neeraj.
It has been.
And month as well.
Actually, that's what I was going to say. If we can just pull up before we wrap up the show, today's chart of PayTm, because it has been a very, very volatile day of trade for PayTm. Look at this. Started off hit an upper circuit as well, then went into the negative. Currently trading flat. And if you look at the monthly chart, because the last 7-8 days is when it almost went on an upper circuit for 5 or 6 consecutive sessions, and then has gone down flat. So the downtick followed by this relative uptick that we've seen.
Yes.
And in today's session ending fairly flat.
But and while that seems like a small one, but it's quite
it's a significant one. Just that relative to the
correct.
high levels,
Absolutely.
it is looking a bit dampened. But with that, it's a wrap on this leg of India Market Close. Thanks so much for tuning in from Harsh, myself, and everybody who put this show together.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
You have a missed call. Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
One of the biggest news pieces on consolidation in the media industry that we've seen is currently underway. Two behemoths in the space, Disney and RIL, will come together. The exact contours of the deal are not yet clear, but what it does tell us that we are going to see one of the largest entities in the Indian media space, which could possibly corner about 40% of market share. Now, while we've looked at this story from the angle of valuation for RIL investors, etc., we also need to look at it from the point of view of what this means for the media landscape in India. And to help us do that today, we're joined by Vanita Kohli-Khandekar, media expert and author, and really the one-stop shop to understand the India media landscape. Vanita, thank you for speaking with us here at NDTV Profit. Let me come right down, to the core question. Did RIL essentially get a great deal with the Disney merger, or what will be the Disney merger? The valuation of Hotstar was considered, or that entity, Disney Hotstar, was considered to be $10 billion. There are estimates that they'll probably get it at a valuation of between $4 to $6 billion at a huge discount. In terms of strategy, is this a really good deal for RIL versus Disney, and what does it mean for the Indian media landscape?
Hi, thanks, Tamanna, for inviting me. First of all, I'd like to clarify that 4 billion or 6 billion or the 10 billion figure is not for Disney Hotstar. It's for Disney India.
Yeah.
First of all. And the biggest chunk of Disney is about 20,000 crore in top line. The biggest chunk of Disney's business is broadcasting. However much we'd like to believe that digital is this big giant, it's not. Broadcasting is the biggest chunk of the media and entertainment business in India today. It's 50% of the $25 billion business that there is in India. So as yet, broadcasting digital is the second biggest chunk, but broadcasting is. And the valuation that for the earlier Disney deal, when Disney bought Fox and therefore Star India went into the Disney fold, which was the earlier name, the valuation was between $13 to $15 billion from what my understanding of the deal is. It is now, again, I'm going by the same reports that you're probably reading. It's supposed to be somewhere about 4 billion. So yes, it's a great deal to get one of the country's largest broadcasters. But remember, this is not an acquisition. This is a merger. From whatever I have read, the companies haven't spoken to me so far. There's been no official press release from either of the companies. But from what I understand, it's a 60-40 deal. So that means it's a new venture, or it's a new sort of structure. It is not a full acquisition. So yes, if it is at $4 billion and whatever that 60% amounts to for 4 billion, it's a fantastic deal, because you've got one of the best broadcast assets in this country. Plus, you've got a couple of nice growth pivots there in the streaming business. You've got the film studios, together combined. The Reliance owns Viacom 18. I'm sure you know that. So you combine Viacom 18 with Disney India, and you have a company that has 32% of viewership share in India, television viewership. I keep saying this. I think a lot of people still find it difficult to believe that 900 million people still watch television in India. It's the biggest medium there is. So you have a 32% share of that market. You have a 316 million uniques market if you combine JioCinema, which is under Reliance, you combine Woot, which comes with Viacom, and Disney Hotstar, which has not been doing very well ever since IPL went off. 316 million uniques is number 2 only to YouTube. You know that YouTube is the largest streaming app in the world and the largest one in India. YouTube is at around 465, 450, something like that. 360, so it's really good. These are really, but my big question, my worry would be, will they get permission from the Competition Commission of India? Because these are like, this is like creating a semi-monopoly of sorts. So, you know, that will, especially advertisers should worry. But those are different questions to approach.
No, but they're very valid questions. You're absolutely right. It's a behemoth, 100+ channels, like you said. You've put out all those numbers. So let's start, because different stakeholders will be impacted differently, and we'll come to the viewers at the end who've been watching IPL for free. Will they continue to?
But they will have to pay.
That's one's guess. That those freebies are not going to last. But let's come to it from the advertiser point of view. What happens when you create a giant like this? Perhaps we've already seen the echoes of Sony, Z, etc. What else is there in the space? But from the advertiser point of view, do you think at some point they will have to start worrying that they will have to pay up more?
You know, I spoke to some advertisers in the beginning when speculation of this deal began. If you remember, it began in November, December, if I'm not mistaken. And I remember I did a story around media consolidation, etc. And I spoke to, and there is worry, especially among buyers. Because remember, India has always been a buyer's market as far as media is concerned. It is now, you have Google and Meta, which are huge. 80% of all digital advertising in this country, 70% of all digital advertising globally goes to Google and Meta. So, you know, you already have these two behemoths there. Then you have, Sony Z was an imperative. I think consolidation is imperative for legacy media companies, because you can't fight the might of the Amazons and the Googles and the Metas without scale and without capital. So Reliance is a great partner for Disney to have if it is to you know, grow and get into other areas in this country. So there is no I think strategically the merger makes sense, but from a consumer perspective, from an advertiser perspective, lots of red flags there. And yes, I've had analysts who've told me that I have not seen this level of consolidation, and I've quoted that analyst in my unnamed analyst in my story, that they've not seen this level of consolidation anywhere in the world. So, and there is one advertiser who's on record saying that this creates a duopoly situation. So there is some worry there.
Yeah. In terms of, the red flag you raised, and very valid one, about whether the Competition Commission of India will be a sort of hurdle in this merger going through, what would be the reasons or the questions that could be raised at the regulator's end?
No, see, Competition Commission cannot be a hurdle. Its job is to vet deals of this nature. So it's not a hurdle, but you know what it is that they'll have to do in order to comply with the competition. So Sony Z, for instance, for 2 years, Z shut down several channels to comply with the needs for the merger. It shut down several businesses because because they wouldn't have got, for example, Big Magic and Big Ganga, some of the channels they shut down. But and similarly, I think Reliance and Disney will have to do certain things, or might have to pare down some businesses, get out of markets in order to reduce their viewership share or their hold over a bit. So those are what steps this could take as far as getting Competition Commission clearance, and also how it looks at, because if you're talking about a more than 1/3 share of the viewership in television, then I suppose at some level the Competition Commission is going to say that, boss, you need to sort of pare down a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Once you have sort of a giant like Disney, Viacom, Disney, RIL, you know, the Sony Z deal may have been some sort of a counter. That's clearly not happening. What else do you see? Where does the dust settle on the rest of the landscape?
You know, this is my big worry as someone who analyzes this, and I've been doing it for 20 years. So, you know, when I see this, see, strategically, from a market perspective, consolidation is imperative. You need scale, you need size. If you have to live in this era where your competitors are the big global tech media majors, and this is not just in India, even in the US. All the you look at Paramount is thinking of selling out. Warner Discoveries have allied with each other. You know, Fox sold out to Disney in 2017, 2018. So all the companies know that they do not have the size and the muscle to take on. And these guys are at another level. I mean, they are 100, 200, 300 billion dollars in top line, and they are global. So, you know, and they search for audiences. They do exactly the same thing that media companies do. They look for audiences, they monetize them through advertising or through subscription. What is Google? It's a media company. What is Meta? It's a media. They might deny it, but what you're doing is you're taking my eyeballs and you're monetizing them.
Yeah.
And any company which does that, even Amazon, which is actually a retailer, but why does it have Amazon Prime Video and Music? Because it wants the eyeballs. It wants people to spend more money on their website. So when you're in the market competing with these people for the same advertising and pay revenues, you need scale, you need muscle. But in India now, I can see only 3 or 4 companies left after this happens with any decent size, you know, which are comparable. So there will be Google Meta, and there will be, you know, I can't include Amazon's retail part here, but Amazon is a huge player even on the advertising side. I don't know if you know, but Amazon is one of the biggest gainers of digital advertising in the last 3 to 5 years. Then there is Reliance Disney, there is Sony and Z individually, and I suppose at some point they will ally with somebody or the other. I mean, Z is now institutionally owned, but at some point I think it will get acquired by somebody. And then all the companies are very small, Tamanna, and that bothers me. So there's a big gap there. There are these companies which are 18 and 20,000 crores, and then there are companies which are 500 and 1,000 crores. There's nothing in between. You know, and that because earlier there was a Sony which is about 6,000 crores, there's a Tata Play which is about 5,000, 4,000, whatever crore. Those companies are, except for print media, perhaps, you know, there are a lot of print companies in the 2,000-3,000 crore. So that bothers me, that worries me, and you need the need for independent voices in media. I think that's also a worrying thing, both entertainment and news.
Yeah,
on either side of the game.
Absolutely. So you will see consolidation. You know, I just want to take a second to talk about Disney's journey in India, because that also is an interesting trajectory. This is their round 3, in a sense, with the Fox acquisition.
Of them.
Yeah, but they haven't had you know, an easy run. And if I sort of extend that to Sony's you know, venture in India, it's not that easy for foreign players to come in and establish, barring, say, YouTube, Meta, Google, etc. that you mentioned.
No, I don't. I mean, it is tough. Media is tough in India. I'm not debating that. But and Tamanna, this is something yesterday I was speaking to someone at the BBC, and I said the same thing. Sony, Murdoch, Sony, Disney all entered India around the same time, between 92 and 93, 94, 95. All of them have been around in India for 30 years. Why is it that Sony worked, Star worked, but Disney didn't? First, Disney had that arrangement with the KK Modi group, which didn't work. Then it did had an arrangement with Ronnie's group, which didn't work. Then eventually they acquired UTV and they did whatever. Then they bought India's second largest media company, and they still can't seem to make it work. What does that tell you? So I think Disney has a specific problem in it. I agree the media market in India is tough. Monetization is very tough. I'm not taking away from any, but in this case, the India market is not at fault. In this case, it is Disney's American-centeredness. It's a very American. Star was an Australian kind of company, a cowboyish culture. I've done a book on Star. I don't know if you've ever had on Rupert Murdoch and what he did when he entered in. They were like cowboys. They came. What will it take to get more TV sets into this country? What will it take to get more people to see my show? They did everything. They localized. India is a deeply, deeply local media market. 90% of the films we watch, TV we watch, music we listen to is Indian. So you have to think Indian, have Indian management thinking if you want to conquer this market. Star did it. Remember, Star was among the largest media companies in this country.
Yeah.
Sony, again, among the largest media companies. Zee, of course, is a totally homegrown, of course, owned a lot by foreign institutional investors. Why did they work? Or even Cartoon Network, Viacom, they did a good job so they work because they localized completely. I mean, do you think of Star as a foreign company? You never thought of it as a foreign company.
You're absolutely right. And for a Disney to come in and then, devalue cricket, in a sense, shows that they weren't really aligned with what the Indian market wants.
No, they don't. Disney is fantastic when it comes to consumer markets, theme parks. You look at them in the US, they are behemoth. They're $83 billion top line. बहुत बड़े हैं. But outside of America, somehow they think only this IP should work outside. This thing of localizing, getting into local shows, films, it's somehow beyond their ken. And they're very controlled from Burbank. Extremely, extremely LA controlled. Okay. That doesn't work.
Yeah, probably in that sense, a reason why they're letting go of the business. Just last take from you, Vanitha, before we wrap up, and a very simplistic one. In the long term, in the larger picture, is this merger good for Indian media, bad for Indian media, or somewhere in the middle?
I don't know if it's good for Indian media or bad for Indian media, if it is that black and white. But I worry that this lovely asset which Star created is already fading away. I really thought Star was a good company, a robust company. It had got its root in India, and it's already fading away. I mean, operationally, they've had issues in the last couple of years ever since the takeovers happened, because Disney's mind is in America, its heart is in America. And when Reliance, a behemoth like Reliance, acquires it, I worry again, because there is a local flavor, a local subtext to a company. Will that get lost? And also, the large companies do not have that feel. Not that Star was not large, but it was a pure media company. Reliance is a group which operates at another level. So media is one like tuchu thing in their whole portfolio. It's really a small thing. So that to my mind is the big worry. These companies, look at Viacom 18. I feel that company is lost somewhere in the Reliance sport. So that is my worry. I don't think consolidation is, if it was bad, the company will break up. Market forces will take over. So that's not my worry. My worry is that the subtext, the flavor of the business goes away, and then building those businesses again is a lot of capital again down the drain. So that is what I would, that is what I would think more about.
Okay.
I don't know if I've answered your question.
No, but well enough. That's why I gave you the option of somewhere in the middle, because rarely are these things black and white. But thank you so much, Vanitha. Pleasure speaking with you. Media expert there, Vanitha Kohli-Khandekar, talking about every aspect and angle and what the fallout could be for one of the largest consolidations in Indian media.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
how to decide which is the one for you. First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Nifty Sensex end higher amid a day of volatility led by realty and IT. Nifty Realty jumped over 1%. Financials spoiled the broth. Nifty PSU Bank becomes the top sectoral loser. Prime Minister Narendra Modi announced the names of the 4 astronauts for India's first manned space mission, Gaganyaan. Prashant Nair, Angad Pratap, Ajit Krishnan and Shubhanshu Shukla. RBI tightens the news around the P2P lenders. Sources tell NDTV Profit that the central bank is reviewing the P2P lending system over the last 1 year. Supreme Court came down heavily on the centre for not taking any action in a case of misleading and false advertisements by the Patanjali Ayurveda Group. Supreme Court said that the entire country is being taken for a ride. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, we will bring you the market updates along with national and international headlines on this show. But before we start, let's take a quick look at how the markets fared during the day. My colleague Harsh joins in with a quick wrap of all the D-Street action.
Right, so markets on the benchmark, we closed higher, 1/3% higher, so no complaints there. But there was some bit of pessimism within the Nifty mid-cap. So the Nifty mid-cap, after a bit of flip-flop, has closed largely flat but with a negative bias nonetheless, around 1/10% lower on the Nifty mid-cap. The small cap though gained 1/4% as well, so again no complaints coming in from the small cap index either. Broader markets therefore indicating that a bit of an advanced decline mismatch where the day belonged to the bears. We had the breadth of the market which was slightly negative of sorts, especially towards the fag end of the day. The last hour and a half saw a bit of selling, especially in broader markets. So that's how the day really panned out. With regard to sectors, well, the Nifty Bank absolutely flat. You're seeing good gains in terms of where the Nifty Realty, the Nifty Auto, the Nifty IT, no surprises there because TCS pulled the weight there, and the Nifty Pharma was up around 0.5% thereabouts. Outside of that, you saw a bit of pain. Nifty PSU Bank saw a bit of pain. Nifty Media was down around 2/3%, and Nifty Energy was down around 3/4%. That's where we're at largely. We saw a bit of outperformance from specific names. IT remained the outperformer. Some brokerages, the likes of Motilal Oswal, bullish on Cello World. So some focus on those stocks, but outside of that, we had a pretty much less happening day in markets today.
Well, that was Harsh on how the markets fared during the day. Let's take a quick look at the top story at this hour as well. In a major development, Patanjali is in trouble after the Supreme Court flagged several misleading advertisements. The top court has also restrained Patanjali from advertising products manufactured and marketed by it, which aim to address health issues like asthma, diabetes and obesity, among several others. Let's quickly bring in Varun to share more details on this.
Yeah, hi Pragati, thanks. So the Supreme Court has restrained Patanjali Ayurveda from advertising medicinal products manufactured or marketed by it, which aim to address diseases or ailments specified in the Drugs and Magic Remedies Objectionable Advertisements Act of 1954. Now, this act prohibits misleading advertisement of drugs and also prohibits advertisement of magic remedies for treatment of certain diseases such as obesity, cancer, diabetes, just like you mentioned. Now, the court has also cautioned Patanjali from making any statements to the media against any other system of medicine. The court went on to observe that this is a very serious issue and that the conglomerate is taking the entire country for a ride. Further, the court has also issued a contempt notice to Patanjali and its MD, Acharya Balakrishna, for openly flouting top court's previous orders, wherein the company itself had given an undertaking that it would make sure that going forward, no casual statements pertaining to the medicinal efficacy of any other system of medicine will be released to the media in any form. However, just a day after the last hearing, which took place on November 21st, 2023, Patanjali came out with a media statement saying that it was not making any false advertisements or propaganda regarding its products, and said that it would not object if the top court were to impose a fine or even give us a death sentence if we are found making misleading claims. Now, the next hearing in this case is slotted after 3 weeks, wherein Acharya Balakrishna, the MD, will have to explain its conduct before the Supreme Court, which the Supreme Court has held to be in clear violation of its last orders.
All right, Varun, thanks so much for bringing us those details on the big story of this hour. Now, let's take a quick look once again at PayTm. After the RBI's crackdown on PayTm, the company's shares have been on a roller coaster ride. In just a couple of days, PayTm shares have been up nearly 35%. But are investors really viewing the regulatory action as a buying opportunity? The buying in PayTm shares, however, says so. In fact, not just PayTm, there are other companies with a similar trajectory. My colleague Smriti has the entire list for you.
We've seen PayTm shares tank to its lowest in the last couple of days, but today the shares have risen nearly 35% in just a couple of days after RBI's action. So just to give you a little context, RBI restricted the functions of PayTm Payments Bank on January 31st, after which the stock tanked. However, there's been a rally since then, and institutional investors have stayed away from this rally. So it's the retail and the high net worth individuals that are buying into this rally. We tried to talk to some experts about why these investors are, especially the smaller ones, the retail investors, are putting their money into such high-risk stocks. Well, the experts told us that investors are looking to make short-term gains. Could be one of the reasons. The second one could be many investors think it's a good entry point into the stock. So essentially, when a stock bottoms out, that's when retail investors are trying to enter the stock. Increase in the risk appetite of retail investors. We have seen in the past as well that the risk appetite of retail investors has substantially increased from the last couple of years. Market experts have also echoed caution against taking such bets. Now, PayTm is not the only one. We went back and looked at some other stocks that saw similar regulatory actions. For example, shares of Polycab fell 21% in January post an income tax searches that happened on their premises. Within a month, the stock has risen from its lowest levels and has risen 21% from its lowest levels within just 1 month. So while just a note here that it's important to understand that the regulatory action in case of PayTm is much severe than in others, because PayTm's regulatory actions led to shutdown of certain operations by the banking arm. However, that's not the case when an income tax raid happens, or especially the examples that I'm taking. The fundamentals of the company kind of remain or largely remain the same. If you look at Shree Cement, 19% up in just 6 months after the income tax raids happened. Mankind Pharma, 33% up from the bottom. Similarly, Hero Motocorp, where in August last year, Enforcement Directorate raided Chairman Pawan Munjal and his companies for allegedly taking Forex out of India. Shares are up 32% in 6 months and 51% till now. So there's clearly a trend where retail investors are trying to buy into stocks whenever a regulatory action happens. However, market experts, and I'm repeating this again, have cautioned against taking such high-risk bets.
Well, that was the update on PayTm. And while Smriti is at it, let's quickly take a look at Vodafone Idea also, because that was in our focus during the day. The stock was down nearly 6% during the day's trade, as you rightly mentioned. And in the big news, the company now plans to consider a fundraising proposal through multiple instruments. And this consideration is expected to be evaluated, or the idea is expected to be evaluated this evening itself. Smriti, since you're at it, what are you picking up from or on the details of this fundraise?
Vodafone Idea will consider a proposal to raise funds today. Now, the promoter had previously, one of the promoters rather, had previously said that they will infuse up to 2,000 crores in the company if needed. So, and time and again, the company has said that the promoter will infuse these funds through an equity fundraise. So, if this happens today, it's likely that the promoter will infuse either 2,000 or a part of it in the company through a rights issue. So that's one option. Now, just to give you a little perspective, there are two promoters in the company, Vodafone PLC and Aditya Birla Group. Now, Vodafone PLC in its books has the value of Vodafone Idea is zero in the books of Vodafone PLC. So it's unlikely they will participate in the fundraise. So the other promoter left is Aditya Birla Group. And we've seen Kumar Mangalam Birla talk about how they do not plan to exit the company. Let's also look at why this fundraise is essential for the company. Let's look at the debt position. The gross debt of the company is at 2.14 lakh crore as of December 31st. 90% of this debt, that is 1.8 lakh crore, is owed to the government. But let's look at it from a shorter term perspective. The dues for FY25 stand at 5,400 crore. So the company will have to pay 5,400 crore in the next 1 year. Of this 5,400 crore, 1,600 crore are the optionally convertible debentures to American Tower Corporation. The 3,200 crore are the bank dues and spectrum dues at about 500 crore or thereabouts, and this is only the principal payment. So the fundraise becomes absolutely essential for the company because the cash position of the company as on December 31st was only 500 crores. Now, if you also go a little bit forward, in FY26, the company has given that the debt that it will have to pay is at 30,000 crore. 28,000 crore is towards the government, and the bank dues will be about 800 odd crores. So this fundraise becomes absolutely essential for the survival of Vodafone Idea.
Right, Smriti, thanks so much for bringing us those two very important updates. Now, let's take a quick look onto the banking and the finance space. And to start with, we have an NDTV Profit exclusive for you. Now, sources tell us that the RBI is now overseeing P2P lenders. In fact, over the last 1 year, the RBI has carried out multiple reviews of the P2P lending system. It even sent letters to some entities seeking clarification on their business models and also asked them to shut certain practices. Now, sources tell us that these practices include instant liquidity, pooling of funds, and the flow of repayments via P2P lenders. But the question now is that what followed after this move by the RBI? Well, from sources we know that a 12-member association of P2P platforms engaged with the RBI. They also spoke about 3 issues which were critical to the industry, and these were, first, signing of the agreement between the lender and the borrower. The next was the reinvestment of funds, and the third was the functioning of a secondary marketplace. But according to market participants that we spoke to, the nucleus of the problem actually lies in the way NBFC P2P structure their products and also manage their day-to-day operations. They tend to act like deposit-taking entities, promise gains, and all this happens in violation of the RBI's guidelines on P2P lenders. And this is exactly what may be irking the RBI at this point. Now, let's also take a quick look at what is expected going ahead. Since a lot of rounds of negotiations and conversations have happened between the association and the RBI, some update is definitely expected. Now, sources also told us that while they are awaiting a clarity from the RBI on P2P lending practices, some action is expected in the coming days, as I mentioned right now. The RBI may also stop offering products like instant liquidity, P2P escrow account, and some ultra short-term products. And that's what sources told us. But we must remember that the P2P lenders are merely under RBI scanner as of now, and there's no announcement yet. Well, that was what we had from the P2P lenders side. On to another big story from the banking sector. Bandhan Bank is keen on growing its micro-LAP loan portfolio. My colleague Mimansa Verma joins in with more details on this. Mimansa, what can you tell us about Bandhan Bank's plans? Because considering that the current size of their LAP loans is a certain amount, how do they plan to increase on this?
Right. Hi, Pragati. So Bandhan Bank is focusing on growing its loans against property portfolio, or commonly known as LAP portfolio, because they want to grab onto the opportunity right away. They do have a very small book. And if I was to give some numbers, in the December quarter, LAP loans stood at rupees 3,960 crore, accounting for 13.9% of the total housing asset segment. With this, the bank is looking to increase the customer's wallet share, which is what we gathered from our conversation with the bank's Chief Operating Officer, Ratan Kumar Kesh. So the average ticket size is rupees 6 to 8 lakhs with a maturity of 8 to 10 years. Generally, the LAP loans are considered very risky, but the CEO told us that they're taking, they've strengthened their credit quality checks, and they're looking at these borrowers, these existing microfinance borrowers that the bank already have on their books. They're giving out these loans to this existing borrowers, and they're taking up stringent quality checks, and they are reviewing their cash flow statement, their household income, and their previous repayment history. So it seems like Bandhan Bank is getting on to monetize on this opportunity and to increase their market wallet share. They're increasing their wallet share in this segment. So since these are micro LAP loans, the credit underwriting process has been also strengthened. So the aim to grow this portfolio is to grab on the opportunity. Yes.
All right, thanks so much for bringing us those details. Well, it's time to slip into a short break, but please stay tuned, as after the break, we will be focusing on PM Modi sharing 4 names of the astronauts which have been shortlisted for ISRO's Gaganyaan mission. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching The Reporter on NDTV Profit, and on to another big story of the hour. In a major shake-up at Disney, Sean Bailey, the long-time president of the company's film production, is leaving the company. His exit comes after a 15-year spell at the firm. While the exact reason for Sean Bailey's exit remains unknown, Disney has named David Greenbaum as a successor. Now, Greenbaum has been given the title of president of Disney Live Action and the 20th Century Studio. Bailey arrived at Disney Disney Studios as a producer of the 2010s Christmas event titled Tron Legacy, while he will also reportedly stay on to produce the Joachim Roning's Tron Ares before moving on to individual projects. Now that's a big update from the company, and on that note, we also spoke to media expert Vanita Kohli, who laid out the reasons as to why the company's business did not possibly fare well in India. Here's a quick look at the conversation.
First, Disney had that arrangement with the KK Modi group, which didn't work. Then it did had an arrangement with Ronnie's group, which didn't work. And then eventually they acquired UTV and they did whatever. Then they bought India's second largest media company, and they still can't seem to make it work. What does that tell you? So I think Disney has a specific problem in it. I agree the media market in India is tough. Monetization is very tough. I'm not taking away from any, but in this case, the India market is not at fault. In this case, it is Disney's American-centeredness. It's a very American. Star was an Australian kind of company, a cowboyish culture. I've done a book on Star. I don't know if you've ever had on Rupert Murdoch and what he did when he entered in. They were like cowboys. They came, what will it take to get more TV sets into this country? What will it take to get more people to see my show? They did everything. They localized. India is a deeply, deeply local media market. 90% of the films we watch, TV we watch, music we listen to is Indian. So you have to think Indian, have Indian management thinking if you want to conquer this market.
That was Vanita Kohli for you. Now, the 18th year of the summit by the Internet and Mobile Association of India is currently underway in Mumbai. Harsh Jain, the CEO of Dream11 and the chairperson of IAMAI, spoke to NDTV Profit, and here's what he had to say about the top growth levers for India and the role of IAMAI in this growth.
I think the growth of 5G, like I said, 5G and now hopefully 6G at some point in the near future is just a tailwind that helps the whole sector grow, right? I think there are horizontals in Indian tech which is going to help just everyone across the board, which is why I said semiconductors are the backbone, but 5G and AI is something that is here to fundamentally change the way we work and the way the internet speeds we have, the way we work, the efficiency with which we work going forward for everyone.
And what role do you see IAMI playing in all of this?
Well, IAMI can be the body, is the body already, but can be the body for being the bridge between the government and the industry. I think it's very important as India's different tech verticals are revolutionizing the way we used to work, that there's a body that can help the government and the industry to bridge a gap and to make sure that while regulations come in place, that they are a win-win for both government, the industry, as well as the people of India.
That was the update from the summit. Now, Nitish Mittasen of Nazara Tech tells us that the gaming industry needs to do, or what all the gaming industry needs to do in order to cement India's position as a global gaming superpower. Let's take a quick look at that chunk of the conversation.
For gaming in India, right, I think there is a massive opportunity for Make in India. Making in India games for the Indian market as well as making in India for the global market. And India can really, in the next few years to come, become a large global player in the gaming space, right? Which means fantastic revenues, export revenues, and a lot of employment, skilled employment in this industry. So I think it's a fantastic opportunity. I think the government has already taken some steps. They announced a AVGC committee. So there is a focus over there. I think going deeper in that, getting more clarity in terms of regulations around gaming, having a framework in place, and focusing on how we can incubate these gaming startups, how the government can support in that, how we can skill talent, right, across the country to develop games. I think these are the opportunities that we are very keen as an industry to work with the government and really make India a global gaming superpower.
Well, that was the update on India's gaming industry. Now, on to a landmark achievement for the India's defense sector. In that latest update, there are several facilities to manufacture ammunition and missiles by the Adani Defense and Aerospace, India's leading private sector defense manufacturer. They were inaugurated, in fact, during the day. These cutting-edge facilities, which are first of their kind in the private sector in India, will provide a significant impetus to the nation's self-reliance in technological advancements in defense. Ashish Rajvanshi, CEO of Adani Defense and Aerospace, said, and I quote, "The establishment of these ammunition and missile complexes represents a leap forward in our quest for self-reliance." Let's also take a look at what the conversation was about.
कानपुर में आज अडानी ग्रुप ने एम्यूनेशन फैसिलिटी खोली है। उससे बात करने के लिए अडानी ग्रुप के अडानी डिफेंस एंड एरोस्पेस के हमारे साथ आशीष राजवंशी जी CEO जुड़े हुए हैं। सर, सबसे पहले तो ये कैसे एक माइलस्टोन है उसके बारे में बताइए।
ये 3 तरह से माइलस्टोन है। एक इंडिया के लिए सेल्फ सफिशिएंसी एंड स्ट्रेटेजिक ऑटोनॉमी के लिए प्राइम मिनिस्टर हैज़ बीन टॉकिंग अबाउट कि हम इंडिया को आत्मनिर्भर कैसे बनाएं, चाहे वो एनर्जी के क्षेत्र में हो, चाहे वो रक्षा के क्षेत्र में हो। दूसरा यूपी के लिए माइलस्टोन है। ये इन्वेस्टमेंट 15 महीने में यूपी डिफेंस कॉरिडोर की प्राइवेट सेक्टर की सबसे बड़ी इन्वेस्टमेंट है, जो इन्वेस्टमेंट से इनॉग्रेशन तक पूरा 15 महीने में हुआ यूपी सरकार के सहयोग से।
किस तरीके से आपको लगता है हम लोग अब इससे क्या और इंपोर्ट जो है वो कम हो जाएगा, एक्सपोर्ट हमारा बढ़ेगा? जैसे आप बता रहे सेल्फ रिलायंट, हम लोग किस तरीके से, अगर हम नंबर्स में बात करें, किस तरीके से हम लोग बढ़ सकते हैं उस दिशा में?
आज $75 बिलियन का सालाना स्पेंड है डिफेंस का, इंडियन गवर्नमेंट का, जिसमें से $25 बिलियन आपका नए सामान के लिए जाता है। 2 साल पहले तक उस $25 बिलियन में से 20 से 22 बिलियन इंपोर्ट होता था, लेकिन गवर्नमेंट के पुश से, मेक इन इंडिया के पुश से आज धीरे करके वो सारा उत्पादन इंडिया में होना शुरू हो गया है। आज बड़ी इन्वेस्टमेंट कंपनीज और MSME सब मिलके इंडिया में मैन्युफैक्चरिंग लगा रहे हैं, और ये जो सपना हमने देखा है कि अगले 5 साल, 7 साल, 10 साल में इंडिया को सेल्फ रिलायंट कैसे बनाएं।
There's a standard disclaimer on your screen. NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company. Now, it's also a big day for India's space mission. At the Vikram Sarabhai Space Center, Prime Minister Narendra Modi announced the names of 4 astronauts that will be participating in the Gaganyaan mission. These 4 are Group Captain Prashant Balakrishnan Nair, Group Captain Ajit Krishnan, Group Captain Angad Pratap, and Wing Commander Shubhanshu Shukla. Indeed, a big moment for India during the day, and that's what we can show you on the screen as well. PM Modi at the location announcing and congratulating all the shortlisted astronauts for this mission. Well, after 40 years, an Indian will go to the space. That's what was said by Prime Minister Narendra Modi as he inaugurated ISRO's 3 infrastructure projects in Kerala and announced the names of all the astronauts that we just told you for India's first human space flight mission, Gaganyaan. Let's take a quick look at what PM Modi had to say.
ये सिर्फ 4 नाम और 4 इंसान नहीं है, ये 140 करोड़ एस्पिरेशंस को स्पेस में ले जाने वाली 4 शक्तियां हैं। चालीस वर्ष के बाद कोई भारतीय अंतरिक्ष में जाने वाला है, लेकिन इस बार टाइम भी हमारा है, काउंटडाउन भी हमारा है और रॉकेट भी हमारा है।
Well, that's all that we have for you on The Reporter, but for all the latest news and updates, please stay tuned to our channel.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Thanks for tuning into today's Talking Point. I'm Neeraj Shah, and the case for a chat today with our guest Ashwini Agarwal is multifold. There has been a one-way rally of sorts in the market. Could there be volatility ahead, or will we continue to see a stable ascent? So that's part one of my questioning to him. Where is it that there are relatively comfortable valuations existing, coupled with some growth? I think we'll try and talk about that as well with him. And of course, if indeed flows are to come back, if you can make a thesis around flows coming back into India, will the ones which have suffered the most from that, which is private banks, again make a bit of a comeback? It's very important for the bank Nifty, markets at large, for private banks to start doing well again on the bourses, and that can happen with flows, which can possibly happen only with global flows. So I think in some sense we'll try and talk to Ashwini about that as well. He's the founder of Demeter Advisors and joins us right now on the show. Ashwini, good having you. Thanks for taking the time out. Hope all is well.
Morning, Neeraj. Thank you. All is well.
Ashwini, a lot of chatter around how the Indian valuations defy, in some sense, what's happening across the world on the growth front, even if India were to be growing well. I'm trying to understand, are you okay with the kind of moves that we've made index-wide, though the last 2 months we've been largely flatlining? And what's the way ahead, therefore? Would we continue to flatline? Could we see an ascent in the run-up to the elections? And would that be something that would make you uncomfortable?
So, Neeraj, two important points here. Like you said, the growth globally has been slowing down. And the second macro reality is that with the expectations of very sharp interest rate cuts that we had, let's say, around September, October last year, have now been pushed out. Even in the Indian context, there's been no cut in rates. And if you read through the RBI policy, it appears that there may be no development on this front for at least the next 3 or 4 months or post-elections. We might see something not right away. And it's similar trajectory for rates, at least in the US. So the question I'm asking myself is that if you look at growth, is the growth accelerating? And I'm talking about real GDP growth here, or is the growth stable, or is the growth slowing down? In the Indian context, I think we saw very strong growth in the first half of the current fiscal year, which is the period April to September 23, and now we are starting to see the base period catch up. I think growth should be stable around 6 to 6.5% over the next one financial year or so. And there is no acceleration visible yet, despite significant push by the government on infrastructure spending, especially in the areas of defense, railways, and so on. So my sense is that, with earnings growth of the order of maybe about 14-15%, slightly ahead of nominal GDP growth, the market is already pricing in a significant amount of near-term earnings upside. So to answer your question that, do we see a continued, moves upward from here on an index-wide basis? I think that's a tall order. Within the emerging market space, if you were to look at it, and I know several people keep saying that asset class is dead, India is a really expensive outlier. So notwithstanding the diversity of the Indian market, notwithstanding the growth, I think a lot of good news is priced in. That's what I see from a global perspective looking into India. However, if you look from within India, for savers in India, what's happening is that, we are hostages to our own market because of capital controls. And there is, of course, a home bias that every country has with its own investors. And these investors have done very well in the last 4 years, notwithstanding correction that we saw between September 22 to maybe about September 21 to about March of 23. So that was the 18-month period where we saw the markets go down. And despite that, over the last 4 years since COVID, investors have done well. So the domestic money continues to flow in, and that may prevent the market from going down a lot. So, flat lining is what we've seen over the last 2 or 3 months, and that might continue, notwithstanding my concern on valuation.
Okay, so in some sense, Ashwini, you are saying that the going seems to be, and correct me if I'm wrong, but the going seems to be so, there's to be so much of interest that despite the higher valuations, we may still flatline and not correct because there is an appetite at every dip.
That's correct. So if you look at the local flows that are coming into mutual funds and direct money that's coming into the market, that may not allow the market to sink a lot. But valuations have their own way of imposing themselves on the market. If you go back to again September 21, and we saw a plethora of IPOs, then the new age internet-based companies, their valuations were very expensive for traditional investors like me who've been around for a while and have value as a constant discipline that we are trying to adhere to. And we were amazed at the kind of response that these issues got. But lo and behold, over the next 18 months, you did see a significant correction. So pockets of market where the valuations are expensive today, be that defense, be that railways, there you can see a lot of correction, because I think while the stories are good in the long run, just as they were in the internet-based companies in the middle of 21, you may still see a significant price correction because valuations are completely absurd.
And viewers, I must bring out this point, and with a couple of charts maybe before I go back to Ashwini, because the point that he's making is very important. A lot of us and a lot of people who are coming to the markets in the last 4 or 5 years, which is a large percentage of my viewing population as well, at times forget this. So look at say maybe a 2-year or a 5-year chart of Zomato, or whatever time it's listed, And the stock, while it's rallied from 50 rupees all the way to 130, 140, it has corrected initially from 160, 170, whatever it is, all the way to 45. So in some sense, Zomato 12-month chart looks really impressive, right? Now expand this to 5 years, and you will see how the stock corrected quite viciously before coming up again. And maybe an even better example, look at that. And that shows you that over 3 years or something like that, you've gotten virtually no returns. That's part one, if you're invested right at the peak, at the expensive valuations. Similarly, for a behemoth like DMart, and just look at what the stock has done. A brilliant stock, everybody shops from there, from the stores, but it's virtually flatlined in a minuscule way for the last so much of a long period of time. Ashwini, I'm inclined to ask you, since you've been around, as you said, for such a long time, private banks, now they are performing fundamentally. The issue has been that the supply from the FPIs has been large. What would it take to turn the fortunes of these banks around? Would it need to come from FII flows for these stocks to start performing?
Yes. But the simple answer is yes. I mean, it's a little bit of a circular logic. But what happens is that the domestic investors, when I'm talking about the large behemoth of the large body of retail investors, they tend to take price momentum into account. And I'm not looking down upon price momentum as a strategy. I mean, one of the best explanatory factors for a single stock performance is actually momentum, if you do factor analysis over a long period of time. So momentum is the way a lot of people invest, and that's fine. And for the momentum to change in private equity, in private sector banks, you will need foreign interest to come back, because these are very significantly owned by foreign investors. These are very large free float companies. So unless there is a significant shift in institutional buying for private sector banks, it's difficult to see how the price momentum will change. Having said that, I'd like to draw a parallel here between what you just spoke about on Zomato and on DMart. And I don't own those stocks. I don't usually talk about specific names. But here I'll take the liberty of using a few names. HDFC Bank, a position that I own. Kotak Mahindra Bank, a position I don't own. If you look at these names, they were very expensive towards the end of, let's say, 2019, because we were coming out of a decade of highly